Committee will come to order. Without objection, the chair is authorized to declare recess of the committee at any time. Without objection, all members shall have 5 legislative days within which to submit additional materials to the chair for inclusion in the record. Before proceeding to today's business, I wanted to make a few preliminary comments about yesterday's tragedy. We know somewhere every day evil rears its ugly head, but yesterday it reared its head in our neighborhood with people we know, respect, and love. I personally cannot imagine how horrifying it must have been to be on that baseball field, and I have no idea how I would have reacted. I know all too often in this institution we use the phrase thoughts and prayers. My thought and my prayer is that that never becomes a cliche, that it is something we feel in the depths of our soul, something we feel in the center of our hearts. It is also a reminder, I know I do it from time to time, but I certainly don't do it enough. You cannot thank the Capitol Police enough for their service, for their courage, for what they do every single day, not only to protect us, but to protect democracy. As our speaker said yesterday, attack on one of us is an attack on all of us, but it is also an attack on democracy. It is an attack on the people's right to elect their representatives. And so it cannot be tolerated. Our democracy must be preserved. It must be protected. I very much appreciated the words of the Speaker and Leader Pelosi. We are blessed to have them as leaders. And I think they set an important tone yesterday. Tone is important. Respect is important. Shared humanity is important. I don't know what role, if any, the tenor of the national debate played in yesterday's tragedy. Maybe none. I don't know. But what I do know is we have heard some very harsh and angry rhetoric from all sides of the political spectrum today, and I, for one, do not believe it is healthy. And I think it's probably a good time to re-examine what is it the American people see when they observe their elected leaders, when they watch us. And so, to what extent do they take cues from us? And so I just wanted to say something today that I have thought, but I think it's important to say it out loud. So I want to say to the ranking member, and it goes for everybody on the opposite side of the aisle, there is so much you say that I disagree with. There is so much you do that I disagree with. But you have long since earned my respect. And you deserve to be heard. And you are an honorable individual who has been selected to lead your party on this committee. And I believe that you love your country no less than I do. And I believe that about every Democrat who is sitting here today. And I don't... And I do not wish to harm their careers, so I won't name them by name. But there's a couple of you who I consider to be very close friends, and you know who you are. And it is a blessing that I have such good friends on the other side of the aisle. I don't know what this message means to the 17 people watching us on C-SPAN at the moment, but I do think it is important that the people of America know the true feelings of their elected leaders as we debate in the court of public opinion. And at this time, I'll yield to the ranking member for any comments she wishes to make.
Thank you very much, Mr. Chairman. I've been thinking about what happened all night, and so I have some prepared remarks that I'd like to share with all of my colleagues here in this committee. So, Mr. Chairman, I certainly want to thank you, and my thoughts and my prayers are with my friend, Congressman Scalise and the staff, Capitol Police and others who were victims of the horrific and terrifying attack yesterday morning. I'm deeply troubled and pained and saddened by this terrible tragedy. I'm praying for all of those who were harmed. Our colleague, Congressman Steve Scalise, Zachary Barth, Matt Micah, and Special Agents David Bailey and Crystal Griner. Capitol Police officers, all of whom put their lives on the line every day to protect us. For all of us, this attack hits very close to home. And you said it, Mr. Chairman, and it's been said more than once, but I'll say it again. When you attacked one of us, you attack all of us. I've been fortunate to have opportunities to work in partnership with Mr. Scalise. In fact, on the issue of flood insurance, working together, we enjoyed exploring creative ways to solve what some thought were intractable problems. Together, we were able to correct the unintended consequences of the Bigger Waters Act. And I've been in deep thought about him and his family from the moment I learned that he had been shot. Zachary Barth serves as an aide for one of our committee members, Congressman Williams. Congressman, I want you to know that we are wishing Zachary a speedy recovery and that we stand in unity with you. All of us are grateful for the brave service of the Capitol Police, who vigilantly work to keep us safe. The selfless heroics of Capitol Police officers during this incident saved lives, and they deserve to be commended. Regardless of which side of the aisle we sit on, we're all public servants, and we stand together in condemning this heinous and senseless act of violence. While we may disagree on some matters of policy, we all agree that violence cannot and must not be tolerated. And we also share the deeply held ideals of democratic dialogue and debate that underpin our work on behalf of the communities we represent. No matter how strongly we feel about the policies we're advocating, we hold each other in high regard, and we care about the safety and security of our colleagues and their families. We all must stand united in our efforts to reduce and deter violence at all levels. And I believe this senseless act of violence will focus us more on our responsibility to do everything that we can to eliminate violence from our society. Mr. Chairman, I want to thank you for the very kind words that you spoke about me and all of our colleagues and the colleagues on the opposite side of the aisle. And I want you to know we've enjoyed some very private moments as we sat here and commented oftentimes about what was happening in this committee. And I know folks oftentimes when they hear us debating on the floor, they don't believe that we can get along. And I don't want to damage your reputation either. But I want you to know that I'm going to share with the members of this committee my high regard, my high respect for you, and I'm going to tell all of your constituents what close friends we are. Thank you. I go back.
Well, now that I've been guaranteed a primary opponent, a quorum being present, we will now proceed to today's business. I yield to myself for a brief opening statement. There are so many important voices in our debate today on the reauthorization of the National Flood Insurance Program. Certainly the homeowners who have relied on this program, theirs is a very important voice because we go to their homes. and we go to their household finances, theirs is a very important voice. Home builders, they have an important voice. Insurance, agents and companies, local communities, these are all important voices in this debate. But as far as I'm concerned, perhaps the single most important voice is the voice that remains underrepresented in the debate, and that is the voice of the American taxpayer. The American taxpayer who has been called upon in the past to bail out a program that is currently drowning in $26 billion of red ink and suffers $1.4 billion annual actuarial deficit. Maybe that's why I heard from Kathy in Garland, Texas, in my district, who wrote, quote, "It's just another reason the average person in this country is going under financially. Far too many programs are being funded by the average American, but very few receive any benefits from what they are funding." And talking about the program, Stephen of LaRue in my district said, quote, "This is just another instance of the federal government wasting the taxpayer dollars over and over and over again on the same problems. People that choose to live in flood-prone areas after receiving one payout benefit should be removed from the entirety of the program." Just two taxpayer comments. And so again, we know for a fact that the program is in debt. We know for a fact that the program is running an actual annual deficit. And so it begs the question, should there be a permanent taxpayer subsidy? I say no. It cannot be. Not when I'm sitting here looking at a national debt clock that continues to run out of control before us, which I continue to believe is a far underappreciated, clear and present danger to our republic. Part of those numbers spinning out of control represent the National Flood Insurance Program. I don't know if America would ever become a bankrupt society, but I know that the face of bankruptcy is an ugly one. In Detroit, when it became bankrupt, thousands of streetlights couldn't afford to be replaced. Ambulances did not run. Municipal retiree health care benefits were cut immediately. In Puerto Rico, hospitals had to lay off workers, ration medication, reduce services. An average of one doctor was leaving Puerto Rico. In Greece, from 2008 to 2003, they became 40% poor. Homelessness increased 25% in 4 years. I don't think America would ever become Puerto Rico, Detroit, or Greece, but I don't know. And it's not something in good conscience I can ignore. And so I believe we need a national flood insurance program that will make the program fiscally sustainable. I do believe that people should gradually be expected to pay actuarial rates. They need predictability. We need to protect them from sticker shock, but the program must be made sustainable. I believe market competition is important, and we have heard evidence that in many places where there has been even limited market competition, we have actually seen premiums decreased. And the industry is poised to come in. It's a very different world today than it was a half a century ago when this program was launched. Better risk assessment tools, better financing mechanisms to spread the risk globally. And so this is a bill that perhaps it would take as long as 15 years to fully phase in some actuarial rates. We're talking today about a bill that, if enacted, bills that were enacted, specifically Mr. Duffy's, that would increase premiums about $2 a month to put this on the road to actuarial soundness, where all will be protected, no one will be denied a policy, all will benefit from competition, and the NFIP will be sustainable, and the national debt clock will spin a little less rapidly. With other important reforms of mapping, mitigation, claims processing, protections, and reforms, I commend all of the authors of the legislation that we will be marking up today, and I look forward to the markup. At this time, I yield to the ranking member for an opening statement.
Thank you, Mr. Chairman. 8 days ago, We gathered in this hearing room to discuss 6 legislative proposals to reform the National Flood Insurance Program. At that hearing, I once again called for bipartisan solutions to ensure the continued availability and affordability of flood insurance. While I was encouraged that the drafts incorporated some ideas that I and many of the Democrats and Republicans that I have worked with on this program share, I was concerned that in many respects, the package of bills would actually make matters worse by restricting coverage, increasing cost, and opening the door to cherry picking by the private sector. I want you to know that Mr. Duffy and I have met on several occasions. We have talked, we have worked, we've exchanged information and ideas, and we tried to discuss ways that we could smooth out some of those issues and reach a bipartisan consensus around a comprehensive reauthorization bill. Again, we sat down several times to try and reach a compromise that would address the concerns that Republicans, Democrats, and a wide range of stakeholders have raised about this proposal. But now, we sit here today, unfortunately, with the exact same concerns, and the letters of opposition just keep rolling in. The American Bankers Association wrote that this approach would have dire consequences, including the potential for a foreclosure crisis. The National Association of Realtors expressed concern about the cumulative impact of the bill's surcharges and fee increases on the total cost of flood insurance. Even the Chamber of Commerce wrote about their concerns that efforts to raise premium rates on NFIP coverage too quickly could have considerable unintended consequences for many consumers. Mr. Chairman, I am as disappointed perhaps as you are that we were not able to work across the aisle to satisfy many of these concerns. And I am absolutely disappointed that we're marching ahead with bills that appear to have been hastily put together, but they, according to all of the review that we have done, are replete with technical errors. Stakeholders are confused and concerned about this piecemeal approach. One important question is this: when will all of these bills be put together? What will be the cumulative impact on costs for policyholders? What is this going to cost these communities? Mr. Chairman, when you add up all of the premium increases, surcharges, assessments, cross-subsidies, and rate changes, how will affordability be affected? Moving forward, without a clear answer to that question, would not be responsible on our part. I think that marking up these bills today, without including the language to reauthorize the program, does not bode well for our being able to really get a reauthorization of this program. So that is why Democrats will offer amendments to provide the reauthorization language needed to keep the NFIP's doors open and keep the real estate market from spiraling out of control. We will also offer amendments to provide real relief to policyholders struggling with unaffordable premiums. I will also be offering an alternative that closely tracks legislation being worked on by a bipartisan group of senators. This alternative is a comprehensive reauthorization bill that protects policyholders. So I look forward to working together with Senators Menendez, Kennedy, Warren, Rubio, Van Hollen, and Cochran, and Democrats and Republicans in the House who are eager to make sure that the NFIP remains able to make flood insurance available and affordable across the country. Mr. Chairman, I don't know where you go with all of this or how you intend to put all of these 7 bills together before September, but the National Flood Insurance Program is too important to let the millions of policyholders that depend on it be caught up in efforts that do not bode well for all of our policyholders in this country. So I hope that you will seriously consider a bipartisan approach so that we can bring a reauthorization bill to the House floor that will gather and garner widespread support. So I thank you, and Mr. Chairman, I want to recall to you and to Mr. Duffy the one thing that I said at the beginning of our negotiations, that I'd gone through the Bigot Waters bill with all of those unintended consequences where the premiums were spiraling out of control for homeowners, and I do not want to go back there. I do not want to increase premiums that are oftentimes higher than the mortgage. And so my focus is on affordability for these premiums for all of our citizens in this country that need flood insurance. Thank you very much.
Time of the gentlelady has expired. Now pursuant to notice, I call up H.R. 2868. The clerk will report the bill, which was distributed in advance.
H.R. 2868, to protect the National Flood Insurance Program.
Without objection, the bill is
Policyholders-
considered read and open to amendment at any point. The chair recognizes the gentleman from New York, Mr. Zeldin, sponsor of the legislation, for 5 minutes.
Well, thank you, Mr. Chairman. This bill, H.R. 2868, the NFIP Policyholder Protection Act, would protect flood insurance policyholders on Long Island and nationwide. I want to thank Chairman Hensarling and Duffy for their assistance and leadership on this important issue. And I also want to thank my colleague from New York, Ms. Maloney, for her bipartisan teamwork on an issue important to NFIP policyholders throughout our state. Mr. Chairman, on the east end of Long Island, where my district is located, living by the water is our way of life. Our district is almost completely surrounded by water, which is why so many homeowners rely on flood insurance to protect their property. As we are all aware, the NFIP is in dire need of reform to address the program's debt of $24.6 billion and to improve the bureaucratic nightmare that many policyholders face after a storm. Most importantly, I've heard time and again from homeowners in my district who are frustrated that despite making a serious investment in elevating their homes or other mitigation activities to protect their property, they have not seen a return on their investment in the form of lower NFIP premiums. That is why this bill calls for mitigation credits to policyholders who invest in mitigation activities like elevating their homes, adding porous foundations, or moving boilers to the second floor to ensure these homeowners see lower premiums. Taxpayers save $3 for every $1 that is spent on mitigation, which is a key reason why better preparedness must be a critical focus to protect life and property. In the case of homeowners insurance, if you add floodlights or a fence to your property, your homeowner's insurance rates go down. Car insurers offer discounted rates when a policyholder has a safe driving record or takes a defensive driving course. The same is unfortunately not true for NFIP beneficiaries who take similar precautions to protect their property from flooding. Now more than ever, we must shift the focus toward mitigation so that there is an incentive for homeowners and communities to take proactive steps to protect against flood damage. Among other provisions, this bill also requires FEMA to move toward providing coverage for co-op units within the NFIP program. There are more than 9,300 co-op housing units in Suffolk County, New York alone, and many of them are within flood hazard zones that were impacted by Superstorm Sandy. Following that storm, co-op owners faced the bureaucratic nightmare of not having NFIP coverage for their individual units, but instead having to deal with one aggregate claim for their entire co-op association. Many of my constituents living in co-ops are seniors or hardworking families and individuals seeking an affordable place to live, and they deserve the same access to flood insurance coverage that their neighbors in single-family homes and condos have. Mr. Chairman, the NFIP Policyholder Protection Act focuses on mitigation to reduce premiums for homeowners, protects affordability, and it will expand access to needed coverage. All of these steps will help put the program on the path to solvency and are crucial components of our overall flood insurance reform efforts. The passage of this bill is very important to protecting homeowners on Long Island and all across New York and the rest of our country. I urge all my colleagues to vote yes, and I look forward to getting this bill across the finish line. Thank you, and I yield back.
Gentleman yields back. For what purpose does the gentlelady from New York seek recognition?
I move to strike the last word.
Gentlelady's recognized for 5 minutes.
Thank you, Mr. Chairman, and I want to thank my colleague and friend from New York, Mr. Zeldin, for his hard work on this bill, which recognizes the different type of communities that are covered by flood insurance. His community is very similar to other small communities across our country, our towns, our villages, because they build, I would say, horizontally. So you have a low-level house where the mitigation is putting it on stilts or moving it back. But New York City's different. New York City is urban, it's dense, and most of our properties are multifamily, huge properties, in some cases 50, 60 stories high, right on the shoreline. All of the 5 boroughs have tremendous amounts of shoreline, and Manhattan is basically an island. So it's very important that in the mitigation that you recognize and mitigate for the different forms of accommodating what happens. Now, under Sandy, 80% of the mitigation money went to moving boilers on the bottom floor to the top floor and moving mechanical equipment. At the time, we had to get a special waiver from FEMA to be able to use that money that way. Originally, they said we had to rebuild the way it was, which is ridiculous, because for the next storm, the equipment's going to be on the bottom floor. You don't want to rebuild that way. So this basically codifies the change that FEMA put in place for Sandy. It's very, very important. It is supported by the City of New York. We just have different mitigation needs in New York, and this bill recognizes it. They expressly allow us to take credit for mitigation techniques on a block or neighborhood scale, which can take into account what those building needs are. It's ideal for dense urban cities like New York. It is critical. I would say that all of our mitigation practically is restoring mechanical and boilers going to the top. This bill would allow policyholders to receive mitigation costs for the elevation of mechanical systems, such as boilers, which, when they're not elevated, can be a huge source of FEMA loss. So this is especially important not only for policyholders, but also taxpayers. It helps policyholders because they can receive lower premiums when they've reduced their flood risks, and we have an effective program now in New York urging buildings to move the boilers now to the top floors, and it helps taxpayers because it reduces the risk that FEMA will have to pay out large claims when they're flooded. So I deeply thank Mr. Zeldin, as well as Chairman Henserling and Chairman Duffy, for their willingness to take into account these different mitigation techniques for large urban areas like New York City. Now, I do want to express some concern that have been raised by my Democratic colleagues, and I share their concern on Section 2 of this bill, which would cap annual premiums for homeowners at $10,000 per year, and I want to address that. I had approached Mr. Zeldin to lower that amount. He was not willing to take that amendment, but I would like to keep that option open going to the floor. Maybe the premium costs and other things could be reduced. But this is a fundamentally important bill to New York. Mr. Zeldin's district is different from an urban district, but I appreciate his sensitivity to the economic needs for the whole state and for his really hard work on this. It's important to remember, though, that right now, many of us believe that the 10,000 cap is too high, but we have to remember there's no cap on premiums now. So any cap is better than what we currently have, and implementing a $10,000 cap doesn't harm anyone. But I also want to point out that when we capped the annual flood rate increases at 18% per year in 2014, no one interpreted that as an endorsement of an 18% annual rate increase for anyone, and they shouldn't interpret the 10,000 cap in this bill as an endorsement of any 10,000 premium cap. Certainly not on my part, and this is a concern that many Democrats have expressed to me and others. So I don't think that this should, so I just want to say that this is a very, very important bill overall for urban areas throughout our city. I support it. The City of New York supports it, and I reserve the right to work with Ranking Member Waters and others in attempting to lower that cap. Thank you very much, Mr. Zeldin, for your outstanding work on really a very, very important bill. Thank you.
Time of the gentlelady has expired. Who seeks recognition? For what purpose does the gentleman from Wisconsin seek recognition?
Move to strike the last word.
Gentleman is recognized for 5 minutes.
Thank you, Mr. Chairman. And I want to thank you, Mr. Chairman, for all the work you have done on this flood bill, and Mr. Zeldin and Ms. Maloney and everyone from the Northeast who participated not just in this amendment, but in this process. Before I get to the bill itself, listen, I think if anyone has been on financial services, you would note that this has been as open as possible, trying to take as many ideas as possible from everybody on the committee and everybody who's a member of the House. We've taken in consideration from outside groups, trying to get the best package of bills possible. Ms. Velazquez and I have worked closely, as she has, with everyone who was impacted with their constituents from Superstorm Sandy. Now, she might say the process wasn't perfect, but this has been an effort to say, how can we learn lessons from past disasters, how things didn't work well for policyholders, and how can we as representatives improve that process? And so we've worked very closely together. Mr. Cleaver and I, the ranking member on our committee, have worked closely together trying to come up with a bipartisan package in as many places as possible. I would just note that Ms. Waters and I have had, as she mentioned, a number of conversations, and I would make the point that we were making very good progress. I thought we were close, but in the end, Ms. Waters had to step away from those negotiations. I understand that, but I just want her to know that this will continue to be an open-door process as we move from markup in committee, and hopefully all these bills pass and we go to the floor. I'm willing to continue to work with her and everyone across the aisle, because I think flood and flood insurance, as we all know, is not a partisan issue. This is an American issue that we want to get right. I just extend that not just from today, but as we move forward. And so though every bill today has not been bipartisan, many of them have been bipartisan, and many of them have Democrat ideas and points that have been included in these provisions. If I can just quickly discuss the $10,000 cap. As Ms. Maloney mentioned, there is no cap today. And one of the concerns, as Ms. Waters mentioned, from Biggert Waters, was there was rumors everywhere that my premium's going to go from $2,000 to $20,000 or $30,000 a year, and I've lost the value of my home, and oh my, what's going to happen to premiums? And so this is not an effort. This cap is not an effort to say we want to increase people who are paying $1,000 up to $10,000. This is to say, listen, you're not going to pay more than $10,000. We're trying to take an issue off the table, not put an issue on the table. We're trying to learn a lesson that many people felt like they were going to be shocked with increases in their flood insurance premium rates. So this was an effort to take that one off the table, and I know that Mrs. Waters, I don't know that she feels burned, but I feel like there were some unintended consequences from Biggert Waters, and we were trying to be helpful in that regard. And again, there's no cap today. We are putting that threshold in, so no one is going to pay above that rate. So we were trying to do a good thing here, but we can continue to have that conversation. I think Ms. Maloney also made a good point, and Mr. Zeldin did. We have sandstones, large structures in urban areas that you can't raise. So how do we look at mitigation techniques that can reduce the risk of properties in areas where maybe traditional mitigation won't work? And this is one way to get the NFIP to look at different techniques, as has been mentioned several times. If you can raise your HVAC equipment, get it to a second floor, get it out of the way of water, that's going to reduce the risk to your residents and the risk to the NFIP, and hopefully we can reduce your premium for those mitigation techniques. And so I want to thank both of you for the work that you've done together on this provision that has been bipartisan, taking unique concerns of your communities and making sure that we can have a bipartisan fix to those concerns. So with that, thank you both, and I will yield back to the chairman.
Jim yields back. Who seeks recognition? For what purposes the ranking member seek recognition?
Thank you, Mr. Chairman.
Generally, he's recognized for 5 minutes.
I move to strike the last word. I certainly understand what this bill is attempting to do. And I'm very much in support of some of the bill's provisions. And I'm very much in support of the bill's requirement on FEMA to give premium reductions for alternative mitigation actions. Alternative mitigation credits are extremely important to areas, especially, as Ms. Maloney has said, dense urban areas for which elevation is simply not an option. I believe that elevation should not be the sole focus when it comes to reducing risk. Not only is it impossible to accomplish on certain properties, such as row houses and apartment buildings, but even when it can physically be done, it is prohibitively expensive. According to a New York Times article, FEMA is struggling to keep up with the demand to help pay for the cost of elevation. The article cited a Wetlands Watch analysis that compared the number of people on the FEMA waiting list in Norfolk, Virginia, with the number of houses that are actually raised or elevated in a year, and concluded that it would take 188 years to complete them all. By then, of course, waters would be far higher, and the homes would probably need to be elevated again. There has to be a better way. This bill makes an attempt at addressing affordability by capping annual premiums for certain properties at $10,000. However, I'm concerned that this does not resolve the affordability challenges that policyholders face today. In order, and this is what bothers me, in order to be eligible for the premium cap, policyholders have to purchase an elevation certificate, something that on its own costs hundreds, sometimes thousands of dollars. And the list of properties that are excluded from this rate cap is very long. There are just a few of the properties that would be excluded under this bill: small businesses, second homes, severe repetitive loss properties, any property that has substantial damage or substantial improvement exceeding 50% of the fair market value of the property, any policy that has had a lapse in coverage, any property in a community that has been downgraded under the community rating system, and the list goes on and on. So I think we can all agree that a $10,000 annual premium is just too high, and that no family should have to pay such a high premium for their flood insurance. But the fact that the bills we are considering today would, on the whole, increase premiums and fees substantially for policyholders. I've said from the very beginning that my main priority when it comes to flood insurance is affordability, and that is why this provision bothers me. So I hope that we can package the alternative mitigation premium credits and the study on providing coverage for cooperative housing units into a different bill so they can be swiftly signed into law. Let me just say to those members who may not have experienced the outrage and the outcry after Biggert Waters, we have worked very, very hard to do everything that we could do to keep premiums affordable. And while I agree that the kind of mitigation that you have to do in the buildings, apartments that have been described by Mr. Zeldin and Ms. Maloney are very different, and I support that. If they could agree that they would lower that $10,000 cost to something in the range to 3 to 5 even, I think that it would not frighten our citizens, and that we would more likely get the cooperation even of the city of New York
to do this kind of mitigation. So I'm hopeful that we can work this out. We don't have to leave here because we can't all agree on a $10,000 cap. Let's get together and see what we can do. I yield back the balance of my time.
Gentlelady yields back, chair yields to himself. One, I want to commend the gentleman from New York and the gentlelady from New York on the other side of the aisle for their leadership here and working with Chairman Duffy to ensure that kind of the unique property attributes, particularly of New York and other urban areas along the coast, are recognized. I think they're serving their constituents well. I do want to repeat something that has been said a couple of times before. Under current law, there is no cap. Under current law, there is no cap whatsoever. And as the gentleman from Wisconsin pointed out, part of the breakdown in bigger waters were more rumors than reality of people's premiums maybe going from $400 to $40,000. Part of what we're trying to do here is to give some predictability and assurance. And I think it is important to note that today the average policyholder is paying $826 a year. The middle two-thirds of premium payers are paying between $400 and $1,400 a year. And I believe I have this right, 94% of all policyholders are paying less than $2,000 a year, just so we understand the order of magnitude that is available. So again, I just want to commend the gentleman from New York for his leadership and in serving his constituents, the gentlelady from New York for her working to this together, and I certainly urge adoption of this legislation. I yield back.
Would the gentleman yield? The gentleman yield?
Yeah, I yield to the chairman.
Thank you. If I could just make one other point. This is the first time, I believe, that this cap has come up. And I know the ranking member is expressing some frustration, but I'd also note that there's been bigger waters and there's been grim waters, and this is the first time we're actually putting into place a cap to say we want to take this fear point away. So.
Will the gentleman yield?
It's not my time, but I did want to make that point, and I think the chairman made a very good point on, what the average premium is, what the mean premium is, and the fact that more than 90% of people pay less than $2,000. And I think that's an important note for us. Again, this is trying to take off or take away an argument that has oftentimes been made and not accurate, and it's rumors. So we're trying to take those rumors away and make people feel more safe. I would yield back to the chairman.
I'll yield briefly to the ranking member.
Thank you very much, Mr. Chairman. While I appreciate a cap, we throw around $10,000 as if it's not a lot of money. And you are putting this in the hands of FEMA. And I have to tell you, I disagree with FEMA a lot. And I just think that we put these citizens in a position where they could go all the way up to $10,000. And so I think there's a middle ground on this. And I would certainly like to try and pursue that. And at the right time, I will offer an amendment.
Gentleman yields back his time. Who seeks recognition? I'm sorry, for what purpose does the gentleman from Colorado seek recognition?
To strike the last word.
Gentleman is recognized for 5 minutes.
The bills before us today attempt to deal with the economics and financial health of the National Flood Insurance Program, yet neglect to deal with the underlying structural problem of climate change. And last time we debated the flood insurance program, before, I thought I was being very magnanimous on behalf of the people of my district to want to assist other folks in their districts who might suffer from floods, because we don't have that very often in Colorado. But in 2013, we got clobbered, 500-year floods. And the fact that whether it was through disaster relief under FEMA or flood insurance through the flood insurance program, we were able to recover and to help the people who had been devastated by the floods up and down the Front Range of Colorado. And so I appreciate the details that Mr. Duffy and Ms. Maloney have been working on in this, but I would suggest to all the members of this committee that the power of the storms that seems to be setting upon us, the way they come and sit in an area and do extra devastation, we all have to focus on what the underlying changes are, because we're either going to pick up the cost through FEMA and disaster relief, or we're going to pick up the cost through flood insurance, or both. And whether we think we're saving the taxpayer money on one side but not on the other, eventually all of us, whether the disaster's in Florida or Denver, Colorado, or somewhere along the Mississippi River, we all recognize we're in this together, and even if you don't think that a storm is going to clobber you, it eventually will. And we just need to understand, if we think we're saving some money over here, we're going to end up spending some money over there. And with that, I yield back. I'd yield to my friend from Massachusetts.
Let me just pick up the remaining 2 minutes and 30 seconds here. And I appreciate the gentleman's efforts here. I think that his intentions are solid. I don't see the science behind the $10,000 minimum, $10,000 maximum limit, though. I don't see, I understand the recitation of where the rates are right now, but the import of all of these bills basically pushes more and more pressure onto states and localities. There's no mitigation money here, so states and localities are going to have to foot that themselves. Unlike other infrastructure projects, highways, other disasters where the federal government comes in, we're leaving localities and states on their own here because there is no mitigation money. They're going to have to pick that up. So I can envision a situation where, with more and more responsibility on the individual states, and I have a coastal district, that 10,000 limit will be implemented by those states that are being forced, states and localities that are being forced to absorb all of this risk. The general import of the bills before us today is contrary to the basic premise of insurance, where you spread risk. The imports of the bill that we have before us today concentrate risk. It takes the federal government out of the picture and puts all the pressure on a narrower group of homeowners and localities that are suffering from flood damage. And so I think this $10,000 maximum limit will be exercised by those states that have to use it. It'll push up premiums in the areas that are being hit. That's my fear here. And that'll have a negative spiral because of the implications for real estate transactions where the flood insurance premiums are exorbitant in those areas. And also because those individual communities and individual states won't have the resources to deal with the risk that Mr. Perlmutter has pointed out of climate change. So for those reasons, I think it's arbitrary, this $10,000 limit, and for that reason I would oppose it. Thank you.
Time of the gentleman has expired. Who seeks recognition? If no other member seeks recognition, for what purpose does the gentleman from Texas seek recognition?
I have an amendment at the desk, Mr. Chairman.
We'll pause a moment and let the amendment be distributed. The clerk will report the amendment.
Amendment offered by Mr.
I ask that the amendment be considered as read, Mr. Chairman.
Without objection, the reading of the amendment is dispensed with, and the gentleman is recognized on his amendment.
Thank you, Mr. Chairman. This amendment, Mr. Chairman, will address needs that I believe are found throughout our country. But first, let me thank Mr. Zeldin for what he's attempting to do, and I greatly appreciate Ms. Maloney for her commentary as well. I believe this amendment will help us resolve some questions that go beyond some of the things that we are addressing in the bill. In Houston, Texas, as is the case in many other places around the country, we have floods that can be mitigated and can be, to some extent, eliminated if we would but only fund the projects that the Corps currently has on its docket. Projects that have been approved, where the municipality, where the city, the county, where they are available to make payments of the portion of the money that is to be paid by the city. City has its money available, but cannot get the Congress to appropriate funds. In Houston, when we had what is called the Memorial Day flood, we had 8 deaths. With what's called the Tax Day flood of 2016, we had 9 deaths. Now, raising homes will help us. It will help the homeowners. But it won't solve the question of the people who are going to die because the streets become canals. Won't solve the question of the 10,000 vehicles that were damaged in 2015 because of the flooding in the streets. Much of this is preventable, it can be mitigated, and it can be eliminated if we would but only fund some of the projects that the Corps currently has on its registry. So, Mr. Chairman and Mr. Zeldin, this bill would allow the FEMA administrator to make grants in areas that have been declared major disaster areas. And these grants would go to projects that have already been authorized, projects that are currently being funded by the local area, but are not receiving the federal matching portion of the funding. This would not only help us with the infrastructure, but it would help us to save lives. I think this bill can be greatly improved. I believe this would be an improvement. And I would welcome, Mr. Zeldin, if you would want to engage in just a bit of a colloquy. I welcome your thoughts on how we might work together to improve the bill with this amendment. I would yield to you, Mr. Zeldin.
I thank Mr. Green. I recognize and I respect the efforts of my colleague from Texas on this issue. I do oppose this amendment. What my constituents on Long Island are most frustrated with is that they have made an investment in their properties to reduce flood risk, yet haven't seen their NFIP premiums go down. In addition, currently FEMA policy does not account for mitigation activities in urban areas or multifamily homes where elevation is not an option, but other renovations or investments like moving boilers and HVAC units to higher floors can significantly reduce the risk of flood damage. As I mentioned earlier in my remarks, taxpayers save $3 for every $1 spent on mitigation, which is a key reason why better preparedness must be a critical focus to protect life.
Mr. Zeldin, because time is of the essence, may I reclaim for just a moment, please, and share this thought with you? The same mitigation formula that you're utilizing applies to this circumstance. This circumstance would also include saving lives. This circumstance would include infrastructure that would not have to continually be repaired. I think that if we broaden this and we include the projects that are available to be finished, to be completed, I think, Mr. Zeldin, this will improve the bill, and it does not require any funding. It simply says that the grants may be made when there are major disaster areas, but when major disasters have been declared, but the funding would still have to come from Congress. Thank you. I yield back.
Time of the gentleman has expired. Who seeks recognition? For what purpose the gentleman from Wisconsin seek recognition?
Move to strike the last word.
Gentleman is recognized for 5 minutes.
I first want to thank my good friend from Texas, who we worked very closely together on oversight together. for his amendment. I do oppose the amendment, and I'll tell you the gentleman in a moment why. But also, I think we get to his concern in this bill, and I'll tell him why for that reason too. But the amendment provides a blank check to the NFIP to reimburse communities for the excess cost of non-federal community mitigation grant projects. And now, mitigation efforts are a critical tool for reducing flood risk for properties and communities. However, the FEMA administrator should not be given unbridled authority to provide excess or undetermined amounts of funding for non-federal projects. And this language would also violate a House protocol as well.
Would you yield for 10 seconds?
Not quite yet. I would just note that I agree with you that mitigation is important. And I hear all the time in my office that, and everyone says this, if you spend, $1 on my program, I'm going to save you $3 or $5 or $10 from the federal coffers. Everybody tells us that, and I never, ever believe it. But I do believe money spent in mitigation in this program, helping people harden their homes, is money well spent and will save money in the long run. And so this is a provision that Ms. Velasquez worked on. We are in the increased cost of compliance area, the ICC money. Currently, you can access $30,000 of money to upgrade your home after a disaster. Her language bumps that money from $30,000 to $60,000 and allows homeowners to access those dollars pre-disaster. So again, we're helping with the risk to individual property owners' homes by allowing them to access the $60,000 provision of ICC. Not only that, you're going to see an amendment that I'll offer to my bill, and I've worked closely with the chairman on this. There is going to be an additional $1 billion over the life of this program to help with mitigation for homeowners across America that are in the riskiest spaces. So to my good friend, I hear your call, and I've worked with many of my friends across the aisle trying to address these concerns. And so I think that just the blank check mentality isn't a viable pathway forward, but ICC and mitigation money are going to accomplish very close to the same goals that I think you want to reach, and we're going to be doing it in a bipartisan way, like we have with Ms. Velasquez. And I would yield to the gentleman for 10 seconds.
Thank you.
Or 15 if you would like.
Thank you. This is not a blank check. These projects have already been approved by the Congress of the United States of America. The Corps of Engineers is currently working on projects. So this is not anything new. This would help around the country with the projects that will eliminate and mitigate. And I would also add this, that this would bring premiums down because we wouldn't have the floods that we get annually that create the problems that we have to address through FEMA. I think we really have a great opportunity to improve the bill. It doesn't cost anything except what we have already promised the taxpayers we would pay, what we've already said we would do. And I'll yield back.
I appreciate the gentleman for yielding back. We have access to NFIP dollars. And if the gentleman's referring to larger projects, and as we've talked about our good friend Whip Scalise, who is going through a very challenging time right now, there are other dollars that FEMA has for larger projects. That funding does go through transportation and infrastructure, T&I. And we've had a robust discussion of what is in the authority of this committee and what's in the authority of another committee. And if we had T&I cede jurisdiction to us and we want to have a further discussion on how we can do larger projects that cost a larger amount of money, I would be happy to engage in that conversation. But we're dealing with a very small sliver of the NFIP money, not all of FEMA money with larger projects that hits a different committee. With that, I would yield back to the chairman.
May I have those 3 seconds and just simply say that for edification purposes, we've done this before.
But I know the ranking member is going to speak, and
we've done it before. This is not new.
Time of the gentleman has expired. For what purpose does the ranking member seek recognition?
Move to strike the last.
Gentlelady is recognized for 5 minutes.
Thank you very much. I'd like to engage in a colloquy with Mr. Green, the maker of the amendment. Mr. Green, am I to understand that this is pre-disaster mitigation, which means that communities have already gotten involved in mitigation prior to a disaster, and it could be costly, and it's already been approved, and they may not have all of the money that they need, given they have been approved and they thought the government was going to participate, and then the government does not participate, and they're left trying to finish paying for the project. So is this about mitigation efforts that are already been approved and sometimes started?
Absolutely, and I would add this, not only are they started, many of the communities are trying to find ways now to continue the projects and ask the federal government to honor its promise. These are projects where we've made a promise to the communities that we're not fulfilling.
Mr. Green, are you referring to the very difficult, almost impossible task of getting the Army Corps of Engineers to approve a project, and once it's approved, you tell me the government may not be living up to its promise?
Indeed, this is the case, Madam Ranking Member, and the city of Houston is one example, working with the county and the flood control district. They have tried any number of ways to get the government to honor the commitment that was made to the city, or to the area. And with little success, I must add, I think that this amendment would allow us to keep our promise that we have made to local communities that will save money, not only in terms of the homes that will be protected, but also the infrastructure, the streets, the cars, and the lives that are lost. And I put a lot of emphasis on lives that are lost.
Mr. Green, you just said this amendment would basically allow the government to keep its commitment. Could you explain to us how it would allow or force or work out ways for the government to keep its commitment?
Yes, Madam Ranking Member. Let me just explain quickly that the Corps of Engineers will receive appropriations from Congress. They have many projects that have been authorized, but we don't appropriate enough money to cover those projects. So the Corps is put in the unenviable position of having to select projects to go forward with and to decide to the extent to which it will go forward with projects. So as a result, projects that have been placed on the Corps' docket are not receiving the attention that we have promised. But this amendment would allow the FEMA administrator in areas that have been declared major disaster areas to accord grants to these areas in keeping with the promise that we've made by way of the Corps of Engineers. So it won't go beyond what we've already promised. The projects are already there. The projects are being worked on in many cases. They just haven't come to fruition because we haven't kept our promises. This would allow the Corps of Engineers to complete projects that are already underway in good many cases, and the areas would no longer have the level of flooding that they have. There would be mitigation and elimination. We would save money in terms of the increases on premiums. We would save money in terms of infrastructure that won't need constant repair, and we will save lives. Most importantly, we'll save lives.
Thank you very much. Members, it couldn't get any clearer than that. High-risk areas approved, communities already working on projects. I thank Mr. Green for offering this amendment. I support this amendment, and I would urge all of my colleagues to support it.
Gentlelady yields back. For what purpose does the gentleman from New York seek recognition?
I move to strike the last word.
Gentleman is recognized for 5 minutes.
Thank you, Mr. Chairman, and as I previously mentioned, I respectfully oppose this amendment offered by the gentleman from Texas. addressing mitigation concerns and working together in a bipartisan manner to improve coverage in communities impacted by flood risk should be a bipartisan priority for all of our constituents, whether they are from Long Island, Manhattan, or Texas. My concern with the amendment, for one, is it appears to provide an unlimited amount of Stafford Act money into our bill to pay for mitigation. And fortunately, it's a brief amendment, just going a little bit into the second page. But I not seeing any type of a cap, a limit at all to the amount of money to be expended is of concern. I don't know if the gentleman would like to speak to that.
I would. I appreciate your yielding. It is only limited and should be limited to the promises that we've made. We've already promised to fund these projects. So these are projects that would already be underway, that should be funded but haven't been funded. And we take advantage of sometimes you can use a disaster to your advantage. We would use the disaster to now eliminate flooding in this area in the future, which means we save money on premiums and we also save lives, because this is about more than buildings. It's about the people who die when we have these floods, and raising their homes won't prevent their streets from becoming canals and they're losing their lives.
Yeah, thank you for that. And the amendment would add an additional layer of FEMA bureaucracy, and I'm concerned because, like in a district like mine, and as Chairman Duffy pointed out, there is a jurisdictional issue here because the Stafford Act funding, this should be over in the Transportation Infrastructure Committee, not in Financial Services. But in my area, which was greatly impacted by Superstorm Sandy, we have many mitigation projects that are taking place, and it is the ability to get a 65-35 cost share on a particular project or a 50-50 cost share on another project that is allowing us to take care of everything that we need taken care of, because it does cost so much money. And the pot of money that's available isn't getting any bigger with the amendment. It's just for particular projects, you're having higher than that 65-35 cost share, or higher than a 50-50 cost share. So by going to, if you're looking in my district, for example, if you were to go to 100% cost share on one of the Sandy recovery projects in my district, you might have to cut out another aspect of the project just because the pot of money isn't
Would the gentleman
larger
yield?
because of your amendment.
Oh,
Yes, sir.
Oh, thank you. This does not increase the cost ratio. It doesn't change the ratio. It simply allows us to keep our promise as to the portion of the ratio that we have committed to, but it doesn't change it.
Okay, it appears, though, that the amendment may be authorizing FEMA to make a grant to cover non-federal costs.
This grant would be accorded communities that already have projects that have been approved by Congress. This does not go into other areas.
So but Congress approves projects where the cost share, for example, Congress will approve projects that will be a 50-50 cost share, a 65-35 cost share. And what I'm concerned about in my district is that, and in others, is that if you give FEMA the ability to cover non-federal costs of one of those projects, because the pot of money doesn't get any bigger, you're going to have to cut out other projects because we don't have enough money. So, but the way I'm reading
Would the
your-
gentleman yield to the chairman?
I would.
I thank the gentleman for yielding. I wanted to oppose my friend's amendment. I do believe he is conflating programs of the Corps of Engineers within FIP. I think his main debate is probably down the hallway. That's my first point. The second point is I would encourage no member to vote for any amendment that includes the phrase "such sums as necessary." That has been pointed out before. It's a blank check as I stare right in front of me of the national debt clock, yet again spinning out of control. I do think that the subject matter of the gentleman's amendment is not unimportant mitigation. I think there is good work done in the gentlelady from New York, Ms. Velasquez's bill. and Chairman Duffy's bill as well. As he has pointed out, $1 billion over 5 years for mitigation grants. That's important. Gentleman's time from New York has expired. Who seeks recognition? I think you've already been recognized. Does any other member wish to be recognized on the amendment? If there's no further debate on the amendment, the question now occurs on the amendment offered by the gentleman from Texas, Mr. Green. All those in favor shall signify by saying aye. Aye. All those opposed shall signify by saying nay. Nay, in the opinion of the chair, the nays appear to have it. The nays have it. The amendment is not adopted. Is there any further discussion on the underlying bill from the gentleman from New York?
Yes.
For what purpose does the ranking member seek recognition?
I have an amendment at the desk.
We will pause and allow the amendment to be
That's
distributed.
Waters number 1.
Waters number 1, styled Waters number 1. The clerk will report the amendment.
Amendment offered by Ms. Waters on page 3, line 9, strike $10,000 and insert $3,000.
Gentlelady is recognized on her amendment for 5 minutes.
Thank you very much. Mr. Chairman and members, I'm offering this amendment because I think this is a wonderful example of how we can have bipartisan support for a good idea and satisfy the concerns of both sides of the aisle. And so, as I stated earlier, $10,000 a year is simply too much for anyone to pay for flood insurance coverage. And we have no control over FEMA, and we cannot say that, oh, they won't go that high. We don't know what they would do. Although I understand that there's currently no hard cap on the dollar amount of premium that FEMA can charge an individual, I'm concerned that by setting a cap at such a high amount, we will only be exacerbating affordability issues for many policyholders. That is why my amendment would lower the proposed premium cap from $10,000 a year to $3,000. FEMA estimates that just over 144,000 single-family policyholders have premiums in the $3,000 range. This is a substantial number of families, but out of the total 5 million policyholders in the NFIP with average premiums under $1,000 still leaves room for modest increases. I'm concerned that many of these families are already struggling to pay their premiums, and it is difficult to know how many of them would be impacted by the premium increases being called for in other bills we will consider today. That means that unless we provide real rate relief, their premiums could keep rising until they hit the proposed ceiling of $10,000 a year. Paying that much for a maximum claim of $250,000 just makes no sense. Put another way, $10,000 is such a high premium amount that it actually equals the optional high deductible that FEMA offers. Anyone who understands insurance understands that this is not a viable scenario for a policyholder. Mr. Chairman, I would much rather, take time, on some other issues, rather than have to spend time in this markup debating ways to provide long-term solutions to the affordability challenges that policyholders face. But that may not be everyone's priority, since the best that could be offered in this premium cap is at $10,000. I just want to give us an opportunity to work together, as we would all like to do, and to have a bipartisan solution. So I would urge my colleagues to support lowering this cap to about $3,000.
Will the gentlelady yield?
I certainly will.
I respect your leadership. I respect this amendment. And I would like to respectfully request that if you would consider raising this to $5,000. I want to underscore that I deeply believe in Mr. Zeldin's underlying bill on mitigation. I think it's good common sense, good management, reflects the reality of what our country is and what the program needs to do to modernize, and actually implements what FEMA was already doing in the disaster in New York. And I feel that Mr. Zeldin and I have had this conversation earlier. He was unwilling to accept a lower amount. I respectfully request that he accept it, and I would like to request unanimous consent to place into the record a recommendation that came in from the National Association of Realtors. This was not, I did not actually read this until last night, so it was not part of the discussion that Mr. Zeldin and I had.
Without objection.
And I'd like him to consider their recommendation. They point out that the 10,000, they support, I should make clear, the underlying, they support the Zeldin amendment, but they recommended changing it because each homeowner had to have a valid elevation certificate in the previous calendar year, and they point out that this certificate costs anywhere from $500 to $2,000, and they recommend that any fee and surcharge and the overall premium cap provide for this this premium charge so that that be part of it. I think that's a reasonable request. Again, I ask the ranking member to consider this request and raising it, in her opinion, to $5,000.
I agree to that, Mr. Chairman. How do I inquiry, Mr. Chairman?
If the gentlelady will suspend.
Yes.
Is the gentlelady asking for unanimous consent to amend her amendment from 3,000 to 5,000?
Thank you, Mr. Chairman. That's precisely what I'm doing.
Without objection, those who have the amendment, since this is a very modest change, I think everybody's capable of crossing out the number 3 and writing the number 5 on their amendment so that we know.
Respectfully,
what
Mr.
we are
Chairman, would you
dealing
yield
with.
for a second?
Well,
It's your time.
no one has claimed time at the moment, but I will now claim time in opposition to the amendment, and then after I make my statement, I'll yield to the gentlelady from New York. So I must admit, as the gentleman from Wisconsin has pointed out, it was a little curious that the last 2 iterations of the flood bill, of which our ranking member played a significant role, at no cap. We're now moving to some cap. But I still believe that the goal ought to be that people pay actuarially sound rates. And in fact, some people will pay less when they pay actuarially sound rates. And we know for a fact, we have empirical evidence, when market competition is allowed in, some people pay lower rates. I know that the ranking member said $10,000 is too much for anybody to pay for flood coverage. Well, I'm not sure that a multimillionaire who has a beachside condo which is flooded 7 times, I'm not sure $10,000 is too much. Now, again, very few people are paying at that rate. The average rate is now $846. As I said earlier, 2/3 of people pay between roughly $400 and $1,400. But I do think, again, the goal ought to be to move to actuarial rates, but make sure that the rumors of $30 and $40 and $50 and $60,000 increases in premiums is to ensure that people don't have to worry about that. Some amount of peace of mind and gradual increases for some and actually decreases for others in reaching actuarial rates is important. And I do appreciate the gentlelady at least raising the number somewhat. I still oppose it, although it is good that we can at least agree on the concept. Otherwise, what we would have had is somebody with a $5,000 deductible would never pay more than $3,000, and somehow that didn't seem right, and now I guess it
Well, the gentleman yield.
Well, I was going to yield to the gentlelady from New York first, so she asked for time. Let me yield to the gentlelady from New York first.
I just would like very much to have a very strong Democratic support for Mr. Zeldin's bill, because we know if there isn't strong Democratic support, then it a lot of times doesn't pass in the Senate. And I think the main thrust of this bill on the mitigation is an incredibly important adjustment, and I yield back the time.
Will the gentleman yield?
I'd be happy to yield to the ranking member.
Mr. Chairman, I understand perhaps the author of this amendment who represents at least in a major part of his district, like the Hamptons Bay, and yes, they could pay. And a lot has been talked about New York. But this is for the whole country. This is for everybody's district. This is not just for New York, and we don't all represent folks who are able to pay that amount of money. So I hope that would be taken into consideration, and I hope that there would be some indication of those who claim that they want to work across the aisle to try and get things done, to take this as a legitimate way by which to do that and move from 10 to 5. I don't think that's unreasonable. And, Mr. Chairman, I yield back.
Would the gentleman yield?
I will yield to the gentleman from Wisconsin.
The program owes over $24 billion to the federal government. We run a $1.5 billion deficit a year. $1.5 billion deficit a year. We reached out to the other side and said, hey, let's help people who have risky homes. Let's help them mitigate. Let's help them out. And so a problem that we saw on this side of the aisle of rumors of outrageous premiums that the ranking member didn't fix. Even after Bigger Waters, there's no cap. There's no cap. We said, you know what? I don't want people to pay more than $10,000. We even have a rumor they're going to pay more than that. So we put a cap in. And all of a sudden, the $10,000 cap isn't enough. It's supposed to be $3,000 or $5,000? Where was the $3,000 or $5,000 when Grim Waters came out? We're trying to do the right thing and work in a bipartisan effort and try to address the shortfalls of this program and make people feel at ease that they're not going to have outrageous costs. And by the way, the ranking member did good work. We're not going to have premiums increase by more than now 15% a year. But let's see where we have some bipartisan movement, like the member from New York said, and let's work together and get this thing done with great bipartisan support. At least one idea that most everyone agrees with. Let's not find
Reclaiming the chairman's last few seconds, I do want to point out that 13,897 people do currently pay over $5,000, and it is important that we move to actuarial rates. Who seeks time? For what purpose does the gentleman from New Jersey seek time?
Move to strike the last word.
Gentleman is recognized for 5 minutes.
I just would like to point out who gets the benefit of this. There's a couple of people, a couple of buckets of people. One certainly is people with high-risk properties. But bear in mind, this is a maximum $250,000 coverage. For premiums to be $5,000 or $10,000 even, these are on homes that are at the upper end of that. And it seems to me that by reducing these premiums to $5,000, the gentlelady is really benefiting those people who are wealthier. I don't know why we would do that. The average premium in this program is about $600. Why would we benefit those who can most afford to pay and then put stress on the program that most Americans with flood properties, flood risk properties, desperately need? So I just think I understand the intent is to be fair and not to burden anyone, but the reality is this proposal is going to help wealthier people and ultimately, I think, hurt those of more moderate means. And I recognize 10,000 is a bit of an arbitrary number, but I just don't think we need to benefit people that in many, many cases can more afford to pay. I would urge rejection of this, and let's stick with the higher number so this program is secure. I yield back.
The gentleman yield.
Yes, I will. Yield to the gentleman from New York.
I agree with the gentleman from New Jersey, and the program is, as been pointed out, currently $24.6 billion in debt, and as has been pointing out, there's currently no cap in law to protect policyholders. My district does include the Hamptons. We do have homes that are valued over $200 million. We have homes valued tens of millions or millions or hundreds of thousands. And my district, I don't know if there's a district in the continental U.S. surrounded by more water than our district. There are a lot of people who are in, actually, believe it or not, lower to low middle income communities, blocks from the water. They have no water view. Their homes are, they're small, and they're just trying to survive. And with the goal that I agree of making the NFIP program solvent, I would not want to lower the cap on the wealthiest to the point where, in order to make the program solvent, we would have to increase costs for those who are in my district who are in the low to low middle income community to see their premiums go up, to subsidize the people who do live in the more expensive properties. And I very much appreciate the purpose for the amendment, the goal of assuring that not only are we making the program solvent, we want to ensure that there is access and affordability for everyone who needs to obtain a policy proposal. I just think we have a different thought on with regards to this cap, because my greatest concern is by reducing costs for the wealthiest in my district, that we would end up with the unintended consequences of increasing costs for the poor end of the district in order to achieve the goal that hopefully we all share of making NFIP solvent. And I yield.
Will the gentleman from New Jersey yield?
No, somebody else, I'm sure, will yield on the other side. I need to step out, and so I yield back my time, Mr. Chairman.
Gentleman yields back. For what purpose does the gentleman from Missouri seek recognition?
Move to strike the last word.
Gentleman is recognized for 5 minutes.
Thank you, Mr. Chairman. I don't need 5 minutes. I just think it's critically important for us to understand that there is nothing in this bill that will make the flood program solvent. I think, and the gentleman, maybe he didn't mean what he said, but we're paying $400 million a year in interest. We're not making it solvent. In fact, we are making it far more expensive. And I didn't want anybody in here who may not be dealing with this on a daily basis to come to the conclusion that this is going to make the bill solvent. It will not. There's nothing in all of these bills that will make it solvent.
Will the gentleman yield?
My time.
Will the gentleman yield?
Yes, I yield to the ranking member.
Did you say that the debt is $24.6 billion?
$24.6 billion with $400 million a year in interest.
I'm sorry, did you say $400 million a year in interest?
$400 million a year in interest.
And did you say that what the gentleman is proposing is ludicrous in terms of making the program solvent? Did you say that? Oh, thank you. I just wanted to.
I didn't quite
Thank
say
you.
ludicrous,
I yield
but
back the balance of my time.
I yield to the gentleman from California, Mr. Chairman.
Just a couple of things on the numbers. Yes, the program is $24.6 billion in debt, but the vast majority, $19 billion of that debt, goes to the year 2005, which was, along with Katrina and other floods, just truly extraordinary. But also, we would hope that we would get better in terms of mitigation since then. So to conjure up the idea that this program is hemorrhaging money, almost all of that debt goes back to one particular year. The second thing on the numbers, and I'm just to describe people as like incredibly wealthy because they have a $250,000 house strikes me as odd, especially if you're from California, New York, or New Jersey. I don't think we should say that somebody can afford $10,000 in flood insurance because they're so wealthy that their home appraises for a full $250,000. And with that, I yield back to the gentleman from Missouri.
I yield to the ranking member.
Oh, I ask you again, what is the amount of that debt? Did you say $24.6 billion?
$24.6 billion.
And how much again are we paying in interest every year?
$400 million.
Wow. Thank you very much for that revelation. I yield back.
I yield back.
Gentleman yields back. Who seeks recognition? Is there any further debate on the amendment? If not, the question occurs on the amendment offered by the ranking member from California, Ms. Waters. All those in favor shall signify by saying aye.
Aye.
All those opposed shall signify by saying nay. Nay, in the opinion of the chair, the nays have it. The amendment is not adopted. Is there further discussion on the bill from the gentleman from New York? If there are no further amendments, our discussion, the question now occurs on ordering the bill as amended, reported to the House with a favorable recommendation. Those in favor shall signify by saying aye. Aye. All those opposed shall signify by saying nay. In the opinion of the chair,
Mr.
the
Chair,
ayes appear
request
to have
a
it.
roll call vote.
A recorded vote has been requested. All those in favor of a recorded vote shall raise their hand and be counted. A sufficient number having raised their hands, a recorded vote is so ordered, and pursuant to subsection C5 of Rule 3 of the committee rules, the vote on this question is postponed. Now, pursuant to notice, I call up H.R. 2874. The clerk will report the bill, which was distributed in advance.
H.R. 2874, to achieve reforms to improve the financial
Without
stability.
objection, the bill is considered read and open to amendment at any point. The chair recognizes the gentleman from Wisconsin, Mr. Duffy, the sponsor of the legislation, for 5 minutes.
Thank you, Mr. Chairman. Just to set the scene one more time, this program, as the ranking member made several times, is over $24 billion in debt, and we run a deficit of $1.5 billion a year. If you were to take off the $400 million of interest, it's still $1.1 billion in a deficit every year this program rolls forward. We are making an effort to make this program more actuarially sound, and I'm not sure that the ranking member was actually trying to make an effort to make it more actuarially sound. It seems like she's making an effort to get us further away from actuarial soundness. Let me just talk about a few higher points of my bill, and as has been discussed, and will come by way of an amendment, we're going to have $1 billion of mitigation in this program over the course of 5 years. We've worked with Ms. Velasquez, increasing the increased cost of compliance money from $30,000 to $60,000, allowing homeowners in certain situations to access that money pre-disaster, which will harden their home, but also hopefully help them lower their premiums. We've worked with all the members, Democrat and Republican, on the East Coast who were affected by Sandy, and have a number of Sandy reforms in a package of bills that are going to be discussed today. There is no massive, single shot here. There's a whole bunch of little ideas that, when taken together, significantly reform the lessons learned in Sandy. We're going to take up a bill from Mr. Ross that's going to help drive a private market, help share claims data with the private sector, and remove the non-compete with the write your owns. What we're going to do is diversify risk, take risk off of the federal government and the federal taxpayer, and diversify that through the private market. And as the chairman has noted numerous times, this is going to, in many cases, help drive down premiums for our families. We have a few concerns in this bill about grandfathering. And so at one point we have a group of people who have been grandfathered. They're going to stay grandfathered. But from 4 years from the date of enactment, we have a provision that says we're not going to have new grandfather. And you're going to, if your risk changes, if your map changes, so too will your premium. No new grandfathering. And those grandfather properties are going to be put on a slight escalator like pre-firms to get them closer to actuarially sound rates, having a rate match their risk. Pre-firm properties, we increase the floor of their escalator from 5% to 8%, but we also take down the ceiling where rates can increase by 18%. We're going to move that down to 15%. Some of my colleagues have given me a little bit of pushback, but we do have surcharges, and on the primary residence side, the surcharges currently are $25. We increased that slightly to $40, not a month, $40 a year. So $40 a year in a surcharge comes to $3.33 a month, or $1.25 more than what ratepayers pay today. So we're talking some pretty small numbers, but can go a long way in helping shoring up the balance sheet of the NFIP. Mr. Lutemeyer, in his provision, does great work on mapping using advanced technology like LiDAR, letting communities remap themselves if FEMA doesn't and is unwilling to remap, a better appeals process. So this is a package, and though thus far in this debate, the tone might not appear to have been as bipartisan as actually the negotiations and the work has been. There has been a lot of volleying of ideas back and forth, recognizing concerns that everybody has and trying to put a package together that works for everyone. But this bill, my bill, which is kind of well, my bill is my bill, is a way that we're able to help homeowners out, help homeowners mitigate, and help make the program more actuarially sound, reduce risk to the federal taxpayer. And I think with all the insight that we received from Republican and Democrat members, this goes a long way to accomplishing that goal. With that, I yield back to the chairman.
Time of the gentleman has expired. For what purpose does the ranking member seek recognition?
I move to strike the last one.
Gentlelady is recognized for 5 minutes.
Thank you, Mr. Chairman. We are now debating yet another reform bill that fails to do one very important thing, and that is reauthorize the National Flood Insurance Program. No amount of modernization will matter if the program expires, which seems more and more likely to occur given the process that has been unfolding today. It is bad enough that we're marking up piecemeal reform bills, none of which actually reauthorize the NFIP, but this bill really takes the cake. While I very much appreciate the many times that Mr. Duffy and I sat down and discussed areas of potential compromise, we were unable to bridge the wide gaps that remained over the total increased cost to policyholders. When it comes to affordability, which is my #1 priority, this bill would do nothing to address it. In fact, it actually raises premiums and fees across the board. Mr. Chairman, let's try to add it all up. First, if you are a pre-firm policyholder, you will see mandatory premium increases of 8% a year. This is far higher than current law. Next, your surcharge, which is already too expensive, goes up further, in some cases as high as $275, depending on the type of property you own. After that, if you want to pay your premiums monthly rather than annually, you have to pay another $50 to do so. Then, if you're so unfortunate to live in a state that agrees to sign up for the affordability program this bill would create, and you don't meet the eligibility criteria, you have to pay for the cost of the entire program in that state. Moving on, if you live on the coast, guess what? Your rates are going up. That 15% reserve fund assessment you've been struggling to pay, that will now be doubled under this bill. If you're kicked out of the NFIP by the new terms of this bill and your state does not provide affordable private insurance, you now have to pay a 10% surcharge just to keep your NFIP coverage. And if you are a grandfathered property, meaning you did everything right and you built to code, let's just say you're in for a rude awakening because this bill eliminates all grandfathering after 4 years. And those are just the costs included in this one bill alone. Who knows what the total impact will be once this is packaged with some of the other bills we have discussed today. Simply put, This bill is unacceptable. It fails to address affordability challenges that families across the country face today, and that's not all. There are several other provisions in this bill that are not thought through and could be very harmful if enacted. For example, this bill would repeal the right-your-own non-compete clause, which simply asks companies that administer NFIP policies while taking on none of the risk to refrain from selling their own competing policy. This is nothing short of an open invitation to WYOs to cherry-pick the best NFIP policies for themselves. The bill also requires FEMA to make sensitive data publicly available in order to give private companies all the tools they need to cherry-pick and ultimately undermine the NFIP. There are many more problems with this bill, but I simply do not have the time to go through them all. For all of these reasons and more, I ask all members that care about the continued viability of the National Flood Insurance Program to oppose this bill. And don't forget, when some talk to you about premiums, they're talking to you about the basic increase. But all of those other charges and fees that I've mentioned, they don't call those premiums. That's just added to the premiums. So you don't know what he's talking about or what they're talking about, and you don't know what the premiums will be. I yield back the balance of my time. And I thank Mr. Duffy for his cooperation in trying to come to an agreement. We just didn't make it.
Gentlelady yields back. For what purpose? The gentleman from Florida seek recognition?
Move to strike the last word.
Gentleman is recognized for 5 minutes.
Thank you, Chairman, and I want to thank Chairman Duffy for bringing forward this bill. You know, I think that before we start getting into our differences on this committee, I think it's important that we look at our commonalities. And there's a strong commonality here that I don't think anybody in this committee, regardless of which side of the aisle you're on, wants to see increased debt in the NFIP. I don't think anybody in this committee wants to see increased premiums and lack of availability of flood coverage for anybody out there. But yet what we've seen over the last 60 years in the experiment of the National Flood Insurance Program has been an absolute disaster of a single-payer system that has done nothing but increase debt, create moral hazards by allowing for construction in areas that should never have construction, and furthermore, inhibit technology and innovation from what we need most importantly, and which is in this bill, and that's mitigation. What are we doing if we cannot manage the risk that we are trying to insure? Well, maybe it's not insurance that we're providing. Maybe it's relief that we're providing. And what good is relief if we're not actuarially assessing that risk? We're just throwing money out the door. You know what's interesting? If we don't provide mitigation, we not only create displaced homes, displaced families, but politically we saw the state of Louisiana lose a congressional seat because of a flood that happened there in 2005. We owe it to our citizenry to make sure that we do not let status quo perpetuate under any circumstance. And so this bill gives us that first step. And this bill, when taken in concert with those other bills that we offer today, gives us what we need. The private capital to come into the market to take that risk, to manage that risk, to assess that risk, not only to the benefit of the NFIP, not only to the benefit of those that want to put their capital at risk, but most importantly to those consumers out there who are desperately seeking for us in this policymaking role to make sure that they have the best policy available. And so I say to you, when you want to talk about the non-compete for the right your own, by God, what good does competition do to the market? It incentivizes more players. It gives greater opportunity to those to provide better products and better services, and to whose benefit? To the consumers. This bill has a lot in it, a lot that people might not like, a lot that divides us, but also a lot that brings us together because it moves the ball to the next step and allows us to do our fundamental responsibility and fix this behemoth known as an NFIP. If you're taking on floods and waters of debt on your boat, what do you do first? Do you start bailing or do you plug the hole of debt? This bill plugs that hole of debt. Let us stop that debt from continuing, and let us start bailing out the debt to the betterment of those consumers who are relying on us to do the right thing. With that, I'll yield some time to my chairman, Mr. Duffy.
Well, thank you, Mr. Ross, and I couldn't agree more. Let's start bailing out. I want to make one point on the private market, which I can't compliment you enough for all of your work. Now, the ranking member, who we have actually worked continuously together. She actually gave me her cell phone number. That's how close we were, calling each other back and forth. Sometimes she didn't take my call, but we were talking. We're talking about a private market. And we're also talking about cherry picking. But let's, listen, what we're saying is you're going to have people who are currently in the NFIP who now have a private market. And another word for cherry picking is what? They're going to get a better rate. They're going to pay less money than they pay today. That's what we want, right? That's what Mr. Ross is trying to do. Say, let's see what policies we can offload to the private sector, diversify our risk, and give people a better rate than what they currently get today. Simple stuff. This is helping people and helping the federal taxpayer. That's the brilliance behind the Ross-Castor bill and why I support it. But let's be clear on grandfathering. No new grandfathering. We're not taking away current grandfathers, and you're going to be grandfathered for the next 4 years after enactment. But after 4 years, no new people are going to get into the grandfather clause. We're moving premiums, that's true on pre-firms, from 5 to 8. It's not an 8% increase, it's going to 5, but we're also taking down that ceiling from 18 to 15. Talking about monthly fees, which I believe is $50. You don't have to pay the monthly fee. If you want to escrow like you do your taxes, you can escrow your NFIP premium and have it paid once a year, and you pay no fee for it. But if you want to pay it monthly to your insurance company, well, there might be a slight fee for it. The ranking member mentioned, I want my time.
Time of the gentleman from Florida has expired who seeks recognition. For
Mr.
what
Speaker?
purpose does the gentleman from Georgia seek recognition?
Strike the last
Gentleman's
word.
recognized for 5 minutes.
Mr. Speaker, first of all, I want to thank my colleague, my Republican colleague from Georgia, Mr. Loudermilk, for his efforts and how much I appreciate you working with me and my staff and your staff to come up with the amendment which will create a study for the GAO to look at. And I think it's a very strong bipartisan effort, Mr. Chairman, and much of which we need more of. Mr. Loudermilk and I share a major portion of our districts, and one of those counties, ladies and gentlemen, is Cobb County. It has been the epicenter. If you all may remember, the great flood that we had in Georgia was the most terrible flood we had in Georgia's modern history, and Cobb County itself was the most effective area. We share that area, so we have great experience there. That area is bounded by the Cobb River, the Chattahoochee, the Flint River Basin, all of those. So it also adds to the dynamic of Georgia along with Florida, Alabama, Mississippi, Louisiana as those prime high flood areas, because no other states are situated as ours are. For example, when you look at the jet stream coming down from the North Pacific, where it hits with the Gulf Stream coming up from the Gulf, there's Georgia and portions of Florida and Alabama sitting right there in the middle. And when you combine that with Hurricane Alley, no other part of the country is so impacted. So we want to take a good bipartisan look at it, have the GAO do a study. We're very concerned about how we harmonize the private insurance industry to be able to work more effectively with the NFIP, so we can streamline some of those issues. One of the biggest problems we've had from experiencing these floods, you may remember the whole Six Flags over Georgia was Six Flags under Georgia, water coming up above the Ferris wheel. It was that devastating. The other area about this is the most impacted group of people are low-income people, the poor people. And one of the great frustrations has been the complexity of dealing with the NFIP and the hazardous way in which there is not harmonization with the private sector industry. So we think we can take a look at this. We want to make sure how we can improve this situation. And one of the areas that we want to look at is this whole issue of affordability. Affordability is so critical. I mean, the devastation, I mean, this thing happened, our flood happened about, I think, 5 or 6 years ago. Vice President Biden flew down. I think some of you all may remember that. But there was no group that was hit as hard, not only in terms of losing everything, but how do they go? In other industries where you have auto insurance or home insurance, there's an agent you can pick up that phone and call to look on your behalf. That is not necessarily the case here. And we have the private industry sector out there trying to figure out how do we work with this to improve it. So I think this is a good study, and I commend my colleague from Georgia for this. And while I'm at it, I certainly want to extend how deeply I felt for you and our other Republican friends. And I commend you for the courage and the bravery and the compassion that you and other of our Republican colleagues showed in yesterday morning with the tragic shooting. With that, Mr. Chairman, I yield back.
Gentleman yields back. Who seeks recognition. The chairman then recognizes himself. A number of members on the other side of the aisle have spoken about affordability. I too share a passion for affordability. I would point out that they had an opportunity to make flood insurance very, very affordable had they joined us in supporting the American Health Care Act. Because the insurance provisions of the ACA, those insurance coverage provisions alone are costing the average household almost $10,000 over a 10-year period. So we could have made all items in the family budget, including insurance premiums for the NFIP. There's $1,000 a year that my friends on the other side of the aisle could have come to their help. Fuel economy standards are costing almost $4,000 per vehicle. If you own the vehicle for an average of 4 years, that's almost $1,000 a year of affordability my friends on the other side of the aisle voted against. Perhaps something more modest. Every single time it comes up for a vote, I think almost every one of my Democratic colleagues votes to support the Davis-Bacon Act. Well, that's costing $8.6 billion annually, or $75 per household. So that was $75 a year of affordability for the National Flood Insurance Program that my friends on the other side of the aisle decided not to support. There's a lot of different ways to support affordability. I would suggest that my friends on the other side of the aisle look at some other opportunities. Again, I want to point out, even with the surcharges, which, by the way, it was the ranking member who I think wrote it into the Grimm-Waters bill, and the reserve fund that I think was written in one of her bills, even adding those charges to the premium, in 2016, the average total bill was $1,084. Under this legislation, to ensure that there is, and I'm talking about the package of bills, that we have increased market competition, that we put people on an escalator, some as long as 15 years, to paying actuarially sound premiums, the average total bill next year would be $1,126. That is less than $4 a month increase to put this program on the pathway to sustainability, to being actuarially sound, and to make sure that the constituents in my district don't necessarily have to pay for a program they don't benefit from. 96% of American households are subsidizing 4%. Okay, in my district, we don't have a huge problem with flooding. But in the last several years, Van has been hit by a tornado. Canton has been hit by a tornado. Garland has been hit by a tornado. And yet, Their homeowners' policies are not subsidized by the federal government, but those who are living near coast and near rivers, and again, I respect them, I want this to be affordable, but at the same time, there's just something patently unfair about my constituents having to subsidize essentially property and casualty insurance for somebody else when they're struggling to pay their premiums. I would also point out, and I'm sorry the gentleman from Texas, Mr. Green, isn't here at the moment. He several times pointed out again what tragedy there is in these hurricane and flooding events when we have loss of life. Then why would we want to subsidize and incent more people to be in harm's way? Why would we want to do that?
Would the chairman yield from
I'm sorry, who's seeking?
me over here?
Yeah, I'll yield time to my friend.
Well, I appreciate that, Mr. Chairman. And I know you to be a very sensitive and compassionate person, but there are certain areas of this country that are more impacted from flooding than others, as I articulated. Nowhere, Florida, Georgia, Mississippi, Louisiana, those states are impacted not only from the jet streams from the Gulf and the Pacific, but they sit right in Hurricane Alley. So all we're simply saying is that these people need a little bit more help because in addition
Okay, I get
to
that.
them
I'm unfortunately
sitting
reclaiming
there,
my time because my time is
they're low income.
My time is running out. I would also say there are certain areas of the country that are more impacted by tornadoes. It also happens to include the 5th District of Texas, and yet the federal government doesn't subsidize their insurance. Time of the chairman
But
is
we're
running out. Who
talking
seeks
about
recognition?
flood insurance
My
here,
time,
Mr.
unfortunately, my time has expired. Who seeks recognition? For what purpose does the gentlelady from New York seek recognition?
I move to strike the last word.
Gentlelady's recognized for 5 minutes.
Thank you very much, Mr. Chairman. I'd like to thank you and Mr. Duffy for your hard work on flood insurance, but I have to oppose this bill. There are some very good things in it. I support requiring FEMA to disclose its premium methodology, enhancing the community rating system, and allowing FEMA to use other risk assessment tools to determine premium rates. But there are too many provisions that would make flood insurance in my district in New York State either unavailable or unaffordable. Until last night, this bill didn't even reauthorize the National Flood Insurance Program. The manager's amendment does include reauthorization language, but only reauthorizes the program for 5 years. In order to provide certainty not only to homeowners but to the industry, I believe we need a much longer reauthorization, 10 years ideally. Section 506 of this bill would prohibit federal flood insurance policies altogether after 4 years for new structures that are either in special flood hazard areas or that have a replacement cost of more than $1 million. I consider this as one of the most harmful provisions. Practically all of Manhattan is in a flood area. And even if FEMA temporarily waives this prohibition, which it could only do for 1 year at a time under the original bill, and only if private market insurance is not available, there'll be a 10% surcharge on all federal insurance flood policies for these new structures. My colleague, Mr. Heck, Mr. Christ, and Mr. Meeks and I will have an amendment later on this harmful provision, but it would significantly raise premiums for too many homeowners in New York State. The bill would also raise premium on homeowners by increasing the floor on premium increases that Congress set just 3 years ago. Currently, FEMA has to increase premiums by a minimum of 5% a year. Under this bill, FEMA would have to increase premiums by a minimum of 8% per year. And when you add in the mandatory increase in premiums required to fund FEMA's reserve fund, the effect of the bill would be to significantly increase flood insurance premiums for homeowners. I am also concerned that this bill forced FEMA to effectively give away its claims to data to private insurers for no charge whatsoever. Why in the world should FEMA give away a valuable commodity for free? We're trying to make them more solvent. This is just a poor financial management in my humble view, and I would hope that it would trouble the fiscal conservatives in the majority too. At the very least, we should correct this. Finally, I'm concerned about eliminating the non-compete clause for the so-called write-your-own private insurers. This would allow private insurers that administer the National Flood Insurance Program to exploit their access to FEMA's data in order to cherry-pick the safest properties. This would leave FEMA with only the riskiest properties and would undermine the solvency of the National Flood Insurance Program. So while there's some really good provisions in this bill, there are too many provisions that would dramatically increase premiums for residents of New York State. That's why I oppose this bill, and I urge my colleagues to oppose it as well, and I yield back the balance of my time.
Gentlelady yields back. For what purpose does the gentleman from Georgia seek recognition?
Strike last word.
Gentleman is recognized for 5 minutes.
Thank you, Mr. Chairman. I was going to save my remarks till the manager's amendment, but since my friend and colleague from Georgia spoke up, I thought it was appropriate to go ahead and speak of this now. First of all, let me say how much I appreciate his kind comments on the events yesterday, and there are still those of our colleagues that are in need of prayer, and we appreciate that. As we do on every piece of legislation, as this came up, is very complex, complicated. We reached out to a plethora of different interests back in the district, from policyholders, write-your-own companies, independent agents, mortgage lenders, et cetera, to help us work through this and bring their ideas together. Some of the issues that were brought up were flood insurance in itself, risk disclosures, mapping, fostering development in the private market, et cetera. But the one thing that continually came up over and over again was just how complex and extremely complicated the NFIP program is. It's very difficult for our constituents, our policyholders, to understand the details. For example, write-your-own companies have showed me how the NFIP is significantly more complicated than other types of property and casualty insurance like auto, home, and renter's insurance. And I didn't think it necessarily needed to be that way, even though government is very good at complicating even the most simple ideas. And that's why I reached out to my friend and colleague, Congressman Scott, and he graciously joined in with me on this. And the provision will require the GAO, the Government Accountability Office, to produce a report on how the NFIP can be simplified and streamlined for policyholders, insurance companies, agents, mortgage lenders, and vendors. The report will also address how federal flood insurers may be harmonized with private insurance standards and examine ways in which the structure of the NFIP may be streamlined. A number of GAO reports from the previous reauthorization have informed us that the legislation we're working on today, this report will be valuable for our future efforts to simplify federal flood insurance and make it easier to understand for everyone involved. Additionally, with the NFIP being more than $24 billion in debt, we must find ways to make the program less complicated on the administrative side where appropriate. This will help us to improve program efficiency and increase the amount of premium dollars that are available to claims. Last year in my home state of Georgia, Hurricane Matthew damaged at least 2,000 homes and claimed the lives of 3 of our citizens. More than $78 million in federal funds has gone to disaster relief in Georgia since Hurricane Matthew, and it's essential that we get this bill right for our constituents who rely on flood insurance to piece their lives back together after a disaster. Simplifying the program will go a long way to helping our constituents understand the program and know what is covered, what isn't. The report will also lead to future solutions for policyholders that make their insurance plans easy to understand in the time that they're in greatest need. Mr. Chairman, I appreciate the opportunity and the indulgence to present this amendment, and I'm pleased that it's included on the manager's amendment, and with that, I yield back the balance of my time.
Gentleman yields back, who seeks recognition. Is there any further discussion on the bill? If not, in that case, does the gentleman from Wisconsin have an amendment?
I do have an amendment at the desk, Mr. Chairman.
Okay, we'll pause and allow the amendment to be distributed. The clerk will report the amendment.
Amendment offered by Mr. Duffy on page 13, strike line 13 through 15 and insert the following.
Without objection, the reading of the amendment is dispensed with, and the gentleman is recognized for 5 minutes on his amendment.
Thank you, Mr. Chairman. I first want to note that this amendment does authorize the NFIP through September 30th of 2022. That's been a point of conversation this morning. Now, also, we authorize appropriations in the Flood Mitigation Fund to the amount of $225 million a year. So over the course of 5 years, that is $1 billion that goes into mitigation. We clarify structures with high-value replacement costs. We strike our counter-cyclical process language and create a market clearinghouse in regard to new construction and million-dollar homes. In my underlying bill, we move the write-your-own compensation from 30.9% down to 25%. This actually will increase the write-your-own compensation to 27.9% with a 3-year phase-in. It clarifies all perils policy requirements as well, in addition to a number of different items. I want to take a moment and I've run the numbers on what an average premium looks like today in 2016, and with the reforms that we have been discussing, what does average premium look like in 2017? So if you look at in 2016, the average NFI premium with a surcharge, with a reserve fund assessment, the average NFIP total premium is, on average, $1,084. With the modifications that we are making in 2017, if passed as presented, looking at the average premium, the surcharge, the reserve fund assessment, in 2017 with these changes, that $1,084 bill today on average would go to $1,126 next year, for a difference, a grand total of a $42 increase in an average person's premium from this year to next year. Or to put it another way, this would be less than a $4 on average increase per month for an NFIP policyholder. The ranking member has been pretty clear with me, and I would agree with her after Biggert Waters. You can't shock people. But we do want to get folks paying closer to an actuarially sound rate. I would argue that a less than $4 on average increase for a policyholder is not shocking anybody. This is a pretty reasonable set of proposals that we've laid out in our underlying bill and with my amendment. If I could maybe just go back to some of the earlier debate as well. Talking about new construction. Now, if you live in a coastal area and we say there's going to be no new construction in a 100-year floodplain, people get pretty upset about that, and I'm not proposing that at all. But if we're going to have new construction in dangerous areas, do we want to take that new risk on to the federal taxpayer, or should we say, well, if there's a private market that exists, let's let the private market take that risk. Let's not have the federal taxpayer take it. Let's let the private market take it. And when we talk about the solvency of the program, if we build more properties that are nicer properties in more dangerous areas, and then when storms hit, we can't be shocked that the cost to cover the damage to these homes is also going to increase because we're building more and more expensive, nicer homes in dangerous areas. So whether my good friend from Colorado wants to make the argument that it's global warming, I'm not the science committee, or if it's the fact that we're building more homes in dangerous areas, the fact is the cost of coverage is going up. And to diversify that risk, and I think it's pretty reasonable to say after 4 years of enactment, new construction, we should try to push those new constructed properties into the private market. If you have $1 million home, you're probably not poor. We can also push you into the private market, again, if that private market exists. In my 13 seconds, I just want to reiterate, this year to next year, on average, the premium increase is less than $4 a month. This isn't extreme, it's common sense, but brings us closer to actuarial soundness. I yield back.
Gentleman's time has expired. For what purpose does the ranking member seek recognition?
I move to strike the last one.
Gentlelady is recognized for 5 minutes.
Thank you, Mr. Chairman. This amendment does little to improve a fundamentally bad piece of legislation. And like the bill itself, there's still technical errors in this amendment that make it apparent that, it has been a rushed process. In fact, this amendment was not sent out until close to midnight last night. And we understand that these changes are the result of last-minute arrangements with industry. Mr. Chairman, the industry did, in fact, have legitimate concerns that should be addressed. However, not a single change in this manager's amendment addresses serious industry or consumer concerns that have been brought to this committee's attention. In particular, there's nothing in this amendment that responds to widespread concerns about the impact that the underlying bill will have on the cost of flood insurance. And the stability of the housing market. The future of the NFIP is important to a wide range of stakeholders, but you have made it crystal clear that you're looking closer at industry stakeholders than consumers. Mr. Chairman, I'm very disappointed with the process by which you have chosen to consider reauthorization of this important program. I've worked on flood insurance for many years, and I have a strong history of achieving bipartisan consensus on this issue. I will admit that I started with a sense of optimism that we could continue in that tradition of bipartisanship. But I don't think that my concerns really have been taken seriously. And instead of finding ways to compromise, it seems that everybody else got a chance to see the legislation, the text of the legislation, in particular on the industry. But me and my colleagues on this side of the aisle did not have that opportunity. I will note for the first time in this entire legislative process, for the first time, we're finally seeing language to actually reauthorize the program. And I suppose you finally realized that was an important detail that had not been included until now. However, I cannot applaud this addition because it only serves to lock in the changes that I believe are harmful for 5 years. So I continue to oppose this bill as well as this amendment, and I would urge my colleagues to do the same. And let me just say this, Mr. Chairman, despite the fact of these 7 bills today, and despite the fact this last-minute reauthorization that was not shared with us, I would hope that we understand that we cannot move forward in a bipartisan manner to talk about reauthorization until we really stop and deal with all of the problems that we're confronted with by way of this last-minute reauthorization and some of the other concerns that we have about the 7 bills. With that, I yield back the balance of my time.
Will Ranking Member Year, please?
I yield.
Thank you, Ms. Waters. I think I can very honestly say and pass a polygraph test when I say that I think my friend, Mr. Duffy, the chair of our subcommittee, did try to work with us, and I appreciate it very much. We got the manager's amendment at 11:11 p.m. Last evening. I don't think that it's fair that we deal with this today, having had very little time to digest it. The problems are now more related to the process than to the contents. And we're seeing this played out at a time, I mean, in the Senate, we're having the same thing with the health care bill, where, we're not having a full discussion. And it would have been very helpful, I think, if we had had a hearing on this before we marked it up. It may have turned out, it might have turned out the same way, but certainly we would have felt better about it. I yield back, Mr. Chairman.
Time of the gentlelady has expired. For what purpose does the gentleman from California seek recognition?
Well, thank you, Mr. Chairman.
Move to strike the last word.
Move to strike.
Gentleman is recognized for 5 minutes.
Well, first let me thank Mr. Duffy, for the gentleman from Wisconsin, for his hard work on this bill. This manager's amendment that we've got before us includes language that I had previously filed as an amendment. And that amendment would be to provide flood risk information to potential home buyers. And this is something that for some time we've tried to encourage. Currently we have 35 states plus the District of Columbia that have varying mandated property disclosures that are enforced related to flood hazard. But there's still 15 states that do not have this mandate, and there's no uniform standard for flood risk information that would be disclosed to the home buyer, and obviously that's in everyone's interest to do so. So this amendment requires that within 5 years, states implement requirements for those who sell or lease a property to disclose available information to consumers about past flood events and flood damage and flood insurance claims and any obligation to carry flood insurance. I think it's important, too, to look at the experience of those who've looked at this. The Pew Charitable Trust support it as a very common-sense approach. So does the National Association of Realtors. And the reason is because I think providing this information is going to allow potential buyers to account for insurance costs and flood mitigation needs before making an offer to purchase a home. So it's going to encourage sellers also, obviously, to take proactive steps to mitigate flood risks. So I would encourage my colleagues to support this amendment. I yield back, Mr. Chairman.
Will the gentleman yield?
Yes, I will yield.
I want to make sure that I understand what you're saying, and I do appreciate that homeowners certainly should have information and know all of the costs that are, included with just home ownership, et cetera, et cetera. But are you saying that if the state does not pass a law that requires this, that insurance will not be available to anybody?
Well, allowing 5 years for the states to take action, I would think would be ample time to put in place pretty straightforward disclosures here that the other states have. But for most people, buying a home is the biggest and most important decision they're ever going to make, right?
That's right.
So at the very least, I think having all the facts to make an informed decision,
that's right.
That's something we should guarantee. And I think that, I could give you some examples here, and I'll just.
Will the gentleman yield?
I will yield.
Okay.
The gentleman is still yielding to me.
Yes, let me respond specifically to that question. I could give you many examples here, but in the interest of time, let me just share with you my fundamental observation about this. Mandating states to take action in order to participate in a federal program is not too much to ask if we give them 5 years to do it. And that's all that this amendment requires with respect to that part of it.
The gentleman has not reclaimed his time yet, and I simply want to understand, if a state does not do that, what happens to homeowners?
Well, it would suspend the program.
They would not be available in the entire state.
But for that reason, the states will do it.
I yield. Thank you for yielding.
Will the gentleman yield?
I will yield, yes.
I appreciate that over here. I want to speak from a little bit of experience, being a former licensed realtor and someone who got his real estate license just as Michigan was going through some of these additional disclosures. This is not that hard, and having served in the state legislature, This is not that hard. This should be easy. And I wholeheartedly agree that consumers need to have this information. Consumers need to be informed. If they can be informed about a garbage dump or a gun range or any of the other things that are part of disclosure lists, this vital piece of information should be a part of that.
Would the gentleman yield?
Please.
I'll give one example, all right? Mary Kay McComber. Over the last 13 years, her home has flooded 20 times. She wasn't told of any flood risk before she bought her house, but after she bought her home, her neighbors were kind enough to show her pictures of her home just before the purchase, and there was the for sale sign in the front yard completely flooded. People should be informed about this.
Time of the gentleman has expired. For what purpose does the gentleman from Colorado seek recognition? All right, can the gentleman hit his microphone there, please?
Move to strike the last word.
The gentleman is recognized for 5
I was
minutes.
going to let Mr. Royce finish his thought about Mrs. McComber, or whatever her name was. But I do have a question from my friend from California, and that is, in these disclosures, and not to bring in a whole nother set of insurance questions. Sorry.
Microphone.
At some point, and to my realtor friend from Michigan, I would just ask the two of you, if we're starting with these disclosures, does that end up becoming a title issue that might be covered by some other form of insurance, like a title insurance question? And so, not to gum up the works any more than they already may be, but I think we're starting to move into that whole arena. And so I'd yield to my friends if they have any thoughts on that. To Mr. Huizinga.
Let me just say at the outset, fortunately, we have much experience in terms of how this has worked successfully because we have the District of Columbia and 35 states that currently have this statute and this requirement. So it's not as though there's likely to be unexpected consequences. But due to the expertise of my colleague, I will yield the balance of,
time belongs to the gentleman from Colorado.
I yield to Mr. Huizinga.
Well, I appreciate that, and I appreciate the vote of confidence. I'll try to try to understand it the best I am aware of. I mean, my understanding is it wouldn't be dealt with than any other disclosure. It's not specifically an encumbrance that is on title. It's a disclosure, as my understanding would be the way that this is written, that you must disclose, for example, in Michigan, you have to disclose whether you are within a certain distance of some sort of recycling or garbage facility, dump. You have to disclose whether you are within a certain distance of a gun range. You have to disclose with a certain distance of a number of these things that are viewed as potential hazards. That doesn't encumber the property in a way like a right-of-way might,
okay.
or that something like that. So I would love to be corrected by some of the legal eagles if that's not correct, but that's my understanding of how this would be viewed and would be dealt with, because then it becomes a civil issue between the seller and the buyer whether something was disclosed or not disclosed. And that could then allow you to back out of a purchase agreement, as the example of this person having seen photos afterwards. Maybe they had seen them just before the closing, this photo, but they might not have been able to back out legally of the closing.
All right, let me reclaim my time and then pass it back to Mr. Royce.
The language is similar, for example, to lead paint disclosure. So I think in terms of the intent, and I think in terms of practice, it will be an effective remedy for people who are left in this situation where the information is available to everybody in the community except them, because they're moving into the community. And certainly the individual selling the property can disclose that. Thank you.
Do you want me to yield to you, Ms. Beatty? Okay, I yield back.
Gentleman yields back. who seeks recognition? For what purpose does the gentleman from Michigan seek recognition?
I move to strike the last word, Mr.
Gentleman is recognized for 5 minutes.
Well, thank you, I wanted to comment on this and had an opportunity to do this on this element. And I think the gentleman from California, Mr. Royce, hits the nail on the head with how this would be viewed and how it's going to be dealt with. And I know in Michigan, on that disclosure, you have to disclose whether there has been evidence of water of any sort in the basement or anywhere else, and that could be even broken pipes type of a thing. So I fully support that. Moving on back to Chairman Duffy's point on a couple of things. My family was a founding charter member of our local HBA. I've got uncles who are in the business, cousins who are in the business. I'm in the business, right, and have been in the business in the past of home building and construction. I had a robust conversation with my friends at the home builders the other day, and I am confused as to why we would be required to accept and receive inclusion into a program property that is consciously decided to be put into a floodplain. And I understand that there are some areas that may have limited choice. There's no choice. I mean, there is a choice to build there or not build there. The question is does it limit the choice? And some people may say, well, we've selected this area for development. I get that. I understand that. We have a major, on a sand and gravel operation, we have a major piece of property on a river. I am actively trying to make sure that any area that's going to get redeveloped is out of that floodplain. In fact, in West Michigan, a few years ago, we had a 500-year flood event. Some of you may remember the photos. There were some famous photos of some office windows that had ducks floating around and the fish in the window. Well, that was just outside my district, but it's the river that runs through my district and empties out into Lake Michigan. Why we would go in and say that this should be treated as any other new construction, and I get it. There's arguments that while it's a more well-constructed building, great, you're right, it's a more well-constructed building that's going to get flooded. Okay, so it's more great. We've lifted the heater and the furnace and the water heater and those kinds of things off the basement floor. It's going to get flooded. So why would we just voluntarily include that in and treat that as any other piece of property? The other, and I want to get to the chairman's point here as well about what this means for additional costs. You know, if we are looking at an average NFIP premium of $827 this year, and under this we'd be looking at $847. It's a $2 a month, less than $2 a month increase. You're going to have the GWA surcharge, less than $1 a month. Reserve fund assessment, $1 a month. That's less than for an entire bill that's of $1,126. That's less than $4 a month. I believe that most families are going to be able to squeeze that $4 a month out of their family budget when they are in that situation, with the understanding that they are going to reap the benefit in the long run if there is that flood event. And it seems to me it's a reasonable movement towards actuarial soundness that has to happen in the program. And I just want to commend the chairman on his work on this. I know that there's been attempts and some success and some close to kind of successes on working with the other side of the aisle. But this is something that should cross political lines and geographic lines, and would cross over into that much desired land of common sense that Congress needs to be pursuing. And I just want to commend the gentleman and encourage my colleagues to follow along. So with that, I yield back.
Gentleman yields back. For what purpose does the gentlelady from Ohio seek recognition?
Thank you, Mr. Chairman. Move to strike the last one.
Gentlelady is recognized for 5 minutes.
First, let me just say I'd like to associate myself with the words of my colleague, Congressman Cleaver. And to my colleague on the other side of the aisle, I think you're right that this should be easy. But it clears to be by the dialogue that we're having now that maybe had we had more discussion on the bill and the manager's amendment, we might have been able to do some of those bipartisan things. I really have a question for my colleague, Mr. Duffy, and I think he just walked out the door. So maybe someone else who can answer this question. I want to make sure I understood it right. It appeared that what he was saying in his bill, that the average policy holder would only pay $42 more on their premium. And I wanted to make sure or to know if that included all of the fees and the surcharges, because there's an automatic, as I thought I understood it, a $50 fee to even make those monthly premiums. So,
would the gentlelady yield?
yes.
Yeah, I had cited this statistic before. So the average premium in 2016 was $827. The average Grimm water surcharge, $133. The average reserve fund assessment, $124, for a total bill of $1,084. Should the series of bills, including the gentleman from Wisconsin's bill, be enacted, that would increase the bill $1,126 as the total bill, which is less than $4 a month, a 3.9% increase for all assessments. I hope that clarified the gentlelady's question.
I'm not sure, because this is not as easy or simple for me as people are making it, because I'm getting, as my staff came over, we're getting questions from constituents who are watching this and who've been involved in this, and they are very confused about how simple we're making this. So does this include, as she's asking me, does this include the $50 fee to even make those payments? Because what they're saying is they're charged fees on top of this, and it's not the amount that they're hearing here. And I don't know. I'm just trying to answer some constituents.
Well, my understanding is that is a fee one pays to opt to make monthly payments as opposed to an annual payment.
Well, let me just say this and try to put it in the realm of being a small business owner. When you have to pay back to the government the taxes that you collect, some people opt to do it monthly, some people pay it yearly, some people pay it quarterly. And the reason they do that as it relates to this is some people don't have that money. I mean, we're making it like whether you're saying $800 or $1,000 that it's that simple. Everybody doesn't have that to pay in one amount, so many people do make
Would the gentlelady
monthly
yield?
installments.
I would just say in private industry, it is obvious in the marketplace, it is very common to pay an extra fee should one choose to make payments on a monthly basis or a quarterly payment. I mean, I know in several bills in my own household, if you choose to make multiple payments and spread your payments out over time, there is an increased administrative fee. So this is not uncommon to see. So again, nobody has to pay it if they don't opt to make monthly payments.
Okay, and since you said it, as you get it in the private sector and in your household, but we also know, as someone said, this is different for every district and every constituent. Some people, so I also have just heard from staff that the $50 is not included in the amounts that you gave. So I think we just need to make
Would the gentlelady yield?
Yes.
So just like your property taxes, they'll take an amount every month out on my mortgage payment. You can do the same thing. So if you don't want to pay it directly and pay that $50 fee, but you want to pay it monthly so you don't have a big bill, you can escrow your NFIP insurance payment and not pay any fees. So you can get the same result, but just taking a different avenue. We're trying to give people options, and so You can
But
have,
if they don't exercise that option, I think we've answered my question. The $50 fee is not in that additional 42. So
Because-
if that's the only option that they have, and I appreciate the options, but the constituent is asking me, because this is the only option for them, that they would have to pay the additional $50. Thank you, and I yield back.
Time of the gentlelady has expired. For what purpose does the gentleman from North Carolina seek recognition?
Thank you, Mr. Chairman. Strike the last word.
Gentleman's recognized for 5 minutes.
Thank you, Mr. Chairman. Just some brief anecdotal information. My district was hit by Hurricane Matthew. Most of it, the several counties were in the 1,000-year floodplain. I've had many visits down there to meet with my constituents and with the leaders inside each county, the sheriffs and the mayors. I did ask the question about new construction to each of them. They were Democrat and Republican members, and they all concurred that a new construction on floodplain areas would not be a prudent thing to do. Yesterday, I had about 25 members of our real estate group from Charlotte up to meet with me on a number of issues, and this became one of them. And so I told them my concerns of committing the American taxpayers to obligations that seemed to me to be unwise, and funding the insurance for new construction, and asked them what would they do in my position. And not a one of them stated that they believed that that was warranted. So I just offer that for consideration of the committee as we go forward. You know, at some point we need to stop the bleeding. And I believe that this is a way that we could stop the bleeding, and I hope that we could demonstrate back to the American taxpayer that we've got to do the right thing. It's a headwind into us. I know the political concerns, but I think I do believe that we can take a step here that would be wise for the future. Thank you.
Would the gentleman yield?
Yes, sir, I will.
I do want to be clear on this process. And though we might come into this room and we might want to throw fireballs at each other, I would say that has not been the process leading up to this hearing. I think invariably everyone has had me at some point reach out to you across the aisle and say, what do you like about the bill? What do you hate about the bill? What do we need to change? I mean, I think I've approached Ms. Waters on the floor numerous times where she wants me to just get away from her because I want to talk about flood. The first time that I received a response in a written form from the ranking member was 2 days ago. And we sat down with that form, and contrary to what we want to say today, we were close. We were making really good progress. We were agreeing to things and finding places that we didn't agree. And the ranking member, she walked away from me in the middle of a negotiation. But we were getting close because I think that this should be bipartisan. And I don't think anyone on the other side of the aisle could say that I've tried to surprise you. I've tried to trick you. I have been open and collaborative through this process. Even with regard to the ranking member's comments about amendments, when my work product was done, I've given it to the other side right away. Immediately, I've sent it over. I would just note that if we're talking about engaging with an in and open process, I would also note that to understand there's a number of amendments that are going to come up today, coming from the minority. And I would just note that I've given you everything. This side has provided you everything to prepare as soon as we've had it. And I believe that the amendments that are going to come today have not been provided to me. And so if we're going to be open with each other, I should give you everything, and you should reciprocate and give me everything. I've received 2 amendments. You give me 2 amendments, one at 8:53 today and one at 8:20 today. But those aren't the 2 amendments that we've already heard. You sprung those on me. And you're going to spring more amendments on me today later. I haven't sprung anything on you because I think that this is important to work together on. And again, phone calls, stopping in the office, I can only go so far. And if someone won't sit at the table with you to try to go, how do we work out our differences, you can't negotiate with yourself. And I've kind of found myself in that place. But I know the chairman, his office has been open. And as we move through today, and hopefully onto the floor. My door will continue to be open. I will not shock, I will not surprise. I will continue to be open and fair, and I hope that I will get that same respect from my friends across the aisle that I've offered to them as we move through what's very important to many of our constituents. With that, I would yield back to the gentleman from North Carolina.
Gentleman from North Carolina, yield back.
Yes,
Gentleman from North Carolina yields back. Is there further debate on the amendment? For what purpose, the gentleman from New York seek recognition?
Move to strike the last
Gentleman
word.
is recognized for 5 minutes.
Thank you all. I yield to the ranking member.
Thank you very much, Mr. Chairman. I'm a bit surprised at Mr. Duffy and the way he's describing the negotiations or the lack of. As I recall, I first started out negotiations in your office, Mr. Henselin, and I never received anything in writing from you, and when my staff attempted to meet with your staff or Mr. Duffy's staff, we could not get any meetings arranged. As a matter of fact, the only paper that was submitted was paper that I submitted to you, Mr. Duffy, and that was a couple of days ago after we have been unable to get anything from you in writing. So negotiations, as far as I'm concerned, is not simply me telling you what I want, even though I know you have the numbers. Negotiation is about two folks sitting down. Each of us have our ideal. We go through it one by one, two by two, three by three. You agree, disagree. We see if we can come up with some kind of modification where the agreement and the disagreement is. If we can't, we strike that off. If we can, we retain that. But negotiations is not simply you tell me, but I'm not going to show you anything in writing.
Would the gentlelady yield?
And let me just say this before you finish. I think that you have acted in basically good faith.
Thank you for that.
For the most part.
Whoa.
For the most part.
I don't thank you for that.
But I want you to know I think I've acted in better faith. And I want you to know that there were too many times when I talk with you that you seem so uncertain and that you had to go and either think about it or check in. I don't know which it is. And so let me just say this to you, that I do not want anyone to leave here thinking that I didn't return your calls. You know that's absolutely not true. I came to your office. I came looking for you. As a matter of fact, I came to your office uninvited, knocked on your door and said, I got to talk to you when you had been hiding from me. I mean, when I couldn't find you.
Would the gentlelady yield?
And so I wanted to be clear.
If I could, would you yield?
I certainly believe in negotiations, but I believe in fair negotiations. I don't believe because you simply have the numbers, you don't show me anything, and I'm supposed to unveil to you whatever it is I want. I think you have to do it in a dual manner with the two people sitting down again, as I attempted to describe a moment ago. So here's what I believe. I believe that this bill that you're presenting is not a real reauthorization bill. I believe that I would rather not mirror simply the Senate and offer it for reauthorization if we could really negotiate. I think that we need time. We need to put forth another effort. I do not think we need to do it in the way that we're doing. And I know that you don't believe that you just put reauthorization in at 12 midnight, was it 11 or 12, and think that somehow that I'm to believe that you're sincere about this being your best effort at reauthorization. I think we can do a lot better than that. And I'll yield time to the gentleman.
And actually, the time belongs to the gentleman from New York.
I yield to Mr. Duffy.
Thank you. And I would just note that my first offer to you was the bill that I put out. And you were able to see that, and I needed a response from you, which you did come with 2 days ago, and I would say that we made a lot of progress together. There was a lot of issues that we worked on. Grandfathering can be very difficult. We were coming to an agreement on what we do on grandfather properties. You had concerns about affordability in poor communities like I did, and we were making progress. And maybe I'm wrong in that I felt like the negotiation was cut off and said, well, I can't do these things, and we walked away. And listen, but that's what we did together. I'm hopeful we can ramp up and continue after today. In regard to reauthorization, you did bring that up several times, and I said that's coming in an amendment. We're going to do 5 years. You said the mitigation money isn't in there, and I said that's coming in the amendment. It's going to be 200, I mean, I told you those things. It's $225 million a year, $1 billion over 5. So again, I think you can't say that I was trying to shock you. I've been honest with you, and you did, when I didn't get a piece of paper, I didn't come to your office, and I do appreciate you did storm into mine, and you did give me your phone number, and you did call me back. So enough probably on the negotiations, but hopefully we can sit back down and work through differences and come up with a product that's bipartisan. I yield back.
Reclaim your time.
There's,
The gentleman agree that,
there's no time to reclaim. I would be, no, it's in the red.
Thank you.
I'd be more than happy to ask unanimous consent to allow the ranking member to have 30 seconds. That's all right, we'll move right along. For what purpose does the gentleman from Pennsylvania seek recognition?
I move to strike the last word.
Gentleman is recognized for 5 minutes.
I want to thank Chairman Henschling as well as Chairman Duffy and Luckemeyer for their hard work on this flood insurance reform package. As a member of the Housing and Insurance Subcommittee, I know how much time and effort went into crafting these bills, and I appreciate just how challenging it has been to get us to this point. I am especially appreciative that Chairman Duffy has agreed to include my amendment in his manager's amendment. As many of my colleagues may know, the Amish and similar religious communities have a tradition informed by their religious obligations of paying for community losses through mutual aid societies. Accordingly, Amish communities and similar groups do not purchase typical insurance products. This causes problems for traditional communities in flood hazard areas. That's why late last year, banking regulators began a joint rulemaking to determine a way to allow these faith communities to satisfy their mandatory purchase requirements through existing and time-tested mutual aid society agreements. As the sole Pennsylvania member of this committee and a staunch defender of religious freedom, I wanted to ensure that the 70,000 Pennsylvania Amish, as well as the 230,000 other members of Amish communities in places like Ohio, Indiana, and New York, can continue to practice their faith and traditions without being forced to purchase a product that does not comport with their religious convictions. Under this amendment, certain mutual aid society guarantees may satisfy the mandatory purchase requirements. I worked with the OCC and the National Association of Insurance Commissioners to draft compromise language that will provide these communities and regulators with clarity and guarantee that bad actors do not take advantage of the law. This amendment defines what an acceptable mutual aid society is, and it protects the power of state insurance regulators. Most importantly, my proposal guarantees that these religious communities can continue their traditional practices without hesitation. Ultimately, this amendment is a victory for religious freedom, and I once again thank the chairman for including it in the manager's amendment. I also want to associate myself with the earlier remarks of my colleague, Dennis Ross from Florida. And I cannot overstate the importance of drawing private capital into this very critical product line. We've heard from state commissioners, particularly the state commissioner of Pennsylvania, state insurance commissioner, how important it is to attract private capital in, and that's what this bill does. I also want to applaud the transparency elements that have been built into this underlying legislation regarding premium methodology and data related to a particular property. These are good things, and I look forward to supporting this package of bills as it moves through the committee and onto the House floor. And with that, I'd be happy to...
Would you yield to the gentleman from New Jersey? I think he's seeking time.
Happy to yield time to the gentleman from New Jersey.
Well, thank you. I also wanted to make a brief remark. I'll have a few amendments and I'll speak to other things, but one element of this bill had concerned me, and that was the treatment of multiple loss properties. The original bill had imposed a requirement that if a property had two $1,000 losses over a 10-year period, that a mandatory $5,000 deductible would be applied. And I just want to thank the chairman, as we worked through that, for recognizing that would pose a real imposition on people that have had two minor losses over a decade. That's a long time. And in this manager's amendment, the chairman has changed that to now only impose that deductible on severe and extremely repetitive losses. These are properties that have had losses up to the value or even up to 1.5 times the value of the property. Losses, properties that have had multiple $5,000 losses. And I think that's much fairer. And I want to thank the Chairman Duffy for working through this, recognizing the need and fixing it in his manager's amendment. I yield back.
Gentleman yields back.
yield back my time, Mr. Chairman.
Is there any further debate on the amendment? If not, the question now occurs on the amendment offered by the gentleman from Wisconsin, Mr. Duffy. All those in favor shall signify by saying aye. Aye. All those opposed shall signify by saying nay. No. In the opinion of the chair, the ayes have it, and the amendment is adopted. Are there further amendments? For what purpose does the gentleman from Washington seek recognition?
I have an amendment on the desk, Mr. Chair.
We'll pause and allow the amendment to be distributed.
Did they call votes? Okay, thank you.
Oh.
The clerk will report the amendment.
Amendment offered by Mr. Heck, strike Section 506 relating to addressing tomorrow's high-risk structures today.
The gentleman is now recognized on his amendment. 5 minutes.
Thank you, Mr. Chairman. My amendment would simply strike Section 506 of the 21st Century Flood Reform Act in its entirety, and I want to thank Ms. Maloney and Mr. Christ and Mr. Meeks for working with me on this amendment. We come from literally completely different corners of the country, but each of us can see clearly how this section will be bad for our constituents. I would also note that this amendment enjoys the support of the National Association of Home Builders, which I think is important to note because amazingly missing in this discussion has been that which I have deemed the silent crisis, and that is namely the lack of housing in this America, our inability to provide sufficient housing for people. But I want to be clear. I support the development of a private market for flood insurance. Indeed, I support reform of the National Flood Insurance Program. I believe that we can develop a private market and reform the public flood insurance program, however, in a way that builds on the current system and minimizes disruption and uncertainty for our communities, our consumers, and our insurers. But that's not what Section 506 of this bill does. Rather than let a private market grow organically, it ejects policyholders. In fact, it kicks them to the curb from NFIP and makes the heroic assumption that there will be a private market ready to go in 4 years. We could probably find a reasonable compromise about how to treat new construction in special flood hazard areas. Section 506 bans that construction from NFIP altogether. And frankly, some of the exclusions seem quite arbitrary. Why is $1 million the cutoff replacement value for residential property to receive or renew NFIP coverage when you consider some of the land values in some of the areas and that the fact that some of these are multifamily structures? It does seem arbitrary. There's no basis for that figure. And some of the other provisions, like the phase out of grandfathering, well, that's just frankly unfair. It's a retroactive punishment. The initial draft of the 21st Century Flood Reform Act allowed state insurance commissioners, who are, after all, the ones who understand local market conditions best under our current state-based insurance regulation, to waive these exclusions if what can only be called this experiment fails. Frankly, I thought that the mechanism to do that needed some work, and I disagreed with the overall premise of the policy, but the waiver was an admirable recognition of the reality. You know, we can't wish a private market into existence overnight. And so I was preparing to offer for today's markup some technical changes to make that process work a little bit better. But late last night, quite frankly, very late last night, I learned that the waiver process had been restructured completely. Instead of relying on state insurance commissioners, a system that we trust and that I think has worked very well for 70 years, we have a completely hypothetical clearinghouse, which we heard about for the very first time, again, in the last 24 hours. And it is a clearinghouse, I might remind you that only has two kinds of policyholders that will be in it. It is a very narrow set of people that will apply, and we should all understand that when you limit the participants that narrowly, you're going to have risk assessment and insurance problems. Under it, a waiver is available only if a customer can't find a private alternative after a month, and if they receive a bona fide private offer. They have to take it. They are forced to take it, even if NFIP, with a 10% surcharge, would provide superior coverage at a lower price. And you know, I thought an awful lot of the point of the private market was offering consumers more choices. We're trying to authorize a program in the final analysis, and that which we should all remember, for millions of Americans who rely on it in the face of a very rapidly approaching deadline. We shouldn't be distracted by experiments or wishful thinking. Let's strike the divisive provisions like 506, focus on where we can work together, and get back to the bipartisan process that I think would yield a much better product. Section 506 as currently written is experimental and puts at risk families that live in our communities. I yield back the balance of my time, Mr.
Gentleman yields back. For what purpose does the gentleman from Wisconsin seek recognition?
Move to strike the last word.
Gentleman is recognized for 5 minutes.
First, I want to thank the gentleman. We've worked together on a number of different provisions and very well. I disagree and am opposed to his amendment, and let me just explain why. First off, with million-dollar homes, this is the cost of reconstruction of a home. This does not take into account the property value on which the home sits. So this is not the scenario where I have a great piece of land on the beach that's worth $800,000 and a little bungalow that's worth $250,000. That is not that scenario. This is one where you have a structure that is $1 million or more. And I'm just going to put this out there. Maybe your districts are different than mine. But if you have a structure that the replacement cost and value is over $1 million, I would argue by definition you're not poor. And I think Ms. Moore's district's probably similar to mine, and Mr. Cleaver's. You are probably wealthy. And so what we're trying to do is say, okay, with those $1 million structures, and you probably have some money, or even with new construction, let's move these properties into the private market. But through the clearinghouse, and this was some of Mr. MacArthur's language, he wanted to make sure there was a safety net, and I agree with him on this point. He wanted to make sure that if the private market doesn't take your policy, you're back in the NFIP. You're back in the NFIP, so everyone is going to still be guaranteed coverage. It's just that we're trying to move a subset of policies off the balance sheet of the federal taxpayer and into the private sector, which I think makes a lot of sense. If I can make a comment on the green movement, there's a lot of people, members of Congress on both sides of the aisle, but probably more on your side of the aisle, that says, why are we building? Why are we building in 100-year floodplains? We should be far more cautious with regard to environmental changes, in regard to new storms. We should leave this as green space. There is on your side of the aisle, the environmental side, that says don't build at all. Well, I know that some of my friends in New York and Florida would go wild over that, so that's not the proposal. But this is a proposal that says let's take future risk off the taxpayer rolls, try to incent it to go to the private market, and diversify risk. And if you can't do that, guess what? We're going to let you back into the NFIP. That's how reasonable we are with the language that we wrote. Mr. Heck, I want to tell you, I appreciate you sending over your amendment early. But I just want to make sure we're on the same page of what we're trying to do here. I'm not trying to kick anybody out of the NFIP. I'm not trying to have a group of people who can't get insurance. I don't want that to happen to anybody. That's why we structured this in a way that is going to guarantee insurance and coverage for people. It's just new construction and wealthy people with million-dollar structures. We want to push you, nudge you into the private market, which we hope will exist. And if it doesn't, you can't get a decent rate, you're going to come back to the NFIP
Will
with that.
the gentleman yield?
I would yield to the gentleman from Michigan.
Well, thank you. I'm stunned at the argument coming from the other side of the aisle, because the accusation is that this side of the aisle, all we care about is wealthy people. And we have with straight face folks arguing that $1 million structure in a 100-year floodplain, voluntarily put into that, into that floodplain, those people need protection. And here we are arguing that, you know what, maybe they ought to have skin in the game. Maybe we ought to have them into that private market. And I'm baffled again as to why this is a line of defense or a line of demarcation that you have when we're supposed to be fighting for the taxpayer, for Joe and Jeanette taxpayer that are out there putting their hard-earned tax dollars at risk. And if we can develop this, and I will admit, from the beginning, I was a little skeptical of the clearinghouse, and I talked through this, and we had a couple of conversations, and I think that this is a reasonable direction to go, because as the chairman points out, we are not cutting anybody off. They are going to have that ability to get in. It's a moving that in that direction. And I understand that there are, again, some folks that believe that they don't have a choice other than building in those areas. I would challenge that a bit, but again, that $1 million threshold does not seem to be middle class.
Time of the gentleman from Wisconsin has expired. For what purpose does the gentlelady from New York seek recognition?
Thank you, Mr. Chairman. I move to strike the last word.
Gentlelady is recognized for 5 minutes.
Thank you. I am pleased to join my colleagues, Mr. Heck, Mr. Christ, and Mr. Meeks in offering this amendment. And our amendment would strike Section 506, which is, in my opinion, one of the most harmful provisions in the entire bill. Section 506 of this bill would prohibit federal flood insurance policies altogether after 4 years for new structures that are either in special flood hazard areas or that have a replacement cost of more than $1 million. Because of global warming and climate change, huge swaths of New York are now in special flood hazard areas. They weren't there before, but the environment is changing. Scientists are predicting that eventually all of Manhattan is going to be in a flood hazardous zone with global warming. Also, the $1 million mark, New York is multifamily housing. We don't live horizontally, we live vertically. Practically all of our structures are over $1 million because many people live in our apartment buildings. And even if FEMA waives this prohibition, there'll be a 10% surcharge on all federal flood insurance policies for these new structures. Under the manager's amendment, FEMA would have to waive this prohibition for each individual homeowner, which is, in my opinion, completely unworkable. And the manager's amendment would set up a complicated new clearinghouse run by a third party, not FEMA, that every home buyer would have to go to in order to apply for flood insurance, which would supposedly provide the homeowner with offers from private insurance. We entered and created the National Flood Insurance Program in 1968 because we did not have private insurers, and I respect the majority's enthusiasm for private insurers, but they're practically non-existent at this point in New York. So this system would needlessly delay the home buying process and is ripe for conflicts of interest between private insurers and the private party running the clearinghouse. So I don't view this any better than the language that was in the original bill. Now, I understand that the manager's amendment makes improvements for multi-unit properties where the total replacement cost, especially my district, is certainly more than $1 million, and I appreciate that change, but I still have serious concerns with the rest of the Section 506. It still applies to any new construction in a flood zone, and again, huge swaths of New York are now in flood zones. They weren't there before because of global warming that Mr. Perlmutter pointed out, and we expect practically the whole area to be under flood in the future, even when the replacement cost is less than $1 million. But what does new construction mean? Is it new construction when a homeowner adds a new garage or replaces the roof? Technically, that is new construction, which means that this provision will likely affect existing properties too. So we need to clarify that. So this provision really applies very broadly, which makes it even more concerning to me. Private insurers have not been active in flood insurance market for nearly 50 years. So in my humble opinion, I think it's unrealistic to expect private insurers to be ready to take FEMA's place in just 4 years. And this means all these new homeowners will have to pay a 10% surcharge on their flood insurance. And that, I feel, is unacceptable and not fair. So I think this provision is simply too harmful, and I believe it should be removed, which our amendment would do. I urge my colleagues to support this, and I thank Mr. Chris, Mr. Hecht, and Mr. Meeks for their work on this amendment. I'm honored to join them, and I yield back.
Gentlelady yields back. For what purpose does the gentleman from New Jersey seek recognition?
I move to strike the last word.
Gentleman's recognized for 5 minutes.
I'm actually sympathetic to the amendment, mostly because of the inclusion of every new home after 4 years in the special flood hazard area. And I'm also concerned about the negative impact on construction that the gentlelady from New York mentioned. The inability to get insurance equals the inability to get a mortgage. And so that concerns me. I think, though, that this amendment goes too far. And I think by tossing out the entire section, 506, you're throwing out the baby with the bathwater. This change to the manager's amendment, I think, does accomplish some important things. First of all, $1 million homes can, in fact, get insurance in most cases in the surplus lines market, and I don't think we need to have Americans of more moderate means subsidizing those homeowners. So I will be proposing a separate amendment dealing with this section that will, I think, make improvements to it, but I would urge a rejection of this wholesale rejection of Section 506.
Will the gentleman yield?
Yes.
Sorry, back over here. Because this is a legitimate question, both for you and for my colleague from New York. Because I think you have a point. And on this committee, we spend a fair amount of time in New York. I've been down to Lower Manhattan a number of times. I've seen them installing floodgates in a number of those buildings that were flooded during Sandy. That's a preventative remedy that they're trying to get. But the argument that I'm trying to figure out is, one, whether flood insurance covers apartment buildings. I don't think so. So that seems to be a bit of a moot argument. Two, if it is a condominium and there's individual ownership, and I'm not clear on this, so this is a legitimate question. Is it the individual condominium owner that needs to go in and get that flood insurance for that mortgage to be moving forward, or is it the condominium association? Originally the developer, and then eventually the developer passes that along onto a condominium association. Is the association somehow, because presumably if you're on the 7th floor, if your 7th floor condo is flooded, we're in real trouble, folks. At some point or another, you're assuming it's the basement, the common area, and those areas that would be affected. And I'm curious if you know or have thought through that, or my friend from New York has.
Reclaiming the time, I don't know the answer to that. I suppose it depends on the individual contracts between condo owners and their association.
Would the gentleman yield to the chairman? I believe the answer is both. And that is, you have common areas within the condominium, and then you have non-common areas. And so the answer is both.
Will the gentleman yield?
But let me just finish answering that question, though. My concern, though, is more the individual homeowner, and as was alluded to, there's a distinction here between the land on which a property is built and the home itself. I'm concerned about individual homeowners who, in fact, may have much more tied up in the value of the land, and if they can't build on it because they can't get insurance, I think it's a form of taking from them, and I think it's unrealistic. So, as I said, I'm sympathetic to the amendment. I just think it goes way too far, and doesn't address legitimate concerns that I think are intended by the chairman. So I would urge rejection of this amendment, and I will propose something that I think is a little bit more finely tuned that gets at the issue. I yield back.
Gentleman yields back. For what purpose does the gentleman from Florida seek recognition?
Thank you, Mr. Chairman. I move to strike the last word.
Gentleman is recognized for 5 minutes.
Thank you very much. I want to thank my colleagues, Ms. Maloney, Mr. Heck, Mr. Meeks, for their leadership on this amendment to strike Section 506 from the 21st Century Flood Reform Act. This is a good common sense amendment, and I'm proud to support it. The National Flood Insurance Program must maintain a broad risk pool to stay healthy, which means that all types of properties and people should have access to it. Section 506, however, would not only restrict access to the program, but would also reduce income into the National Flood Insurance Trust Fund. This would ultimately weaken the program, drive up rates, and negatively impact the housing market in countless communities, including my home of Pinellas County, Florida. In short, it will make the problem worse. Section 506 would also subject homeowners to the cyclical trends of the private market and punish them with 10% surcharges simply because the private market may not have fully developed in their hometown, something they have no control over. Families will constantly have to worry. Will I or won't I be able to access affordable and dependable flood insurance? Will I be forced to pay more simply because the private market has not fully developed in my area? Will the private coverage that I have now still be an option in the next year? Or will my insurance company pull out of the market the same way property insurers did after Hurricane Andrew, and again after the hurricanes we experienced in 2004 and 2005? How am I supposed to budget properly when I don't fully know what my expenses might be? Will I have to leave my home? In Florida, insurance is a middle-class issue. It's a kitchen table issue. I'm also disappointed that Section 506 goes after grandfathered policies. Grandfathering provides stability to the housing market, protects those folks who have done everything right. Take one of my constituents, for example. Scott is a retired scientist who lives on a moderate income and has owned his home in St. Petersburg for 24 years. It is his American dream. I might also add that Scott's home has never flooded, knock on wood. Scott also has a grandfathered National Flood Insurance Program policy. If grandfathering would be eliminated or phased out, Scott could lose everything. Years of hard work, savings, and investment would be gone, just like that. Let's do right by Scott and the millions of other policyholders whose livelihoods depend on the National Flood Insurance Program, remaining accessible and dependable. I would urge my colleagues to support this good amendment. Thank you, Mr. Chairman. I yield back.
Gentleman yields back. Who seeks recognition? For what purpose does the gentlelady?
Okay.
Mr. Chairman?
Is there anybody?
I have spoken.
For what purpose does the gentleman from Michigan seek recognition?
I move to strike the last word.
Gentleman's recognized for 5 minutes.
With that, I would like to yield to Chairman Duffy.
I appreciate the gentleman for yielding. Just to make a couple of different points, the gentleman from Florida mentioned Scott, who has a grandfathered property. I think it's important to note that because Scott is grandfathered and doesn't pay a rate that's consistent with the risk of his home, what Scott does is says, well, I want to look to Jimmy and Kathy who live down the street, and I want Jimmy and Kathy to pay a little bit higher premium to subsidize my lower rate, because that's what's happening. And when we talked about grandfathering, all we did was put the grandfathered properties on a slight escalator, bringing them closer to actuarial sound rates. And 4 years from the date of enactment, we were going to not grandfather any new properties. We weren't taking old grandfathered properties out. You'd still be grandfathered to 4 years from now if you're grandfathered today. Let's be very clear on the language of this bill. Okay. Grandfathered today, grandfathered 4 years from now, though on a slight escalator back to actuarial sound rates. I would, as the gentleman from Michigan pointed out, I don't know how many people on this committee could actually, with a straight face, tell us that if you have a structure of $1 million or more, that you aren't well off in we shouldn't push you into the private market. And if you can't get a policy in the private market and you come back to the NFIP, you couldn't afford a 10% surcharge. I know that in Wisconsin, Ms. Moore and I, in our communities, if you have $1 million structure, not including the land, you are wealthy. You have a lot of money, and I'm sure that in Mr. Cleaver's and Mr. Scott's district as well, share my viewpoint of what wealth is, and you can pay a little bit more for these policies.
Would the gentleman yield real briefly on that?
I would yield.
I just want to point, let's do the math, folks. If you got $1 million structure, and you have a $3 mil tax rate, that's $3,000 a year that you're paying already, just in property taxes. If you have a 6 mil rate, that's $6,000. I mean, we're talking, this is not the majority of what your costs and your expenses are for maintaining $1 million structure, again, structure, not value of property, $1 million structure home. And I think that's important to, point out.
Would the gentleman yield back?
I yield.
But I want to talk about new construction, and I know the gentleman from New Jersey and from Florida and others are concerned about this. If a private market is not available to you, you will be back in the NFIP. And again, we've talked about having a 10% surcharge, and that has created a great deal of debate. But if you are new construction in a 100-year floodplain, you are building to code or better than code, and you have no loss history. So the rate that you're going to get is going to be a pretty favorable rate. On average, in 2016, new construction, on average, because no loss history and up to code, was $658. $658. And so if we had a 10% surcharge on $658, you're going to go to $65 extra dollars a year. And to the ranking member's point, we don't want to shock anybody. This is not shocking anybody. We're trying to get folks into the private market, but the folks in Florida and New Jersey and other places that are building in some dangerous areas are going to pay on average $65 to $70 a year, not a month, a year extra. Let that sink in for a second. And one more last point. $1 million home. I don't know who wants to defend that. But in my district, check yourselves. In your districts, if you have $1 million structure, do you want to sit in this committee and say they can't afford an extra 10% if they're back in the NFIP? Because I can't defend that. I can't defend.
With the gentleman
that.
yield?
I yield back to the gentleman from Michigan.
Time belongs to the gentleman from Michigan.
And I will yield briefly.
Thank you. I wanted to answer your question, and then it's condos are covered, and but not the cooperative. But I also would ask unanimous consent to place in the record a letter from the National Association of Home Builders in strong support of it. And
Without
I
objection.
thank my colleague from New Jersey for his thoughtful contributions to the debate.
Reclaiming my time, I would love to explore this ownership and condo association
There's
situation.
no more time for the gentleman to explore at the moment. For what purpose does the ranking member seek recognition?
move to strike the letter.
Gentlelady is recognized for 5 minutes.
I just want to engage a little bit more on grandfathering. Grandfathering rates are extended to policies when the flood risk in an area increases after a revised or updated flood map is introduced. Grandfathered rates help protect policyholders from sudden increases in their flood insurance premiums due to events outside of their control. These are homes that were built to code. I mean, they followed the law. I mean, they were built to code before the new flood map was adopted. And these are homeowners who calculated the affordability of their overall housing costs based on the level of flood risk that was known to them at the time. In other words, these are people who did everything right. Grandfathered rates also help maintain stability in the housing market by ensuring that home values do not depreciate suddenly as a result of increases in flood insurance premiums.
Significant depreciation of home values could also increase the chances of foreclosures. And because new flood maps affect entire communities at once, the collective impact of increased foreclosures could tip certain neighborhoods into decline. We also know that the NFIP continues to lose policyholders as the premiums become less affordable. The loss of coverage leaves these homeowners unprotected. As the American Bankers Association put in their letter to the committee, as properties lose NFIP coverage, these properties lose value and increase the risk of abandonment or foreclosure. In some flood-prone communities, this could lead to a local or regional foreclosure crisis. We're not speaking in hypotheticals here. We know what happens when you take away grandfathering. We saw it in the aftermath of Biggert Waters when thousands of homeowners contacted their members of Congress about the devastating impacts of this repeal. Premiums went up, home values went down, and families sent us their house keys because they knew they needed to consider moving out of their homes. We cannot go down this road again. We need to ensure that policyholders who responsibly purchased homes that were affordable to them and who responsibly maintain flood insurance coverage are not later penalized for changes to flood maps that are entirely out of their control. I yield back the balance of my time.
Gentlelady yields back, seeks recognition. The chair yields to himself just to say, I feel the gentlelady's pain when she says these people did everything right. My constituents did everything right, and yet they saw their health care premiums skyrocket and their deductibles skyrocket under Obamacare. Yet they did everything right. And so, again, I want to make it very clear that the underlying legislation grandfathers the grandfathers. They're grandfathered. I don't know how many more times we can say that. It simply doesn't create new ones. Again, this debate really comes down to this. Number one, do you believe that people should have options when it comes to flood insurance, or should there be a perpetual government monopoly as we see today? Second of all, a monopoly which, by the way, is going broke and getting broker all the time. $1 billion for actuarial deficit a year. And again, I continue to just be astounded by those who will defend the factory worker, the farmer, the white person subsidizing the millionaire's beach condo. I just don't get that, particularly when I think about the constituents in my own district. Somebody's going to pay for this risk. If the risk changes, somebody's going to pay for it. So I appreciate what the gentlelady says, the ranking member, about, well, they did everything right. Well, guess what? You know, so did the single mom in my district who drives the UPS truck. She did everything right. Why is she being asked to pick up the additional risk so that somebody can enter into a new grandfathered property, a brand new grandfathered property? I don't get it. I can't justify it. I won't support it. Again, I don't know how many numbers have to flip by on the national debt clock. Either we're going to make this program sustainable or we're not. And at some point, again, somebody's going to bear this risk.
Well,
Here's a radical idea. Why not the person who has the policy pay for that risk? I'd be happy to yield to my friend.
Well, I appreciate it. And I've got a question for you. Does grandfathered properties mean grandfathered?
Grandfathered properties does indeed mean grandfathered.
Okay, great. Do new properties, by definition, mean grandfathered?
No.
Okay, just wanted to clarify that. But grandfathered properties are grandfathered?
Yes.
Okay. If you don't mind me taking a couple of minutes, I would like to explore this question yet, because I'm really been thinking back to some of my own developments and some of the other condominium questions and liability for this, because I think this is an important element. As I think I heard the gentlelady from New York say, that the associations would not be eligible to purchase or hold the flood insurance. However, the individual condominium owners would.
Co-ops would not be eligible.
Co-ops would not? Okay. And how about, and I don't know enough about how New York City co-ops work to know whether that's different than a condominium association. Are we using two different words for the same thing?
They're different. I mean, a co-op, you buy shares in the building and you own shares in the building. A condominium, you own your unit.
You own your unit, but there's still common area that then is owned by a condominium association.
Yes. But the condominium association is different from the co-op association.
Okay. So as we are looking at this, so then it would be a share of, if you have a co-op, you would own a share of the liability, correct?
Co-ops cannot be covered, period.
Okay. So if a co-op...
Well, if I could, or just reclaiming my time for a moment, I do believe that in the Zeldin bill that was debated earlier, there is a study precisely on this issue dealing with co-ops.
Okay, I appreciate that. Well, I'll yield back to the gentleman, or to the chairman, but I think that as I understand how this would work, if you have an association that isn't able to draw down on an individual's policy, and if that policy is in a building that could be flooded, but it's not your particular area, how in the world does the NFIP cover that particular structure, even though it would be out of the actual flood plain or the flooded zone of that? But I'll yield back.
The chairman yields back. Who seeks recognition? For what purpose does the gentleman from New York seek recognition?
Strike the last word.
The gentleman is recognized for 5 minutes.
Thank you, Mr. Chairman, and I know when I've heard the colloquy at some point with the ranking member and Mr. Duffy, et cetera, just talking about how at least we think that we're trying to work in a bipartisan manner, but clearly there are bills and there are some proposed reforms in this bill that are of significant concern to me. Let me but first thank Mr. Heck, Mrs. Maloney, Mr. Christ, for working with me and others on an amendment to strike Section 506, which I think is misguided when considering its practical effect. I don't think this section stems from a bad place. I believe, as I listen to my colleagues on the other side, may be well-intentioned. However, in application, Section 506 will hamper development and economic growth in communities that need it most. Section 506 would disallow the National Flood Insurance Program coverage for new construction in special flood hazard areas. Why spend taxpayer money to build properties in such risky areas? That, you can say, is a fair question, and I'll answer that why. Because Section 506 is a poor response to that question. Furthermore, if you consider all other alternative responses to flood risk, Section 506 seems short-sighted. In New York City alone, 400,000 residents live in special flood hazard areas. 400,000 residents equal more than 1/2 the population of your average U.S. congressional district. 400,000 residents equal nearly 70% of the population within the state of Wyoming. Discouraging new construction in these areas will halt economic development in well-established communities in New York City, many of which are already struggling. For example, let's consider the Rockaway Peninsula, which is in my district. Though the Rockaways includes beautiful beachfronts, by no means is it an ultra-wealthy community. Many of my constituents in the Rockaways are moderate-income, middle-class homeowners with long-established family ties to their community. We do not shut down economic activity in these communities. We should build for resilience in these communities. An alternative approach to achieving Section 506 goals is to require more resilient new construction in flood-prone areas. Although most of the Rockaways were ravaged by Hurricane Sandy, one community on the peninsula stood out unscathed because of resiliency. Auburn, Queens, a middle-class community, weathered Sandy not because of good fortune, but because of good forward-looking planning and building during the late 1990s. At that time, developers planned for rising sea levels, storm surges, and major hurricanes. New homes built were elevated above requirements. Though coastal areas are experiencing rising sea levels, the risk outlook for Auburn remains positive and economic activity in that area remains robust. We should be encouraging such sustainable building in flood-prone areas, not discouraging economic development altogether. Second, I'm concerned with Section 506 apparent repeal of grandfathering. A recently commissioned New York City report found that removing grandfathering drastically increases premiums for families where maps are revised. Households that followed the rules, built to the code, could see their premiums increase by thousands of dollars. Mr. Chair, 25% of New Yorkers in the floodplain struggle to afford flood insurance. That number will increase to at least 33% once maps are updated. Removing grandfathering would intensify this problem, making flood insurance even more unaffordable for all Americans. On this committee, we've all celebrated the benefits of owning a home and having a stake in one's community. Mr. Chairman, unaffordable flood insurance has been a barrier to that dream. And with that, let me urge my colleagues to support this amendment. Let's not make flood insurance more unaffordable by repealing grandfathering. Let's encourage sustainable development and not discourage economic activity in long-established communities. Let us let the middle class continue to enjoy what has been called the American dream, and let's not let that dream turn into an economic nightmare for them.
Will the gentleman yield?
I yield.
According to...
Regrettably, there is no time to yield. Seeks recognition. Is there any for what purpose does the gentlelady from Wisconsin seek recognition? Gentlelady is recognized for 5 minutes.
Thank you very much, Mr. Chairman. We have just heard the gentleman from New York give an excellent presentation on this amendment and on the grandfathering that he talked so eloquently about, and which we have been trying so desperately to negotiate and talk about, and trying to help our colleagues understand that these people did everything right. They built to code, and it's not fair to all of a sudden have them to have to basically be responsible for higher costs that they had never anticipated. But more than that, according to FEMA, which reviewed the legislation, and I just got the information, all grandfathering would be eliminated under this bill. Currently, grandfathered properties lose that status by the required premium increases the bill creates. So this business about not allowing any new grandfathering 4 years from now as the only thing that's been done to grandfathering does not seem to be true. And I just want to warn members that this is a huge issue that we discovered in Biggert Waters, and this is an issue that we were bombarded about from homeowners all over this country, not just in the well-known flood areas, but some areas that experience flooding perhaps not as frequently and not as big. So I just want to thank the gentleman for his discussion. I want to thank Mr. Heck and Ms. Maloney and Mr. Meeks for this amendment. The two areas in this amendment are extremely important, especially this grandfathering. And on the other half, about building in flood areas, you know that I wanted to work very closely with you to get some kind of a compromise. I mean, this is a concern of mine. But more than that, I think I told you, Mr. Duffy, that I was in Louisiana and Mississippi after Hurricane Katrina. And I was shocked at the fact that the private insurance companies abandoned those areas, completely left and left them unprotected. And I don't know, as someone mentioned here earlier today, where are all these private insurance companies anyway? And are we going to see the same thing that we saw after Hurricane Katrina, where they just left people unprotected? With that, I yield back to the general, just for a moment. Oh, I'm sorry, Mr. Chris was on this amendment also. I want to thank you very, very much. I know that you indicated a lot of concern when we had our caucus to deal with this issue. And since I have a few more seconds here, let me just say to the chairman, I thank you for your passion about some of these issues, but I don't want people listening to think we're talking about health insurance. It has been mentioned several times here today. And I'm not so sure that the comparison that is attempted to be made by the chairman really makes good sense, but I just want everybody to know this is not about health insurance. This is about the National Flood Insurance Program. Thank you. I yield back.
Does the gentlelady from Wisconsin yield back? Gentlelady yields back. Is there any further debate on the amendment? If not, the question now occurs on the amendment.
Mr. Chairman,
Yeah, for what purpose does the gentlelady from New York seek recognition?
like the last word.
Gentlelady's recognized for 5 minutes.
Mr. Chairman, I want to thank Mr. Heck and my friends, Mr. Meeks and Ms. Maloney, for offering this amendment. As Mr. Heck and Ms. Maloney said, New York City was devastated by Sandy. New York City is a high-risk flood area, and Section 506 will prevent new building in high-risk area. This hurts New York City working families. It hurts my district, the Lower East Side part of my district, Red Hook, that was devastated. It's a working families community, and this will be detrimental to the well-being of my constituents, and therefore I urge adoption of Mr. Heck's amendment. I yield back.
Gentlelady yields back. Is there any further debate on the amendment? If not, the question now occurs on the amendment offered by the gentleman from Washington. All those in favor shall signify by saying aye. All those opposed shall signify by saying nay. Nay, in the opinion of the chair, the nays have it. The amendment is not adopted. For what purpose does the gentleman from Washington seek recognition? Recorded vote has been requested. All those in favor of recorded vote shall raise their hand and be counted. Sufficient number having raised their hands, a recorded vote is so ordered, and pursuant to subsection C5 of Rule 3 of the committee rules, further proceedings on the amendment are postponed. Is there further amendment or discussion? For what purpose does the gentleman from New Jersey seek recognition?
Mr. Chairman, I have an amendment at the desk.
Mr. Chairman.
We'll pause for a moment. Who seeks recognition? Who seeks? Who?
I thought I was next.
Okay. I thought I heard another member. We'll pause and allow the amendment to be distributed. The clerk will report the amendment.
Amendment offered by Mr. MacArthur, page 3, strike
Mr.
amendment.
Chair, I ask that the
5.
amendment be considered as read.
Without objection, the gentleman is recognized on his amendment.
Thank you, Mr. Chairman. There would be a certain logic to me proposing my amendment on the Section 506 that we've been talking about. However, I'm going to switch gears now, and I'll come back to that later. I would like to propose an amendment on Section 101, which deals with the amount of premium increases that will be permitted under the Act. Just to give a little context, I am in one of the top 5 states in the National Flood Insurance Program, the state of New Jersey. My district in southern New Jersey experienced fully half of all of the Sandy losses from that event. And I represent a state that has nearly 100,000 properties that are pre-firm, considered pre-firm. These are properties that were built before the end of 1974. These are homes that are 40 years or older. They're moderate homes for the most part. These are not mansions. These are moderate homes built along the shore. And so I'm very concerned that we don't increase premiums too quickly for these people. I am very grateful. I want to make clear, I'm very grateful that we're dealing with a 5-year reauthorization so early. You know, here we are months before the deadline, and we're actually seriously attending to this, and I appreciate that. If all of Congress worked that way, we'd have a lot less crises around here, and so I thank the chairman for that. To understand the amendment, I would suggest you not really look at the amendment. It's written as amendments are in a lot of references to the original bill, and it's impossible to understand it by looking at the striking of words and semicolons and such. The effect is this simple. It strikes the 8% floor on rate increases and therefore leaves the rate increases at 5%, which is what they are under law today. Why am I doing that? Quite simply, I think one of the witnesses at our hearing said it really well. Increasing the 5% floor does more harm than decreasing the ceiling to 15% does good. 5% is twice the rate of inflation, and I believe it adequately moves us towards actuarial soundness, which I am committed to, as I know the chairman is. I want to see this program become actuarially sound, but I don't want to break the backs of people, ordinary Americans that live in modest homes, people of modest income. I simply don't want to see them get rate increases that are too difficult. And so I am proposing that we have the band be 5% to 15%. I accept the ceiling. I just think the floor should be reduced. With that,
Would the gentleman yield to the chairman?
Yes, I do.
Well, I appreciate the opportunity to work with the gentleman throughout this process, as I know the gentleman from Wisconsin, Mr. Duffy, has as well. And certainly the gentleman has been a tireless, if not tiresome, advocate for his constituents in New Jersey. Again, we are committed, most of us, to ensuring that this program becomes stable over time, that people are graduated into paying actuarially sound rates so the other 96% of Americans who aren't in FIP don't have to subsidize the floor. There's a lot of different ways that we can deal with glide paths and affordability. I will not abandon the goal of assuring that ultimately this program is sustainable and that people are paying actuarial rates. I'm not prepared to accept the gentleman's amendment at this time, but if he would consider withdrawing it as we move through the process, as we go to the floor, I am more than willing to explore other options and other opportunities and other glide paths to assure us making the program sustainable and getting people paying proper, fair actuarial rates. And I'd yield back to the gentleman from New Jersey.
If I can respond to that. Mr. Chairman, I do appreciate that you and Chairman Duffy have both worked with me on a number of concerns. Forgive me for being tiresome. But the reality is I go home, I visit with my constituents, and I know they're ordinary Americans. They're not rich people. And I think sometimes we get the misconstrued idea that people that live on the coast they must be rich. That's just not the case. These people's homes were built, as I said, the homes we're talking about, they were built 40, 50, 60 years ago. They're converted bungalows that started with no heat and were only summer residences. And I just want to be sure that we are reasonable with them as we increase the premiums. I appreciate your offer. I recognize this is not my last vote on this bill, and therefore I will withdraw the amendment and look to work with you in the coming weeks to fix it.
I appreciate the gentleman. I will indeed work with him sincerely on his issue, and the amendment is withdrawn. Who seeks recognition? For what purposes the ranking member seek
Move to
recognition?
strike the last word.
At the moment, there's nothing to strike the last word on.
Oh,
Mr. Chairman.
He withdrew. Did he withdraw already?
The gentleman withdrew.
Yes.
You shouldn't have done that.
Are there... Who seeks recognition? For what purposes, gentlemen from Georgia seek recognition?
I have an amendment at the desk.
We'll pause and allow the amendment to be distributed. The clerk will report the amendment.
Amendment offered by Mr. Scott, page
Without objection, the
15.
reading of the amendment is dispensed with. The gentleman from Georgia is recognized on his amendment.
Thank you very much, Mr. Chairman. Mr. Chairman, a few years back, I, along with Ranking Member Maxine Waters, led the fight to help make a contribution to making flood insurance affordable. And one of the things that we did was we were able successfully to allow individuals to pay in a monthly installment as opposed to one lump sum. And that was a good move. Now, here we come with this effort from you, Mr. Chairman, to tack a $50 fee on each of those, on those who take monthly payments. Now, $50 may not seem a lot. It comes about $4. But the whole point is, it flies in the face of us doing something grand to reach out and help the poor. And then we come back and tack a $50 fee on it. And those who play by the year, they have no fee attached. So if you pay by 12-year installments, that's going to be the same as you pay by one lump sum. So why do the poor or those people that are benefiting from this have to actually pay more? Now, Mr. Chairman, you and I have gone back and forward on this whole issue of affordability. This sends a bad message to the poor. It is really a more of a shameful act. It's as if you are saying, on the one hand, here, we're going to help you with this, but on the other hand, oh, we're also going to punish you for this. Now, we know the industry has their standards, and they're going to come and say, well, they need to have something to pay for. But this is unusual. This is helping those families who need help the most. And let me just call to your remembrance, Mr. Chairman, about that man that went down the Jericho Road, and he fell among thieves, and they beat him up, they kicked him, and left him for half dead. He was in dire straits. Then the priest came by, didn't do nothing for him. The Levite came by, didn't do any for them. But there was that certain man, a certain man that has the same sensitive capabilities as you, Mr. Chairman, because I know you, and I know where your heart is. But he went and he put that gentleman on his horse, took care of his wounds, and then took him to the inn. Now, here's where the point gets important. He didn't stop there. He knew the man needed help, and he took care of him, paid the innkeeper, and he didn't stop there. He said, if it costs more, please put it on my bill, and I will pay you when I come back. Now, Mr. Chairman, many of us on this side of the aisle and some on that side of the aisle recognize that this flood insurance issue is going to grow more and more. I don't care how you feel about climate change or whatever. Anybody with any common sense of awareness knows our winters are shrinking. And at the same time, our ice caps in the north and the south are melting. What that means is there's going to be more of this. And let's not throw this insult. Yes, Mr. Chairman?
Well, I just wanted to know, under the gentleman's amendment, would millionaires be able to take advantage of it? And if so, would the tornado victims in the 5th District of Texas who are low income have to subsidize it?
Well,
Mr. I don't see an income level in your bill, in your amendment.
Well, as this is appealing only to the flood insurance, I will answer the question about the millionaires is they don't need that.
They don't need it.
This flood, and this is where the miscommunications is taken. Where they're saying, oh, can the rich people get the same thing as the poor people? I mean, these are life and death issues, Mr. Chairman.
Time of the gentleman has expired. For what purpose does the gentleman from Wisconsin seek recognition?
Move to strike the last word.
The gentleman is recognized for 5 minutes.
I want to tell Mr. Scott that I appreciate his amendment and his effort to help the poorest among us and prevent a fee from being paid to them. And I would just tell you, my experience on this committee is he has always been a powerful and effective advocate, and has always been fair. Not looking at partisan lines, but looking at what's best for people, probably more than anyone I've seen across the aisle, and I always appreciate that from Mr. Scott. I see this a little bit differently, though, and here's why. If we're going to talk about wealth and wealthy, and poor and wealthy, and if you don't have a whole lot of money and you own a home, at least in my community, you probably have a mortgage on your home. You probably haven't paid it off. I don't know if that's the case in your district, but in mine, that's usually the case. And if you have a mortgage, you're going to have a couple of options. You can, number one, go through the insurance company and pay that $50 fee and pay that monthly installment. Just like with your homeowner's policy, home insurance policy, or your auto policy. But if you also have a mortgage, you can choose the option of escrow, just like you do with your taxes. You can escrow that payment for your NFIP policy, and you will pay no $50 fee. Now, if you've paid your house off, you don't have a mortgage on your house, and you want to pay in a monthly installment, that's when you might say, well, I don't have the option for escrow. If I want to pay monthly, I'm probably going to pay the extra $50 fee. But I think what we're looking at, though, is there's an increased cost to do a monthly billing. And those who are taking advantage of the monthly billing, they're paying for the cost of the more frequent billing cycle. But again, we do have an escape clause. Does the gentleman want me to yield to him?
Yeah, Wood. When we visited this the first time, when Ms. Waters, myself, Barney Frank, several others, we fought hard for that. And we got it on there. No fee. There was no $50 fee then. And I know how this works. You articulated the procedures. Do you think that those poor people or those individuals who are taking this understand any of what you said? Or there is an agent, which there isn't, because we don't have the harmonization between the private insurance industry and the NFIP to even explain those arcane and complex figures that you and I share about. But here's the other point, Mr. Duffy. You and I have been at this long enough to know how this works.
I haven't been at it as long as you have, Mr. Scott.
But you're very articulate, and it's a pleasure always to work with you. Here is the point. Once you put it in writing, once you put that fee there, $50, then you got it written in so that it becomes a negotiable item going forward, and I guarantee you they're going to come back once that's in, and each time we go to redo this, they're going to say, hey, that wasn't enough. Let's raise that $50 to $70.
Mr. Scott, I do want to reclaim my time, not because I don't want to hear. I just want to make a counterpoint. I know you did work to change the language to make sure this option was available. But if you ask the NFIP, and if you ask people who are buying these policies, that option is not available to them, which is a greater concern. We say that a lot of things should happen, and then those who are supposed to implement the laws that we pass don't implement them. The NFIP is saying it's going to be another 6 or 7 years before they can accomplish the goal of the language that you worked on. I want to make sure that people have this option not 6 years from now. I want to give them that option today. And I'm trying to figure out a pathway, not to wait 6 years like the NFIP is telling me I have to wait. I'm trying to get this available to people right now so they can't escrow, they don't have one lump sum facing them in a January, right after Christmas. And
But
that's what I'm
since
trying to-
this, as if you yield 1 second, but since we've had this in there have been no indications where this is so desperate that we need.
It's not working.
My one argument is that once you put that figure in there, it stays and it grows.
Time
That's not
time
my
of the
intent, Mr.
gentleman from Wisconsin has expired. For what purpose does the ranking member seek recognition?
I move to strike the last word.
Gentlelady is recognized for 5 minutes.
Before I speak directly to the $50 issue, I want to speak about something else. I want to speak about all of the talk about cooperation. I want to speak about, those who say they attempt to work on with the opposite side of the aisle in order to get things done and to respect each other's work. I want to talk about the fact that Mr. Scott is one who works across the aisle more than anybody else on this side of the aisle. And he does it oftentimes when I and others disagree with him because he believes he's doing the right thing. And so I'm watching how this very simple idea is being rejected. This very simple idea that he feels so passionate about for lower income people who are trying to own a home and pay all of the fees and all of the other costs of owning a home. And he's making a biblical plea on this issue, and he's being rejected. What kind of message does that send to all of us who think that we can enter into negotiations and be heard, even on the simplest of matters? I think this does not bode well for our ability to respect each other and to work together and to look for areas where we can support each other, where we can come together. I know some of these other issues are huge and they're extremely complicated, and it's not easy to get to a consensus or to even halfway negotiate. But this issue that Mr. Scott is putting before us, $50 payment for those who are too poor to pay the full amount of their flood insurance premium, and they want to do it in installments. And you say, okay, lower income person, we agree, but we're going to charge you some money, despite the fact you are asking for installments because you cannot afford.
Would the gentlelady
I think
yield?
this is outrageous. It is ridiculous. And I think that Mr. Scott is being treated very poorly, despite the fact that he is one that he doesn't bend over backwards to work with the opposite side of the aisle. He simply gets with his colleagues on the opposite side of the aisle, and if he believes it's a decent idea, no matter what I or anybody else thinks, he works with you, and this is how you treat him. No, I will not yield.
Yeah, Madam.
I yield to the gentleman from Kansas.
Thank you, Madam Ranking Member. Things like this could conceivably have been worked out and discussed had we put in play what I thought was the policy of the committee, that we would not bring anything to the floor before a 24-hour period. Did I misread that someplace?
Are you yielding? Did the gentleman yield?
Yes.
Your side is presenting amendments in real time that we've never seen, and so I don't quite understand the concern that some Republican amendments haven't necessarily been seen.
Thank you, Mr. Chairman. What I'm saying is, if we didn't get the manager's amendment until last evening, almost at midnight, then we haven't had the opportunity to digest it completely, and certainly we haven't had a chance, for example, to have Mr. Scott from Georgia to sit down with Mr. Duffy and actually talk about it.
If I could maybe, would the gentleman yield or the ranking member yield?
It's her time.
I've tried to treat the gentleman from.
My time.
I'm
I'll
trying
be
to offer.
more generous than you've been. Yes, I'll yield to you.
I yielded over. So I would like to work with Mr. Scott. My concern has been, though we have it in law right now to offer monthly installments, it's not happening. And so if the gentleman wants to withdraw his amendment and work together on how we can figure out a way, a reason to get this into practice, I want to see that happen, and I'm willing to work with you on that point. If there's a different way to do it than what I've done, I would be happy to figure that out with you. I want to see people who can't afford that one time a year big payment to have the option to do it once a month. And even though it's in law from Ms. Waters, it's not happening right now, and I'm trying to figure a way to give those people an option for it. So if you want to work with me and withdraw your amendment, I'd be happy in good faith to do that with you, Mr. Scott.
Mr. Duffy, I certainly respect your gentlemanly offer, but it's important that I not withdraw my amendment. I believe that what we need to do is to get you all on your side to come and let us work together. I mean, what you're doing here is taking something, putting it on this vital piece of information, and once it's written down in the law.
I'm sorry, but the time of the gentleman from Missouri has long since expired.
Yes.
Who seeks
Green from
recognition?
Green from Texas.
For what purpose is the gentleman?
Like the last word.
Gentleman's recognized for 5 minutes.
I yield to Mr. Scott.
Thank you very much, Mr. Green. The importance is this. This is a 5-year bill, correct? Everything that is put in here will be in here for 5 years. However, and any time, once this figure is in here, amendments can come back and forward to raise that $5 fee, and I guarantee you that will be the case. So if we are, I want you to understand my point here of realizing how damaging this is to the process. So that if you proceed with this language, that is our fear and our concern. Now, I have talked with industry, I've talked with and understand their standard, but the greater harm is not done to the industry. There are far more significant things that they have on issue, like, for example, the 28% and other issues that are far more important to them to deal with. But the whole point of the matter is that once you put an area of an additional cost factor into writing over a 5-year period, it opens itself up to be increased and increased. And so, with all due respect, Mr. Duffy, if you might confer with the chairman and other members there and give us this one little piece of acquisition here.
Would the gentleman from Texas yield?
I yield.
Regardless of what the gentleman from Georgia chooses to do, I do want to again emphasize what the gentleman from Wisconsin says, and that is this monthly billing was authorized in bigger waters, I believe, grim waters, but it's not happening. It doesn't exist. It doesn't exist in the real world. And so my concern is, I understand the gentleman's passion, I understand his goal, but it's not happening, and if his amendment is successful, we revert back to the status quo, and no one will have it. And so what the gentleman from Wisconsin, I think, was trying to do, you may not like the way he was doing it, but he was trying to make sure that people at least had the monthly installment option, which today they don't have. And so that was a concern, and regardless of what happens on this amendment, I'm sure that the gentleman from Wisconsin and myself will always be happy to work with the gentleman from Georgia to try to figure out how to effectuate his goal, but I fear that going back to status quo ante, where nobody has the option, does not effectuate his goal. And I thank the gentleman from Texas for yielding.
Reclaiming my time, I yield to Mr. Scott.
We certainly are in favor of expediting the process. What we really want is the fee to go away. That's all. And leave it plain on a monthly basis. Now, I think all of America would agree with us that that's the right thing to do because of the fact that, as I mentioned, once you put that $50 in there, we got a serious problem. But we'll go along with the expediting of it, and we just ask you to take the $50 commitment away.
Does the gentleman
Would the
yield
gentleman
back?
yield?
Yes, sir.
I'll yield to Mr. Duffy.
Thank you. NFIP says that the language as passed in Grim Waters won't take effect for 6 years. People aren't being helped by this language. So I take your point well, and sometimes there's a slippery slope on fees, Mr. Scott, the gentleman from Georgia, and I share that concern. But if this doesn't pass, we're going to have people still in the same situation they are today without having the ability to pay monthly. And so if it was, we want to work together and say, let's use a reasonable cost.
But our amendment
I would
doesn't
work-
touch that, your concern. Our amendment doesn't touch your concern.
Time of the gentleman has expired. There are votes pending on the floor. We will recess momentarily. For what purpose does the gentleman from Massachusetts?
Move to strike the last word.
Well, we're in the midst of recessing. There are votes pending on the floor. So we will recess momentarily in order to continue with votes on the floor. I wish to alert members that, again, notwithstanding that further votes are not expected on the floor, further votes are expected today in committee. The committee stands in recess. Order as we recessed for floor votes. We were in the midst of debate on the Scott Amendment. There have been discussions going on between the parties, and what I have offered to the gentleman from Georgia, if he would temporarily withdraw without prejudice, we will try to work on a solution mutually acceptable to both parties. When the markup reconvenes of Wednesday of next week, if for some reason the parties are unable to come to an agreement, the gentleman from Georgia will be able to re-offer his current amendment to one of the other flood bills without prejudice. So if the gentleman from Georgia will temporarily withdraw without prejudice, we will move on to the rest of, with this understanding, we will move on to the rest of the markup. I yield to the gentleman from Georgia.
Well, thank you, Mr. Chairman, and I appreciate your strong bipartisan offer on this and your concern along with ours. And so I respectfully temporarily withdraw without prejudice.
The amendment is temporarily withdrawn without prejudice. Who seeks recognition? For what purpose does the gentleman from New Jersey seek recognition?
Mr. Chairman, I have an amendment at the desk.
We will pause and allow the amendment to be distributed.
I'm going to get my mind in gear here.
The clerk will report the amendment.
Amendment offered by Mr. MacArthur, page 61, line 7, before the...
Without objection, the reading of the amendment is dispensed with. The gentleman from New Jersey is recognized on his amendment.
Thank you, Mr. Chairman. I just want to reiterate one thing I said earlier when I proposed an amendment, and that is this is a very important and personal issue for me. New Jersey is one of the top 5 states in the National Flood Program, and fully half of all of the Sandy losses in my entire state occurred in my district. So the ability for people to get insurance, to get flood insurance, is vitally important. And these, as I've said a number of times, these are ordinary Americans. It's not just people with multi-million dollar homes. These are neighborhoods and communities and in the entire county, and it's vital that they have insurance. It's a good bill. I appreciate that it's a 5-year reauthorization. It doesn't mean that it can't be made better. And I'm a little concerned that the clearinghouse proposal in Section 506, the concept is one that I proposed, and I'm grateful that the chairman and Chairman Duffy have accepted it, but I'm not at all convinced that as it's currently written, that it's not going to result in individual homeowners not being able to find a flood insurer in a timely fashion. And that results in the inability to get a mortgage and has negative effects on construction and I think really hampers local neighborhoods. The concept of the clearinghouse is that a policyholder would apply to the NFIP, they would get a rating, a premium rating from NFIP, and then the voluntary market would have a period of time, I suggest 10 days in my amendment, but the voluntary market would have a period of time to say they could take that risk at the same premium with the same terms and conditions. If nobody takes it, if there's no voluntary market, then the homeowner would have the right to remain in the program at the actuarial rates that were quoted. I think that's a terrific idea. It's not just a concept. I spent 30 years in insurance. I spent a lot of time working in situations like this, and I've seen it work actually in a number of places, in Florida in particular. And so I like the idea. Here's my concern. The clearinghouse, as it's outlined in the bill right now, imposes a 10% penalty if the homeowner remains in the program. Why? They're being charged actuarial rates. There is no voluntary market for that homeowner. That's why they're being allowed to stay in the program. Why should they be penalized with 10%. The time frame is 30 days. It doesn't take the voluntary market 30 days to rate a property. This should be shortened dramatically, in my view, to 10 days. So I'm proposing an improvement to the concept. I appreciate that the concept is in the bill, but I think...
Would the gentleman yield?
I will yield, sure.
Well, I know the gentleman from New Jersey appreciates the concept in the bill because it's his concept.
Yes?
And I want to thank the gentleman from New Jersey who probably helped improve the bill with this addition of the clearinghouse. I did not think there was ambiguity on the ability to ensure there was a federal backstop, that all properties would have some ability to receive the insurance. But this very well is a better mechanism. I thank him for that. With respect to the time limit, I'm not quite where the gentleman is, but I would be more than willing to continue to work with him. As he knows, we've come a long way already in our negotiations. I'm willing to continue those negotiations in figuring out 30 versus 10, precisely what the appropriate time period is. I still have concerns, again, about ultimately whether or not the premium, obviously, is something I believe that one should have, because I wish to avoid over-reliance on the NFIP. And I do know that new construction under this bill, a total bill would be $1,084, I'm sorry, the annual premium would be $827. Today, it would be $910 if it could not access the market. That's the new premium plus 10%. Again, I think somewhat reasonable in trying to get the taxpayers off the hook. But again, we've come a long way. I'll continue to work with the gentleman to see if we could refine the language, come to some meeting of the minds. I would request, if he would withdraw his amendment, we will continue our negotiations going to the floor. But I'm not prepared to accept the amendment today, but I'm willing to continue our negotiations.
Well, Mr. Chairman, just two thoughts. One, I don't generally make amendments to then withdraw them, but I do have a lot of respect for you, and I know that you have dealt in tremendously good faith all through this process. I would correct one, I think, misunderstanding. The 10% cannot be applied to the average. The 10% has to be applied to the actual. And my state, unfortunately, is among the highest premiums in the program. We are at the top end. So this is the 10% burden above actuarial rates is more severe for the people that I represent. That said, I understand where you're coming from. I will be happy to work with you. I do appreciate that you put the concept in the bill, although not exactly as I proposed it, but I will work with you and will therefore withdraw the motion or the amendment at this time.
I thank the gentleman. I look forward to continuing to work with him, and the amendment is withdrawn. Who seeks recognition? For what purpose does the gentleman from Florida seek recognition?
I have an amendment at the desk, Mr. Chairman.
We'll pause and allow the amendment to be distributed. The clerk will report the amendment.
Amendment offered by Mr. Chris, page 3, line...
Ask unanimous consent that the amendment be considered as read.
Without objection, the gentleman is recognized on his amendment.
Thank you, Mr. Chairman. The National Flood Insurance Program is vitally important to all of us. Certainly it is to me, my constituents, the state of Florida, the country as a whole. But if there's one thing that has become abundantly clear to me about the program, it is this: the cost of flood insurance is already too high. Policyholders, the vast majority of whom are hardworking middle-class families, are getting squeezed. And while I appreciate very much the chairman's attempts to produce legislation that addresses rising flood insurance premiums, the so-called affordability provisions of the bill would unfortunately have the unintended effect, I hope, of raising rates. For my constituents, my friends, and my neighbors, I cannot support that. When families can afford flood insurance, more families will buy flood insurance. The more families that buy flood insurance, the stronger the program will be. Affordability means families are better able to protect themselves before a disaster, rather than relying on the good graces of FEMA after the fact. Wouldn't we rather have families taking responsibility and paying for affordable flood insurance instead of asking taxpayers to pick up the tab? The amendment that I offer today, Mr. Chairman, addresses just a few of the more serious concerns I have about affordability of flood insurance under the bill. My amendment does three simple things. Number one, it strikes language that would increase the minimum amount premiums must rise each year for many policyholders. I think this was Mr. MacArthur's point earlier today, in a bipartisan fashion. To put this into perspective, current law requires a minimum annual increase of 5%. This would change it to, the bill would change it rather to 8%. But according to FEMA, the average rate increase in 2017 was 6.3%. If you think about that for a moment, had this bill been law this past year, rates would have actually gone up even more for many people. The second part of my amendment repeals the surcharges created under the Homeowner Flood Insurance Affordability Act. The surcharges not only discourage property owners from purchasing flood insurance, but also make that coverage more unaffordable. Not only should we not increase surcharges, as this bill would do for most properties, we should get rid of surcharges entirely. And number three, my amendment strikes Section 503 of the bill, which, if enacted, could double the reserve fund fee that policyholders pay. This could amount to an increase of hundreds of dollars each year for some policyholders, on top of what they already are paying. It really comes down to this. As currently drafted, the sharp rate increases of the bill are too much to ask of policyholders, and they need to go. And while these three changes I propose today are only small steps towards making flood insurance more affordable, my amendment would mean the difference for hundreds of thousands of middle-class families between staying in their homes or being forced to give up the American dream of their home ownership. Our middle-class families deserve better, and we here in this room can do better. I urge my colleagues to support the amendment. Thank you very much, Mr. Chairman. I appreciate your courtesy.
Gentleman yield back.
Yes, sir.
Gentleman yields back. Chair will yield to himself. I wanted to oppose the gentleman's amendment. I listened very carefully to it. My concern is, yet again, as I look at our national debt clock, the gentleman's amendment from Florida would make it turn even faster. Not only is his amendment repealing the modest increases in the surcharges, as he said, it takes away all the surcharges that were part of the Grim Waters bill. In addition, even if I was favorable to the policy, this could not go to the floor because it violates House budget rules. It makes the situation worse. And so I appreciate the gentleman fighting for his constituents, but I must fight for my constituents, the 96% of America who's being asked to subsidize the 4% of America. I know the gentleman from Florida believes that somehow that his amendment would lead to less of a burden on the taxpayer, but unfortunately there has been a rather tenuous connection between the increase in the National Flood Insurance Policy take-up rate and the cost of supplemental appropriations to deal with hurricanes and floods. In fact, 6 of the 7 of the top 20 most expensive floods in entire history have occurred in the last 5 years. And we know that these storms are not becoming less frequent. If anything, they are becoming more frequent. And so it gets to a very base difference between people on two sides of an aisle. And one believes that ultimately this should be actuarially sound. And perhaps there are different definitions of what's a fair rate. I want the rate to be fair to my constituents. particularly the constituents who've had their homes decimated, and in some case scraped to the slab by killer tornadoes, where there have been fatalities in the 5th District of Texas. And for me to somehow say that they have to pay more to subsidize other people, again, we will do something on a graduated basis. We will make sure that premiums are predictable. And under current law, no one can receive more than an 18% increase. Under our bill, the ceiling even comes down to 15%. But we will put this on a pathway to being actuarially sound and not burdening those who have their own burdens that they have to pay for that aren't being subsidized by the National Flood Insurance Program. So I respect the gentleman from Florida. I appreciate what he's trying to do, but I've got to thoroughly reject his amendment because it will simply make this national debt clock turn even worse, make an unsustainable program even less sustainable, and I yield back the balance
Would the gentleman
of my time.
yield? Would the gentleman yield?
Will yield to the gentleman from Wisconsin.
Thank you. And I would just not only note that a program that should be fair to the chairman's constituents, but I care about the constituents that the gentleman from Florida represents. And so if we're looking at pre-firm properties, a home that could have been built in the 70s that gets a subsidized rate, and a similar home in a similar or same neighborhood that's built a couple years later is not subsidized. And these are two families, two similar homes, two similar incomes. Their kids play together in the same neighborhood, but because one was built as a pre-firm and one as a post-firm, they're going to pay very different rates. There's no equality and equity in that. And so that we put the pre-firm on an escalator to get close to his neighbor who's a post-firm who can afford to pay for his NFIP policy doesn't seem to be unreasonable. This is treating neighbors the same way. And why should one of the gentlemen from Florida's neighbors pay a higher rate and subsidize his other neighbor for a lower rate just because his home was built a couple of years before the other? That doesn't seem fair. That doesn't seem equitable. And so what we've done is, yes, put people on a slight escalator and treat them fairly. The reserve fund, it's 1%. 1%. I mean, again, as I've laid out the changes in policy differences from one year to the next, we're talking, Mr. Chairman, about some very, very small dollar amounts that I think are pretty rational that don't actually do what happened in Grim Waters, which shocked people. With that, I yield back.
Chairman yields back. For what purpose does the ranking member seek recognition?
Mr. Chairman, I rise in support.
Gentlelady moved to strike the last word. Gentlelady's recognized for 5 minutes.
Earlier, I alluded to fees, charges above and beyond the premium. I noticed that some of my friends on the opposite side of the aisle keep referring to the premiums as 8%, but what they don't tell you is precisely what Mr. Chris is trying to tell you, that in addition to that 8% increase, you have premium increases on grandfathered properties, pre-firm subsidy primary residential properties, pre-firm subsidy on non-residential properties. Then you have all these surcharges on primary residences, non-primary residences, and in addition to that, you have the reserve fund assessment, and increased cost of compliance. And then, of course, if we support low income who want to pay installments, you would have an additional $50 fee. And so what they cannot tell you at this point is what all of this is going to add up to. They will tell you about reducing the cap from 15 to 18, but that still means that FEMA could go all the way up to 15% higher increase. So I would just warn the members of the committee to be very careful about thinking that the 8% is simply an increase rather than not understanding. You don't understand how much all of these increases are going to amount to until, of course, your constituents learn about them, and then you're going to hear from them. I will yield back the balance of my time.
Gentlelady yields back the balance of her time. Who seeks recognition? Does any member seek recognition? If there's no further debate on the amendment, then now the question now occurs on the amendment. Who seek, for what purpose does the gentleman from Massachusetts seek recognition?
Move to strike the last
Gentleman is recognized for 5 minutes.
Thank you, Mr. Chairman. And I rise in support of the gentleman from Florida's amendment. I do want to say that the whole framework of this bill, lately the Senate has been the place where bad ideas go to die. And I'm hoping that this is another example of that. I think there's a very thoughtful bill over on the other side in the Senate, and I hope that that's the one that actually emerges. I hate regional politics. I really do. I've heard people say, well, what does the gentleman from Georgia's amendment to strike a $50 fee have to do with the people in the 5th District of West Texas? And that shouldn't even be a relevant question. I vote for the Farm Bill on a regular basis because I think it's good for America, good for our farming communities. I can't point to many people in my district that directly benefit from the subsidies that we provide in the Farm Bill. It's just not who we are. That's not what we do. But I do represent a coastal community, and for those that scoff at properties that cost $1 million, I can tell you there are a lot of people in the fishing industry that are in hard times right now because of all of the fishing regulations. And they've owned their houses for 50 or 75 years, and now, yeah, they're sitting on a piece of property in a building that costs $1 million. And also, I want to point out, it isn't a single family for $1 million. I have a lot of multi-families. So this bill would prohibit a 4-family on the water, 4 units. 4 units, $250,000, they would not be eligible under this bill. So, we also look at transportation bills differently. I'm sure that there are people that don't benefit greatly from rapid transit. And, we happen to be in an area that's blessed with that. But I support highway construction for the rural states in this country. And look, we do have, it's not 6% of the people benefiting from 94% of the people. 39% of the people in this country live in a coastal area, 39% of the population. So they're benefiting from this. And I've voted for every hurricane relief, every tornado relief, Katrina, Superstorm Sandy, although my state was not affected by those, because we're all Americans. We're all Americans. And this bill, instead of spreading risk and supporting these areas, puts all the pressure on a smaller and smaller group of people. It relies, no mitigation in this bill. It relies on local towns and cities and states to provide their own mitigation and resiliency. It eliminates grandfathering. Grandfathering is a reflection of a policy that we had that rewards people who actually strengthen the resiliency of their properties over a long, long period of time. That's what grandfathering does. It rewards people for doing the right thing. And if somebody bought a house 75 years ago and today it's worth $1 million, God bless them. But that person might be on fixed income, retired. But because they're in a property that's valued at $1 million, they're going to be cut out of this bill. We're going to remove the benefits for that person. So I just wish, I know there's parts of this country that haven't had a flood since Noah. And I wish that was my district, but it's not. I represent beautiful communities like Scituate, Massachusetts, and Cohasset, and Weymouth, and Quincy, right on the water. And they rally together. They've come up with money to build their own seawalls and floodgates, other mitigation efforts. And I think it's entirely fair that we meet those communities halfway, at least halfway. because the infrastructure costs here will be considerable if the prognoses for climate change are anywhere near accurate. And I think just as we help other communities with transportation infrastructure, we ought to help people with flood mitigation infrastructure as well. I yield back.
Time of the gentleman has expired. Who seeks recognition? For purposes, the gentleman from Wisconsin seek recognition.
Move to strike the last word.
Gentleman is recognized for 5 minutes.
It's important that we have clear information here. There's $1 billion of mitigation money in this package, $225 million a year. We increase ICC coverage from $30,000 to $60,000 and allow people to access that pre-mitigation. This is all good stuff, and I don't want people to be confused with wrong information. But I think it's important to take a trip down memory lane. If you look back to bigger waters and pre-firm primary residence, that they stopped letting that pre-firm status run with the land and they would lose it when their property was sold. That's what made people get a little shocked on what their premium might be. And so in grim waters, to make sure that those 1 million pre-firms didn't get shocked, they wanted to spread that cost across the 5 million policyholders, and they put in surcharges. And they're significant surcharges, but on a primary residence, it's $25. That we've increased to $40, which again is $3.30 a month. And I get the point if someone wants to complain about significant cost increases, but as I've brought up numerous times, the average policy in 2016 under current law cost $1,084. And 2017, with the changes that we proposed, the average policy is $1,126, or a $42 difference, which is less than $4 per month. So to scream that the sky is falling is unfair. But also, again, we can talk about subsidies that go one way or the other from one region to the next, or rural to urban, but we have people in the same neighborhoods, one subsidizing the other, one paying lower rates because of when their property was built compared to their neighbor who had their property built a few years after. That is fundamentally unfair. And so to say we can put people on an escalator to get to a rate, not yet, to get to a rate that is consistent with their neighbor is rational and it is reasonable. Asking someone who has a grandfathered property, which means they're taking advantage of an old risk map. They're not paying a rate that's consistent with the risk of their property. Okay, well, you don't want to shock them with a new rate map. Well, let's put them on a small escalator to get them closer to their actuarial sound rate. We have learned the lessons of bigger waters to go, if you're going to change people's rates, do it slowly. Do it in a gradual way so people can plan, they know what's coming. That's what we've done in this legislation. And to the gentleman from Massachusetts, I would yield.
Thank you. One of the things that I think you're missing is that on the grandfathering piece is that the long term, for instance, in Scituate, Massachusetts, which is one of my most affected communities, the local community has actually paid for the existing seawalls. They've done surcharges. They've done beach erosion protections. So the longtime residents have paid a lot of money in. Their investment is baked in. So that's why when a new person comes in, blows into town, they don't get the credit that you're giving them for having already paid for the existing resiliency measures that have been paid by the long-term residents. There's a certain fairness to that. The money has already been invested by the long-term residents. Someone new hasn't paid that. They're paying a little bit more because they're new. They haven't invested yet, right?
I want to reclaim my time just to respond. Though, if you're doing large projects to improve the risk profile of neighborhoods, we're now not moving your risk profile up and making it more dangerous. We're decreasing your risk profile. We're moving in the opposite direction. But we're talking about properties who are assessed one risk, but as we get better data and new information, their risk changes. And I've even talked to the ranking member about how we could do this in a way that, and again, these are future properties, not current properties, future.
The gentleman
Would the gentleman yield to the chairman?
I would to the chairman.
Just one point. The example of the gentleman from Massachusetts doesn't work in the sense that the grandfathering applies to the property, not the individual. So the people who might have participated in paying for some of these local initiatives may no longer be there, yet the new person comes in and takes advantage of the earlier grandfathered clause. I just want to point out that that example didn't quite work. The time of the gentleman from Wisconsin has expired. For what purposes? Nevada, I apologize. Gentleman from Nevada, seek recognition.
Thank you, Mr. Chairman. To move to strike the last word, please.
Gentleman is recognized for 5 minutes.
Thank you, Mr. Chairman. I'd like to yield my time to my colleague from Florida.
Thank you. Thank you, Congressman. Just a couple points. I respect the chairman's concern about debt reduction. We've seen the board in this room quite a bit, and I'm sympathetic to that argument. The only point I would make is that, the underlying bill will not fix solvency anyway, and the amendment that I'm offering is simply an attempt to give consumers a little help. And it is important to coastal communities, but I also respect the chairman's argument as it relates to tornadoes and other difficulties that happens in different parts of the country, which I think ultimately may lead us to a favorable argument someday, I hope, to a national catastrophic plan. Some places in the country have earthquakes. Some places in the country have tornadoes. Some places in the country have floods. I was in an earthquake in California once at a baseball game. And so these things happen all over the country in different ways, in different fashions. It's Mother Nature. And I think if we have developed ultimately a policy that will say that no matter what the catastrophic event is, we as Americans are going to help our fellow Americans out in a time of need. I think that's the direction we ought to go. I would appreciate your favorable support on the amendment. I understand if you don't philosophically feel that way. And Mr. Chairman, I want to thank you again for your courtesy. Thank you.
This is the gentleman from Nevada. Yield back.
Yes, Mr. Chairman.
Gentleman yields back. Is there any further debate on the amendment?
Mr. Chairman.
If not, who seeks recognition? For what purpose does the gentleman from Michigan seek recognition?
I move to strike the last word.
Gentleman is recognized for 5 minutes.
And I won't take the 5 minutes. I just wanted to point out a couple of quick things. To my colleague from Florida, the reason why the underlying bill won't, quote, fix solvency, as you put it, is because your side certainly isn't interested in moving that fast or that far. There are some of us on this side that might have, but we understand the constraints of the policy and the politics and the realities of what we have to deal with. So that's one of the reasons. But it's an attempt to move in that direction. Secondly, to my colleague from Massachusetts, I just wanted to make sure that, and Chairman Duffy touched on this, but specifically, when he's saying that there's no appropriations or authorization for mitigation, it's simply not true. Page 60, Section 506, lines 8, 9, 10, and 11, authorization of appropriations. There is authorized to be appropriated $225 million for each fiscal year for flood mitigation assistance grants. Section 504, page 60. So that's simply not the case. The other is that the assumption that this was $1 million per structure is not accurate as well. Part of the manager's amendment brought it up to 4 units with $1 million per unit, not per structure, $1 million per unit, so that that structure that you were talking about is actually a $4 million or $3 million or $2 million, depending on whether it's a duplex, triplex, or quadplex. Not that $1 million per structure. And so, Mr. Chairman, with that, I yield back.
Gentleman yields back. Is there any further debate on the amendment? If not, the question now occurs on the amendment offered by the gentleman from Florida. All those in favor shall signify by saying aye.
Aye.
All those opposed shall signify by saying nay. Nay, in the opinion of the chair, the nays appear to have it, the nays have it, and the amendment is not adopted. For what purpose does the gentleman from Florida seek recognition?
Ask for a recorded vote.
A recorded vote has been requested. All those in favor of a recorded vote shall raise their hand and be counted. Sufficient number having raised their hands, a recorded vote is so ordered, and pursuant to subsection C5 of Rule 3 of the committee rules, further proceedings on the amendment are postponed. Is there further amendment or discussion? For what purpose does the gentlelady from New York seek recognition?
Thank you, Mr. Chairman. I have an amendment at the desk.
We'll pause and allow the amendment to be distributed. The clerk will report the amendment.
Amendment offered by Ms. Tenney. At the end of Title V, add the following new
Without
section.
objection, the reading is dispensed with, and the gentlelady is recognized on her amendment.
Thank you, Mr. Chairman. Though it's been nearly 5 years since Superstorm Sandy wreaked havoc on New York State, particularly not in my district, but New York State and I might add New Jersey. And it's been 4 years since we had one of the most devastating floods in my region in central New York in 2013, which destroyed thousands of people's homes, businesses. We are unfortunately still seeing some of the lingering effects, even in the inland bucolic area of central New York. It takes a special type of resilience and perseverance to overcome these terrible natural disasters that affected the lives of so many, especially the devastating effects of flood damage. To help people impacted by Sandy and other major storms, including our storms of 2013 and also Irene and Lee, and to help people return to a normal, somewhat normal, post-natural disaster life, we need to review some of FEMA's claims processes. I think both Democrats and Republicans can agree that the claims handling under the NFIP is overly complex, confusing, and in much need of reform, and I thank the Chairman and Chairman Duffy for putting out an improved bill on this issue. I also know that my colleague from the other side of the aisle, Ms. Velazquez, has worked very hard in reforming this process. And I believe we share a common goal of reducing complexities in the program while ensuring a high level of customer service for flood victims. By using the guidelines in my amendment, we can improve and simplify and make the process more efficient for policyholders who experience loss due to flooding. Prior to serving in the House of Representatives, I served as a practicing attorney and also in the real estate field. And I understand that vague language in law can often be misinterpreted in practical application and also in the courtroom. This amendment that I have is really very basic. It's not contentious. It's just meant to clarify the language to help understand how we mitigate these claims. Its sole purpose is to reduce the complexity and the ambiguity rising from the claims handling process. The amendment would enable FEMA to deliver better policyholder service, reduce the liability FEMA and the right your own insurance carriers face in defending FEMA's financial interests in court. This amendment requires NFIP policyholders to exhaust administrative remedies before resorting to litigation. This type of policy of exhausting administrative remedies follows well-settled administrative law and is normal course of procedure. It will also create a closer relationship between FEMA and the right your own companies because it will allow FEMA to closely review claim disputes and practices much earlier in the claim dispute process. It also requires a clear deadline for approval or disapproval of claims. I want to reiterate that nothing in this amendment prevents claimants from suing FEMA in the circumstances alleged by the plaintiffs. Sometimes litigation is necessary, and if FEMA acted illegally or improperly, the case at hand would move forward and claimants would have the opportunity to do that. I do appreciate the time to explain my amendment, and I urge my colleagues to support this very, very simple and not minor adjustment to the main bill. And I thank you and yield back.
Would you yield to the chairman?
Yes.
I thank the gentlelady. I want to thank her for her leadership. I want to thank her for her continued work with the another gentlelady from New York, Ms. Velazquez. I know there are important issues surrounding claims processing. I think she is certainly adding clarity, which will be very, very helpful. The language is needed, and I just appreciate her leadership, and I urge adoption of her amendment. I yield back to her. I assume she yields back her time.
Thank you, Mr. Chairman, and I appreciate the kind words. We do need to make it clarified, as you as I, as both as lawyers, know that vague language often causes a lot of confusion. And I think this will clarify it and make it much better for our victims and much better in going forward to help our taxpayers and minimize the costs that this NFIP can often cause our taxpayers as we seek the common goal of trying to reduce the burden on taxpayers and shift it back to a dynamic private market. And I think this will help do that and bring FEMA and our policyholders closer together to protecting our flood victims. Thank you, Mr. Chairman. I yield back.
Gentlelady yields back. Who seeks recognition? For what purpose does the gentlelady from Wisconsin? Gentlelady doesn't seek. Is there further debate on the amendment? If not, the question now occurs on the amendment offered by the gentlelady from New York. All those in favor shall signify by saying aye. Aye. All those opposed shall signify by saying nay. In the opinion of the chair, the ayes have it. The ayes have it, and the amendment is adopted. Who seeks recognition? For what purpose is the gentlelady from Wisconsin? You want to go? Yeah, we've already passed that, sorry. A recorded vote has been requested. All those in favor of a recorded vote shall raise their hand and be counted. Sufficient number having raised their hands, a recorded vote is so ordered, and pursuant to subsection C5 of Rule 3 of the committee rules, for the proceedings on the amendment are postponed. For what purpose does the gentlelady from Wisconsin seek recognition?
Amendment at the desk.
We'll pause and allow the amendment to be distributed.
It's my Prince phone, man.
Hey, we talked to you about this, your council, community-based flood insurance program. It's real simple.
The clerk will report the amendment.
Amendment offered by Ms. Moore, page 17, after line 16, insert the following new section.
Without objection, the reading of the amendment is dispensed with. The gentlelady is recognized on her amendment. Gentlelady is recognized.
Thank you so much, Mr. Chairman. This is a real simple amendment. What it does is it authorizes a voluntary community-based flood insurance pilot program and that are consistent with pre-existing national flood insurance program plans. All this would do would be to allow community-based flood insurance plans and it would permit the state or local government to purchase a plan on behalf of the homeowners and then collect dues like a utility bill. A RFF study, a proposed design for community-based flood insurance, which I would ask to be submitted for the record without objection.
Without objection.
Really highlights some very interesting and exciting benefits of a program like this. Amendment champions. Benefits like easier and cheaper administration, an issue had very much been debated here today. It also, there's a strong incentive for communities to act collectively on mitigation measures. I mean, a single homeowner, for example, with a flood policy is extremely unlikely to build a dike unless they're Bill Gates or somebody. But a community may issue bonds for a dike that protects residential business and infrastructure and really protects human life.
Would the gentlelady yield?
Yes, sir.
The chair is prepared to accept your amendment.
And I'm prepared to shut up. I yield back.
I would just point out that the gentlelady has been working with the majority side for a week to craft this language. It is mutually acceptable. I appreciate her working in good faith. I appreciate her leadership. The question now occurs on the amendment offered by the gentlelady from Wisconsin. All those in favor shall say aye. Aye. All those opposed shall signify by saying nay. In the opinion of the chair, the ayes have it, and the amendment is adopted. Who seeks recognition? For what purpose does the ranking member seek recognition?
I have an amendment
Button.
I have an amendment at the desk.
We will pause and allow the amendment to be distributed. Do you know how it's styled? Is this Waters number 2, or? That's the only other one. Okay, never mind.
When we amend the base bill, how do we get to his manager's amendment?
The clerk will report the amendment.
Amendment offered by Ms. Waters, strike all after the strike all and insert the
Without
following
objection,
title.
the reading of the amendment is dispensed with. The gentlelady is recognized for 5 minutes on her amendment.
Thank you, Mr. Chairman. I didn't think that an amendment to reauthorize the National Flood Insurance Program would be necessary at a June markup ahead of the program's expiration in September. But as we have discussed today, these 7 bills all somehow failed to actually authorize the program's continuation. As I have stated, throughout this process, reauthorization of the National Flood Insurance Program can and should be bipartisan. I was hoping that there would be a bipartisan reauthorization bill that would come out of this committee. Instead, today, I will offer a different bipartisan reauthorization bill. As you may know, a group of senators released the outlines of a comprehensive reauthorization bill that makes a number of important reforms to the program to keep flood insurance available and affordable. Today, I offer that amendment as an alternative to Mr. Duffy's more controversial bill. Here's what the amendment would do. First, the amendment would reauthorize the National Flood Insurance Program for 6 years. This is critical if we want to ensure that policyholder retains coverage and that the housing market is protected from shock and collapse. Second, the amendment would provide a real affordability relief by ensuring premiums do not rise by more than 10% annually. Eligible policyholders would also receive financial assistance if flood insurance exceeds traditional definitions of what it means for housing to be affordable. And rather than further burdening policyholders with increased surcharges, this bill would allow FEMA to use the revenue derived from the currently mandated surcharges towards the cost of providing affordability assistance. That just makes good sense. Third, this amendment would require a freeze on FEMA's interest payments on its current debt. The NFIP is spending $400 million annually just on interest payments. All told, the NFIP has paid the federal government $4 billion in interest. This is money the government is spending to pay itself back. I've said all along that we need to address the NFIP's $24.6 billion debt. And while I would love to just forgive the debt entirely, I'm very supportive of the Senate's approach to freezing the interest and allowing FEMA to keep that money so that it does not need to continue to raise premiums. The amendment also makes a number of administrative improvements to the program, most of which are nearly identical to provisions that Representative Velasquez has sponsored today. And it would make serious strides in providing investments for mitigation and mapping, both of which save taxpayer dollars in the long run. So I look forward to continuing down this bipartisan path with anyone who wants to see the NFIP remain a viable option for policyholders. I welcome Republicans to join me in keeping flood insurance safe, affordable, fair, and efficient. So I would urge my colleagues to adopt this alternative and reject the underlying bill. I yield back the balance of my time.
Gentlelady yields back. Chair recognizes himself to urge opposition to the amendment. I would urge a no vote. I didn't know it was possible to accelerate the pace of the national debt clock. This bill would do it. It rolls back just about every single provision that puts the program on the path to fiscal sustainability and to fairness for the 96% of those who are subsidizing the 4%. It actually expands grandfathering. It expands coverage. It just moves us in the wrong direction in about every way possible. And I would say, for the benefit of my friend, the gentleman from New Jersey who lamented that he did not have sufficient time to review a Republican amendment, this is also the first time we're seeing this amendment. But I urge rejection of the amendment. I yield back the balance of my time.
Will the gentleman yield?
I'll yield to the ranking member.
Yes, I just want to remind that this is a bipartisan bill, that I'm working with Mr. Rubio, Mr. Kennedy, and Mr. Cochran. So this is to be noted.
Well, I thank the gentlelady for her note, and my opinion, regrettably, hasn't changed. I yield back the balance of my time. Is there further debate on the amendment? For what purpose does the gentleman from Arkansas seek recognition?
Move to strike the last word.
The gentleman is recognized for 5 minutes.
Like you, Mr. Chairman, I haven't had a chance to study this, but in looking at the basic detail, I want to add my concerns that you've expressed that this is going in the exact wrong direction that on a bipartisan basis in this House we're attempting to do, which is to encourage a robust private sector market in the flood program, while at the same time protecting taxpayers currently and people in flood hazards to protect them from access to the program. It increases coverages amounts to $500,000 for residential properties and increases from $500,000 to $1.5 million for commercial properties. This is expanding the risk to taxpayers, not encouraging more room for private sector innovation. And so I find it very concerning and not kind of in keeping with the whole theme that we've had as we've attempted to reauthorize the floodplain, our flood program. I note that it's referred to as the SAFE Act, S-A-F-E, bipartisan or not, and that seems to me to stand for successful attempt to fleece everyone. I yield back.
I'm sorry, did the gentleman yield back?
I did yield back, Mr. Chairman.
Gentleman yields back. Who seeks
gentleman yield?
Would you yield to the gentleman from Missouri, since the clock's still going? Gentleman from Missouri seeks
Yielded back
recognition.
my balance of my time.
The gentleman has yielded back. For what purpose does the gentleman from Missouri seek recognition? The gentleman is recognized for 5 minutes.
Mr. Chairman, and Mr. Hill, I understand what you're saying. I think everyone in here agrees that we ought to be moving toward trying to figure out a way to use some magnet that would pull the private sector into the program more deeply and ultimately maybe take it over. The issue I'm having is that there is nothing in this bill that's doing that. Absolutely nothing. And I mean, I know it's been said all through the meeting, the hearing today, that that this is to bring the private sector in. But can someone explain how the private sector is going to look at this legislation and say, "Oh my goodness, I need to get more deeply into this. I need more policies." I mean, what in here does that?
Would the gentleman yield?
I will yield, yes.
Yeah, I thank the gentleman, my friend. Well, I know in my state where we have private flood insurance available to our customers, talking to our insurance commissioner, it's more flexible and more affordable in the private sector for the coverage that's available there. It's more affordable than the National Flood Program. And when you expand NFIP's coverage amounts, in my view, you're creating fewer parcels, fewer structures that would be available to be competed for there, because you're giving them the first mover advantage of having the ability to expand the federal program. So I think, as has been noted, this is expanding the role of the federal government by expanding the coverage amounts. I yield back.
Will the gentleman yield? Over here, down in the front.
Gentleman from Jersey seeking time.
I'd like to take a crack at your question too. It's a fair question. I can tell you, as somebody who spent 30 years in insurance, that if I looked at a program that was $24 billion in the red after some period of time, I'd have zero interest in putting my underwriting dollars behind that. And so I think what we can do to most encourage the private sector to be interested here is show that flood insurance can actually work as a successful enterprise. And I think this bill may not do that perfectly. I have my own issues with it, but I think that it goes a long way towards demonstrating that flood insurance can be offered successfully by private insurance companies. And that will benefit ultimately the consumer. If the consumer has options, they have private market companies that want to be involved, and they have a federal backstop in the form of the National Flood Program, I think that is a win-win-win for everyone.
Well,
and that would be my answer to that.
Thank you. I take the remainder of my time. You know, I've been meeting with insurance companies for the last 5 or 6 months, and I've not heard one single representative say that the design of this legislation is going to attract them. I believe that we have to, you know, number one, get rid of the debt some kind of way. It makes no sense. You know, there are people who said if we have a backstop for the GSEs, that's evil. You know, we've been trying to get rid of that. Not we, but some of us have been trying to get rid of that. And so I don't understand how we're putting making all of our decisions on this legislation based on the fact that it's going to attract the private sector.
Would the gentleman yield?
Yes, absolutely.
Again, we've had, frankly, several years now of hearings on this topic, and we will take up even more legislation next week, particularly with the Ross-Castor bill. But we've had lots of testimony that there is incredible capacity in the marketplace that wants to come in. Don Brown from Florida, who is an insurance consultant. The real private market really wants to cover risk in the United States. Jordan Gray, WNC Insurance Services. There is capacity out there and lots of it. The Pennsylvania Insurance Commissioner, Ms. Teresa Miller, facilitating increased private sector involvement in the sale of flood insurance will help promote consumer choice and spur competition. And actually, in the small portion of the market that is open in Pennsylvania, there were people who actually ended up paying less than NFIP. And then last but not least, Patty Templeton-Jones with Wright National Flood Insurance Company. For the first time in a generation, substantial sources of private capital are available and actively interested in writing primary flood insurance. We have 4 years to stand up a market. NFIP will still be there. It will be a backup for some. It will be primary for others. But I think there's a lot of evidence that capacity wants to come in. And regrettably, I think I just burned up all the gentleman's time. That'll teach him to yield to me. The time of the gentleman has expired. Is there further debate on? Is there further debate on the amendment? If not, the question now occurs on the amendment. All those in favor shall signify by saying aye. All those opposed shall signify by saying nay. Nay. In the opinion of the chair, the nays have it, and the amendment is not adopted. There being no further amendments, record votes on the pending amendments. A recorded vote has been requested. All those in favor of a recorded vote shall raise their hand and be counted. A sufficient number having raised their hands, a recorded vote is so ordered, and pursuant to subsection C5 of Rule 3 of the committee rules, further proceedings on the amendment are postponed. Is there any further amendment? There being no further amendments, record votes on the pending amendments have been postponed. Once those votes are taken, the committee will immediately consider the motion to report the measure. The committee will stand in recess for 5 minutes. Committee stands in recess. We will now resume our consideration of pending matters. I now call up H.R. 2868. The clerk will designate the bill by title.
H.R. 2868, to protect the National Flood Insurance Program policyholders from unreasonable premium rates and to require the program to consider the unique characteristics of urban properties and for other purposes.
Question is now on reporting the bill, H.R. 2868, favorably to the House. The clerk will call the roll.
Mr. McHenry. Mr. King.
Yes.
Mr. King, aye. Mr. Royce. Mr. Royce, aye. Mr. Lucas. Mr. Pierce. Mr. Pierce, aye. Mr. Posey. Mr. Posey, aye. Mr. Lukemeyer. Mr. Huizenga. Mr. Huizenga, aye. Mr. Duffy. Mr. Duffy, aye. Mr. Stivers. Mr. Stivers, aye. Mr. Holmgren. Mr. Ross. Mr. Ross, aye. Mr. Pittenger. Mr. Pittenger, aye. Mrs. Wagner. Mrs. Wagner, aye. Mr. Barr. Mr. Barr, aye. Mr. Rothfuss. Mr. Rothfuss, aye. Mr. Messer. Mr. Messer, aye. Mr. Tipton. Mr. Tipton, aye. Mr. Williams. Mr. Williams, aye. Mr. Poliquin. Mr. Poliquin, aye. Mrs. Love. Mrs. Love, aye. Mr. Hill. Mr. Hill, aye. Mr. Emmer. Mr. Emmer, aye. Mr. Zeldin. Mr. Zeldin, aye. Mr. Trott. Mr. Trott, aye. Mr. Loudermilk. Mr. Mooney. Mr. Mooney, aye. Mr. MacArthur. Mr. MacArthur, aye. Mr. Davidson. Mr. Davidson, aye. Mr. Budd. Mr. Budd, aye. Mr. Kustoff. Mr. Kustoff, aye. Ms. Tenney. Ms. Tenney, aye. Mr. Hollingsworth. Mr. Hollingsworth, aye. Ms. Waters. Ms. Waters, aye. Mrs. Maloney. Mrs. Maloney, aye. Ms. Vasquez. Ms. Vasquez, aye. Mr. Sherman. Mr. Sherman, aye. Mr. Meeks. Mr. Meeks, aye. Mr. Capuano. Mr. Capuano, aye. Mr. Clay. Mr. Lynch. Mr. Lynch, aye. Mr. Scott. Mr. Scott, aye. Mr. Green. Mr. Cleaver. Mr. Cleaver. Mr. Cleaver, aye. Ms. Moore. Mr. Ellison. Mr. Ellison, aye. Mr. Perlmutter. Mr. Perlmutter, aye. Mr. Himes. Mr. Himes, aye. Mr. Foster. Mr. Foster, aye. Mr. Kildee. Mr. Kildee, aye. Mr. Delaney. Mr. Delaney, aye. Ms. Cinema. Ms. Cinema, aye. Mrs. Beatty. Mrs. Beatty, aye. Mr. Heck. Mr. Heck, aye. Mr. Vargas. Mr. Vargas, aye. Mr. Gottheimer. Mr. Gottheimer, aye. Mr. Gonzalez. Mr. Christ. Mr. Christ, aye. Mr. Kewen. Mr. Kewen, aye. Mr. Chairman.
Aye.
Chairman, aye.
Is there any member who has not voted? The gentleman from North Carolina.
Aye. Mr. McHenry, aye.
Is there any other member who has not voted? Gentleman from Texas.
Mr. Green, aye.
Is there any other member who has not voted? Is there any member who wishes to change his or her vote? If not, the clerk will report.
Mr. Chairman, the ayes are 53 and the nays are 0.
Majority having voted in favor of the bill is ordered favorably reported to the House. Without objection, a motion to reconsider is laid on the table. Staff are authorized to make technical or conforming changes. Members will have 2 days to file views on the reported measure. I now call up H.R. 2874. The clerk will designate the bill by title.
H.R. 2874, to achieve reforms to improve the financial stability of the National Flood Insurance Program, to enhance the development of more accurate estimates of flood risk through new technology and better maps, to increase the role of private markets in the management of flood insurance risk, and to provide for alternate methods to insure against flood peril and for other purposes.
The question now occurs on agreeing to the amendment offered by the gentleman from Washington, Mr. Heck, on which a recorded vote was ordered. The clerk will call the roll.
Mr. McHenry.
No.
Mr. McHenry, no. Mr. King.
Yes.
Mr. King, aye. Mr. Royce.
No.
Mr. Royce, no. Mr. Lucas. Mr. Pierce. Mr. Pierce, no. Mr. Posey. Mr. Posey, no. Mr. Lukemeyer. Mr. Huizenga. Mr. Huizenga, no. Mr. Duffy. Mr. Duffy, no. Mr. Stivers. Mr. Stivers, no. Mr. Holmgren. Mr. Ross. Mr. Ross, no. Mr. Pittenger. Mr. Pittenger, no. Mrs. Wagner. Mrs. Wagner, no. Mr. Barr. Mr. Barr, no. Mr. Rothfuss. Mr. Rothfuss, no. Mr. Messer. Mr. Messer, no. Mr. Tipton. No. Mr. Tipton, no. Mr. Williams. Mr. Williams, no. Mr. Poliquin. Mr. Poliquin, no. Mrs. Love. Mrs. Love, no. Mr. Hill. Mr. Hill, no. Mr. Emmer? Mr. Emmer, no. Mr. Zeldin? Mr. Zeldin, no. Mr. Trott? Mr. Trott, no. Mr. Loudermilk? Mr. Mooney? Mr. Mooney, no. Mr. MacArthur? Mr. MacArthur, no. Mr. Davidson? Mr. Davidson, no. Mr. Budd? Mr. Budd, no. Mr. Kustoff? Mr. Kustoff, no. Ms. Tenney? Ms. Tenney, no. Mr. Hollingsworth? Mr. Hollingsworth, no. Ms. Waters? Ms. Waters, aye. Mrs. Maloney? Mrs. Maloney, aye. Ms. Velasquez? Ms. Velasquez, aye. Mr. Sherman? Mr. Sherman, aye. Mr. Meeks? Mr. Meeks, aye. Mr. Capuano? Mr. Capuano, aye. Mr. Clay? Mr. Clay, aye. Mr. Lynch? Mr. Lynch, aye. Mr. Scott? Mr. Scott, aye. Mr. Green? Mr. Green, aye. Mr. Cleaver? Mr. Cleaver, aye. Ms. Moore? Ms. Moore, aye. Mr. Ellison? Mr. Ellison, aye. Mr. Perlmutter? Mr. Perlmutter, aye. Mr. Himes? Mr. Himes, aye. Mr. Foster? Mr. Foster, aye. Mr. Kildee? Mr. Kildee, aye. Mr. Delaney? Mr. Delaney, aye. Ms. Sinema? Ms. Sinema, aye. Mrs. Beatty? Mrs. Beatty, aye. Mr. Heck? Mr. Heck, aye. Mr. Vargas? Mr. Vargas, aye. Mr. Gottheimer? Mr. Gottheimer, aye. Mr. Gonzalez? Mr. Christ? Mr. Christ, aye. Mr. Kewen? Mr. Kewen, aye. Mr. Chairman?
No.
Chairman, no.
Is there any member who has not voted? Is there any member who wishes to change his or her vote? If not, the clerk will report.
Mr. Chairman, the ayes are 26 and the nays are 28.
Then the amendment is not agreed to. The question now occurs on agreeing to the amendment offered by the gentleman from Florida, Mr. Christ, on which a recorded vote was ordered. The clerk will call the roll.
Mr. McHenry? No. Mr. McHenry, no. Mr. King? Aye. Mr. King, aye. Mr. Royce? No. Mr. Royce, no. Mr. Lucas? Mr. Pierce? Mr. Pierce, no. Mr. Posey? Mr. Posey, no. Mr. Lukemeyer? Mr. Huizenga? Mr. Huizenga, no. Mr. Duffy? Mr. Duffy, no. Mr. Stivers? Mr. Stivers, no. Mr. Holkren? Mr. Ross? Mr. Ross, no. Mr. Pittenger? Mr. Pittenger, no. Mrs. Wagner? Mrs. Wagner, no. Mr. Barr? Mr. Barr, no. Mr. Rothfuss? Mr. Rothfuss, no. Mr. Messer? Mr. Messer, no. Mr. Tipton? Mr. Tipton, no. Mr. Williams? Mr. Williams, no. Mr. Poliquin? Mr. Poliquin, no. Mrs. Love? Mrs. Love, no. Mr. Hill? Mr. Hill, no. Mr. Emmer? Mr. Emmer, no. Mr. Zeldin? Mr. Zeldin, no. Mr. Trott? Mr. Trott, no. Mr. Loudermilk? Mr. Mooney? Mr. Mooney, no. Mr. MacArthur? Mr. MacArthur, no. Mr. Davidson? Mr. Davidson, no. Mr. Budd? Mr. Budd, no. Mr. Kustoff? Mr. Kustoff, no. Ms. Tenney? Ms. Tenney, no. Mr. Hollingsworth? Mr. Hollingsworth, no. Ms. Waters? Aye. Ms. Waters, aye. Mrs. Maloney? Aye. Mrs. Maloney, aye. Ms. Velasquez? Ms. Velasquez, aye. Mr. Sherman? Mr. Sherman, aye. Mr. Meeks? Mr. Meeks, aye. Mr. Capuano? Mr. Capuano, aye. Mr. Clay? Mr. Clay, aye. Mr. Lynch? Mr. Lynch, aye. Mr. Scott? Mr. Scott, aye. Mr. Green? Mr. Green, aye. Mr. Cleaver? Mr. Cleaver, aye. Ms. Moore? Ms. Moore, aye. Mr. Ellison? Mr. Ellison, aye. Mr. Perlmutter? Mr. Perlmutter, aye. Mr. Himes? Mr. Himes, aye. Mr. Foster? Mr. Foster, aye. Mr. Kildee? Mr. Kildee, aye. Mr. Delaney? Mr. Delaney, aye. Ms. Sinema? Ms. Sinema, aye. Mrs. Beatty? Mrs. Beatty, aye. Mr. Heck? Mr. Heck, aye. Mr. Vargas? Mr. Vargas, aye. Mr. Gottheimer? Mr. Gottheimer, aye. Mr. Gonzalez? Mr. Christ? Mr. Christ, aye. Mr. Kewen? Mr. Kewen, aye. Mr. Chairman?
No.
Chairman, no.
Is there any member who has not voted? Gentleman from Illinois.
Mr. Holkren? Mr. Holkren, no.
Is there any other member who has not voted? Is there any member who wishes to change his or her vote? If not, the clerk will report.
Mr. Chairman, the ayes are 26 and the noes are 30.
The amendment then is not agreed to. The question now occurs on agreeing to the amendment offered by the gentlelady from New York, Ms. Tenney, on which a recorded vote was ordered. The clerk will call the roll.
Mr. McHenry? Yes. Mr. McHenry, aye. Mr. King? Aye. Mr. King, aye. Mr. Royce? Mr. Royce, aye. Mr. Lucas? Mr. Pierce? Mr. Pierce, aye. Mr. Posey? Mr. Posey, aye. Mr. Lukemeyer? Mr. Huizenga?
Where's Borden?
Mr. Huizenga?
Wow, who's keeping?
Mr. Huizenga, aye. Mr. Duffy? Mr. Duffy, aye. Mr. Stivers? Mr. Stivers, aye. Mr. Holgren? Mr. Holgren, aye. Mr. Ross? Mr. Ross, aye. Mr. Pittenger? Mr. Pittenger, aye. Mrs. Wagner? Mrs. Wagner, aye. Mr. Barr? Mr. Barr, aye. Mr. Rothfuss? Mr. Rothfuss, aye. Mr. Messer? Mr. Messer, aye. Mr. Tipton? Mr. Tipton, aye. Mr. Williams? Mr. Williams, aye. Mr. Poliquin? Mr. Poliquin, aye. Mrs. Love? Mrs. Love, aye. Mr. Hill? Mr. Hill, aye. Mr. Emmer? Mr. Emmer, aye. Mr. Zeldin? Mr. Zeldin, aye. Mr. Trott? Mr. Trott, aye. Mr. Loudermilk? Mr. Mooney? Mr. Mooney, aye. Mr. MacArthur? Mr. MacArthur, aye. Mr. Davidson? Mr. Davidson, aye. Mr. Budd? Mr. Budd, aye. Mr. Kustoff? Mr. Kustoff, aye. Ms. Tenney? Ms. Tenney, aye. Mr. Hollingsworth? Mr. Hollingsworth, aye. Ms. Waters? Ms. Waters, no. Mrs. Maloney? Ms. Velasquez? Ms. Velasquez, no. Mr. Sherman? Mr. Sherman, no. Mr. Meeks? Mr. Meeks, no. Mr. Capuano? Mr. Capuano, no. Mr. Clay? Mr. Clay, no. Mr. Lynch? Mr. Lynch, no. Mr. Scott? Mr. Scott, no. Mr. Green? Mr. Green, no. Mr. Cleaver? Mr. Cleaver, no. Ms. Moore? Ms. Moore, no. Mr. Ellison? Mr. Ellison, no. Mr. Perlmutter? Mr. Perlmutter, no. Mr. Himes? Mr. Himes, no. Mr. Foster? Mr. Foster, no. Mr. Kildee? Mr. Kildee, no. Mr. Delaney? Mr. Delaney, no. Ms. Cinema? Ms. Cinema, no. Mrs. Beatty? Mrs. Beatty, no. Mr. Heck? Mr. Heck, no. Mr. Vargas? Mr. Vargas, no. Mr. Gottheimer? Mr. Gottheimer, no. Mr. Gonzalez? Mr. Christ? Mr. Christ, no. Mr. Kewen? Mr. Kewen, no. Mr. Chairman?
Aye.
Chairman, aye.
Is there any member who has not voted? Is there any member who wishes to? How's the gentlelady from New York recorded?
She is not recorded.
Gentlelady from New York.
Mrs. Maloney, no.
Is there any other member who has not voted? Is there any member who wishes to change his or her vote? If not, the clerk will report.
Mr. Chairman, the ayes are 31 and the nays are 25.
The amendment then is agreed to. The question now occurs on agreeing to the amendment offered by the gentlelady from California, the ranking member, Ms. Waters, which a recorded vote was ordered. The clerk will call the roll.
Mr. McHenry? No. Mr. McHenry, no. Mr. King? No. Mr. King, no. Mr. Royce? Mr. Lucas? Mr. Pierce? No. Mr. Pierce, no. Mr. Posey? Mr. Posey, no. Mr. Lukemeyer? Mr. Huizenga? Mr. Huizenga, no. Mr. Duffy? Mr. Duffy, no. Mr. Stivers? Mr. Stivers, no. Mr. Holgren? Mr. Holgren, no. Mr. Ross? Mr. Ross, no. Mr. Pittenger? Mr. Pittenger, no. Mrs. Wagner? Mrs. Wagner, no. Mr. Barr? Mr. Barr, no. Mr. Rothfuss? Mr. Rothfuss, no. Mr. Messer? Mr. Messer, no. Mr. Tipton? Mr. Tipton, no. Mr. Williams? Mr. Williams, no. Mr. Poliquin? Mr. Poliquin, no. Mrs. Love? Mrs. Love, no. Mr. Hill? Mr. Hill, no. Mr. Emmer? Mr. Emmer, no. Mr. Zeldin? Mr. Zeldin, no. Mr. Trott? Mr. Trott, no. Mr. Loudermilk? Mr. Mooney? Mr. Mooney, no. Mr. MacArthur? Mr. MacArthur, no. Mr. Davidson? Mr. Davidson, no. Mr. Budd? Mr. Budd, no. Mr. Kustoff? Mr. Kustoff, no. Ms. Tenney? Ms. Tenney, no. Mr. Hollingsworth? Mr. Hollingsworth, no. Ms. Waters? Aye. Ms. Waters, aye. Mrs. Maloney? Aye. Mrs. Maloney, aye. Ms. Velasquez? Ms. Velasquez, aye. Mr. Sherman? Mr. Sherman, aye. Mr. Meeks? Mr. Meeks, aye. Mr. Capuano? Mr. Capuano, aye. Mr. Clay? Mr. Clay, aye. Mr. Lynch? Mr. Lynch, aye. Mr. Scott? Mr. Scott, aye. Mr. Green? Mr. Green, aye. Mr. Cleaver? Mr. Cleaver, aye. Ms. Moore? Ms. Moore, aye. Mr. Ellison? Mr. Ellison, aye. Mr. Perlmutter? Mr. Perlmutter, aye. Mr. Himes? Mr. Himes, aye. Mr. Foster. Mr. Foster, aye. Mr. Kildee. Mr. Kildee, aye. Mr. Delaney. Mr. Delaney, aye. Ms. Cinema. Ms. Cinema, aye. Mrs. Beatty. Mrs. Beatty, aye. Mr. Heck. Mr. Heck, aye. Mr. Vargas. Mr. Vargas, aye. Mr. Gottheimer. Mr. Gottheimer, aye. Mr. Gonzalez. Mr. Christ. Mr. Christ, aye. Mr. Kewen. Mr. Kewen, aye. Mr. Chairman.
No.
Chairman, no.
Mr. Chairman,
Gentleman from California?
I may not be recorded. How
How's
am
the
I
gentleman from California recorded?
He is not recorded.
I'm a no.
Mr. Royce, no.
Is there any other member who has not voted? Is there any member who wishes to change his or her vote? If not, the clerk will report.
Mr. Chairman, the ayes are 25 and the nays are 32.
The amendment then is not agreed to. The question now occurs on ordering the bill from the gentleman from Wisconsin reported favorably to the House. Those in favor shall signify by saying aye. Aye. All those opposed shall signify by saying nay.
No.
In the opinion of the
Mr.
chair,
Chairman.
the ayes. For what purposes, gentlemen from Wisconsin seek recognition?
I'd ask for a recorded vote.
A recorded vote has been requested. All those in favor of a recorded vote shall raise their hand and be counted. A sufficient number having raised their hand. Recorded vote is so ordered. The clerk will call the roll.
Mr. McHenry. Mr. McHenry, aye. Mr. King. Mr. King, no. Mr. Royce. Mr. Royce, aye. Mr. Lucas. Mr. Pierce. Mr. Pierce, aye. Mr. Posey. Mr. Posey, aye. Mr. Lukemeyer. Mr. Huizenga. Mr. Huizenga, aye. Mr. Duffy. Mr. Duffy, aye. Mr. Stivers. Mr. Stivers, aye. Mr. Hulkren. Mr. Hulkren, aye. Mr. Ross. Mr. Ross, aye. Mr. Pittenger. Mr. Pittenger, aye. Mrs. Wagner. Mrs. Wagner, aye. Mr. Barr. Mr. Barr, aye. Mr. Rothfuss. Mr. Rothfuss, aye. Mr. Messer. Mr. Messer, aye. Mr. Tipton. Mr. Tipton, aye. Mr. Williams. Mr. Williams, aye. Mr. Poliquin. Mr. Poliquin, aye. Mrs. Love. Mrs. Love, aye. Mr. Hill. Mr. Hill. Mr. Hill, aye. Mr. Emmer. Mr. Emmer, aye. Mr. Zeldin. Mr. Zeldin, aye. Mr. Trott. Mr. Trott, aye. Mr. Loudermilk. Mr. Mooney. Mr. Mooney, aye. Mr. MacArthur. Mr. MacArthur, aye. Mr. Davidson. Mr. Davidson, aye. Mr. Budd. Mr. Budd, aye. Mr. Kustoff. Mr. Kustoff, aye. Ms. Tenney. Ms. Tenney, aye. Mr. Hollingsworth. Mr. Hollingsworth, aye. Ms. Waters. Ms. Waters, no. Mrs. Maloney. Mrs. Maloney, no. Ms. Vasquez. Ms. Vasquez, no. Mr. Sherman. Mr. Sherman, no. Mr. Meeks. Mr. Meeks, no. Mr. Capuano. Mr. Capuano, no. Mr. Clay. Mr. Clay, no. Mr. Lynch. Mr. Lynch, no. Mr. Scott. Mr. Scott, no. Mr. Green. Mr. Green, no. Mr. Cleaver. Mr. Cleaver, no. Ms. Moore. Ms. Moore, no. Mr. Ellison. Mr. Ellison, no. Mr. Perlmutter. Mr. Perlmutter, no. Mr. Himes. Mr. Himes, no. Mr. Foster. Mr. Foster, no. Mr. Kildee. Mr. Kildee, no. Mr. Delaney. Mr. Delaney, no. Ms. Cinema. Ms. Cinema, no. Mrs. Beatty. Mrs. Beatty, no. Mr. Heck. Mr. Heck, no. Mr. Vargas. Mr. Vargas, no. Mr. Gottheimer. Mr. Gottheimer, no. Mr. Gonzalez. Mr. Christ. Mr. Christ, no. Mr. Kewen. Mr. Kewen, no. Mr. Chairman.
Aye.
Chairman, aye.
Is there any member who has not voted? Is there any member who wishes to change his or her vote? If not, the clerk will report.
Mr. Chairman, the ayes are 30 and the nays are 26.
A majority having voted in favor of the bill as amended, the bill as amended is ordered favorably reported to the House. Without objection, a motion to reconsider is laid on the table. Staff are authorized to make technical or conforming changes. Members will have 2 days to file views on the reported measure. The committee will now stand in recess until Wednesday, June 21st at 10 a.m.